70,000 rupees in tax, that is 30% of tax payable as per existing rates. A person with an income of 25 lakh gets a benefit of 1,10,000 rupees, that is 25% of his tax payable as per existing rates. Details of my tax proposals are given in the annexure. As a result of these proposals, Honorable Speaker, sir, revenue of about 1 lakh crore in direct taxes and 2,600 crores in indirect taxes will be foregone. Mr. Speaker, sir, with this, I commend the budget to this august House.
Of 25 lakh rupees will get a relief of 1.1 lakh in terms of their tax burden. So, I mean, that is essentially the announcement which the market has liked. On the macro big numbers, I'll toss to Lata in a bit, but, the 4.4% fiscal deficit target, which she said earlier, that remains. We are still, of course, waiting for the capex number for FY26, the budget estimate on capex for FY26. But she's managed to provide some relief to the income tax payer, middle class, right at the end. And I think, as you can see, the market reaction as well, there was a steep sell-off when she began, and she kept that fiscal deficit at 4.4%, dampening hopes about how much relief she can provide. But of course, towards the end, I mean, that personal income tax relief which she has provided for income of up to 12 lakh rupees exempt, I think that has provided a bit of cheer to the market as well. And the Nifty is back up a little bit, still down from where it was pre-budget, but we're down about 0.15. But I think this is a lot of taxation-related changes, both on the direct side and indirect side.
Finally,
well.
I think
we have to reserve our judgment.
Yeah.
We have to reserve our judgment because she gave us the net tax income for the government, and she said that that is going up from 25.47 trillion to 28.37 trillion, which is a rise of about 11%. So if you're cutting personal income tax and still this is up, we have to find out where
she's found the money.
There have been increases. As well, your expenditure has gone up by 7.4%. According to her, she mentioned total expenditure goes up from 47 trillion to 50.65 trillion. That's a rise of 7.4%. And you have got these tax reliefs. So is the capex budget cut? We will have to wait to see that.
She said 1 lakh crore is the tax foregone on direct taxes, and I think there was a number on indirect taxes as well.
Which I missed.
Towards the end, I think tax
she said
foregone
about tax foregone, but don't have the number. So my sense is maybe the capex budget has been
maybe
cut.
It's a little subdued.
Has been subdued.
Cut.
So it's finally a bonanza for the middle class, because after a long time, you've got big announcements coming in, and not just on personal income tax. Some of the bigger demands of the tax world, they have also been addressed. Let's start with personal income tax. Now, these are the rates that I could pick up, and we're just cross-verifying all the slabs because the entire slab structure has changed in the new income tax regime. What's the first headline? The first headline is that there is nil tax payable up to an income of 12 lakh rupees. The first slab is not starting at 12, but because of the way the slabs have been structured and the rebates, you don't have to pay any tax up to an income of 12 lakh rupees. This figure was 7 lakh rupees up until yesterday. That is, I mean, we're talking about the previous budget up until FY25. So 7 lakhs was the limit of nil tax. Now 7 moves to 12. So that's a big boost. The slab 0 to 4 lakhs, 4 to 8 lakhs, 8 to 12 lakhs, 12 to 16 lakhs, 16 to 20. There is 20 to 24. And the 30% rate now comes in only above 24 lakh rupees. So there's a sort of a big boost coming in over there, and then the rates come in 5%, 12%, 15, 20, 25. So this is what we have. We're going to cross-check some of the figures there, but this is what was first glance, first hearing. This is what came out. So this is point number one. The second thing that a lot of homeowners will absolutely like to hear is that the second house property that you have, which was subject to easier taxation only if you complied with certain very stringent provisions. Those provisions are getting relaxed. So not just one, but now 2 self-occupied house properties will get a beneficial tax treatment. They will be treated as nil value from a tax perspective. So again, this is a big boost coming in for those women who do have 2 house properties. That's the other one. The third major sort of relaxation or rationalization has come in the TCS and TDS regime,
Yes.
something which the industry was asking for many years. And one of them, which I remember because there was such a furor around this earlier, is the remittances that happen through the LRS route, where the cap was 7 lakhs. If you were remitting money above 7 lakh rupees, then a TCS had to be paid. Now that limit has been increased to 10 lakhs. So if Prashant and Lata are planning big foreign holidays with, big packaged holidays, then there is a bit of a TCS and cash flow relief comes in. But I think we have a panel of experts. Let's actually get to them.
That was anyway set off with TDS.
Yeah, but let's actually get to the tax experts. Ashok, let me ask you first. So big bang for the middle class finally?
Yeah, I'm glad at last. For years, middle class has been waiting to see whether they get real relief. And I think moving the slabs up is really very good. I'm not sure I heard it right, but my sense was that the 30% slab applies only above 30 lakhs. But I may be wrong.
Above 24.
What we heard was 24
lakhs.
24 lakh.
Yeah. So I think at least up to 25 lakhs, it's serious relief. And she was computing the numbers and giving it to us. The question that Lata asked, which is a very relevant question, is that, if you are maintaining your fiscal deficit to the levels that you had announced, and you are foregoing 1 lakh crores in direct taxes, 2,600 crores in indirect taxes, and you are showing 11% increase in your tax collection, then where is the gap? We need to see the fine print to be able to see, where is the tax collection happening. But overall, I would say, from a middle class perspective, a fantastic budget, although corporates may be a little disappointed. There wasn't much that was at least spoken from a corporate tax perspective. But again, we'll have to look at the fine print.
Yeah, actually, on indirect tax, the amount foregone is only 2,600 crores.
Said right
so
now.
it's not a great deal.
If I can just ask Mr. Kanabar. Mr. Kanabar, you've been listening keenly as well. In the direct personal taxes, of course, is the big headline. But anything else you caught on the taxation front? Lots of announcements.
Actually, quite a bit, really. And sort of, just before the budget, we spoke about ease of compliance and quite a few things. Like, for example, there was this regarding safe harbor rules being extended. And of course, nobody cheered it up in the House of Parliament because this is not a subject which people would normally understand. But that's going to be something which will ease the compliance burden of multinationals, will promote a lot of foreign investment. Similarly, tonnage tax being applied to domestic vessels. Again, something very welcome. And then a few other things. So, for example, charity, if you are recognized, rather than renew every 5 years, you would renew every 10 years. You are permitted to update your return for 4 years. Each one of them may appear to be small things, but they were really irritants. And sort of their going out is going to be something which is very welcome. I think it's quite a bit really.
Well, that's the budget Nirmala Sitharaman has delivered, saving the best for the last. As we've been pointing out, this has been the big ask, the big expectation, the big hope, and the finance minister delivering. As the Prime Minister said, the focus this time around was going to be on the Madhyam Varg, or the middle class, and that is what the tax slabs that have been introduced in the budget have taken forward. So up to 12 lakh rupees, as we've been pointing out, no income tax is payable, and of course, new introduction as far as different slabs are concerned, and the 30% kicks in above 24 lakh rupees. But it's consumption that seems to have been the focus of this budget. We're still waiting for the fine print as far as the capex number is concerned. The revised estimate comes in at 10.18 lakh crore rupees. What is the BE? We need to know, but it is consumption that the government has gone for as part of what we are seeing. Let me very quickly bring in a take there from Madhu Kela. Madhu, FMCG stocks on fire at this point in time. It's a consumption boost that was being hoped for.
Yeah. Surin, this is a big one. I think getting to 12 lakh rupees, I don't think anyone in the market was expecting this. So this is clearly a big one. And I have the capex number. It is 11.21 lakhs crores. So essentially, even the capex number are in line with what the market would have expected, from 10.2 to 11.21. And fiscal deficit, again, 4.4% next year. So I think they have met all the numbers which was guessed by the markets. I think it is on the better side only. than what market would have assumed before the budget.
Okay, so 11.21 lakh crore rupees, that's the capex number, Madhukela, that you're giving us. That's coming in from the budget fine print. So as you're saying, the expectation was, or the hope was, between 12 and 14 lakh crore rupees. The government coming back with a number of 11.21 lakh crore rupees. So it is an improvement over what was the allocation last time around. Remember, 11.11 lakh crore rupees, so a slight improvement there, but an improvement over the RE. Disinvestment and monetization target has been kept at 47,000 crores for FY26. FY25 RE at 33,000 crores from 50,000 crores in B. Again, along expected lines, we've seen this happen on the disinvestment front time and time again, and that's what seems to have happened even as far as this year's budget is concerned. 11.2 lakh crores is the capex number. Very quickly, let me bring in our guest, Zia Modi. A quick take, the big headlines for you from Budget 2025.
Thank you. I think from my perspective, the now formalization of the insurance FDI to 100% is good news. What is even better news is the finance minister's commitment to revamp the KYC norms in 2025, which has caused a lot of pain in the ease of doing business. I think that the IBC, I was looking forward to some announcements on pre-packs or cross-border IBC situations. Maybe that will come later, but that is very important because that law has clearly brought down our NPAs. The enhancement of the judiciary, the dropping of government taking cases to court. Government today is our biggest litigator. Maybe there will be something in the fine print to show that unnecessary litigation can be cut down, especially since the FM has said she's digitizing faceless assessments, etc. I think that the one thing that stands out, which I'm hoping to see some movement from the government, is a liberalization of Press Note 3, which is the bordering countries, which has had a lot of unintended effects and slowed down FDI from private equity. But all in all, I think the message of getting out of the way, to stop micromanaging, to listen to the industry and to allow the theory of being honest unless you are proved dishonest are all very, very positive messages.
Yes, positive messages. And speaking of positive messages, we're still going over the internals now, because remember, as the finance minister was pointing out, a lot of the details there in the annexure, not in the speech. More good news, the tax deduction limit for senior citizens has doubled from 50,000 rupees to 1 lakh rupees. So more sweeteners there coming in. The tax deduction limit for senior citizens has been doubled from 50,000 rupees to 1 lakh rupees. We will have to wait to see under whether that's under Section 80D, but we'll get to that. Let me bring in our other guests as well. We've got plenty with us here. Before I get back, Madhu, a quick take on the markets from where we are before we get the other voices in.
Yeah. So, I think from a market perspective, I would like to mention one thing. There is a lot of emphasis on ease of doing business, decriminalization of laws, and making things really, really simple. Apart from increasing the personal taxes in slab. One more thing, she spoke about the introduction of new income tax bill, which is to be tabled next week, and which will basically deregulate a lot of things. So this will be perceived very, very positively, and it's a basically continuation of the good effort. From a market perspective, shouldn't we are back to back to basics? I think this will be a range-bound market this year, and this will be stock pickers market. So if you can really take advantage of all this volatility which is there and pick up good companies, that's where money will be made.
I mean, absolutely. By the way, as you said, the volatility is back, right? We were up, we recovered after that personal income tax announcement. We're down about 50-60 points on the Nifty once again. Prashant Khemka is with us as well. Prashant, do you think this will, by the way, the Nifty FMCG index is up some 3%, Maruti is up 6%. more money in the hands of the middle class? Where will they spend it, in your assessment? And as a money manager, what looks best placed?
See, I think overall it is positive for the market. As Madhu just pointed out, the most important thing to me is that there's a genuine intent and effort. It comes through very clearly to increase the ease of doing business. So it's directionally very positive. There's no material negative. I usually, when I'm sitting and hearing the budget, I keep tab of the positive snippets and negative, and there are hardly any on the negative side. Whereas on the ease of doing business, the underlying spirit of the budget is to simplify rather than to complicate things, which is often the problem with budgetary speeches. So be it 100% FDI in insurance, simplifying TCS, TDS, or decriminalizing additional 100 laws, safe harbor rules, as mentioned earlier by Mr. Kanabar, I believe. So a lot of the, obviously, fine print needs to be still seen, but all sounds very positive. And most importantly, the finance minister mentioned the new income tax bill, which is scheduled for next week, would be, in her words, it would be clear, simple to understand, and provide tax clarity. That would be a big boost to overall business environment, and that can only be positive for job creation as well as for the markets, broader market. So if there is additional savings in the pockets of middle class, I think the market, rather than selecting a particular sector, I think it should be positive for the broader Indian market.
Okay, gentlemen, I just want to come to a couple of additional announcements that we haven't heard so far. They're all from the budget documents, and these are perhaps going to be very welcome by the financial services sector, and I'll get to the experts in just a bit. For GIFT City, there is a boost. It is proposed that transfer of share of unit or interest held by a shareholder in the original fund in consideration for the share or unit or interest in a resultant fund on relocation shall not be regarded as a transfer for the purpose of calculating capital gains. There was an ask that if a fund or a structure is relocating from a foreign destination to IFSC GIFT City, then give it some tax relief from the point of view of capital gains, and that seems to have come through. And one more, the extension of the date for sovereign wealth funds that are investing in the India infrastructure sector. There was a sunset, but now look at the extension. Instead of March 2025, they have extended it all the way to 31st of March 2030 to attract long-term capital in the infrastructure sector, perhaps. So if I could go back to the panel, Mr. Kanabar, your thoughts on some of these internals that are arising from the next years?
Both of them very, very welcome. This was something, a very, very specific ask.
Yeah.
Clearly, investment into infrastructure is something which is long gestation. There is no point in tinkering it year on year on year, and giving it a 5-year thing is something which is very much welcome. Similarly, the proposition is that if there are funds with investments in India and they are relocating into the GIFT City, then there should not be a tax implication. Again, that has been accepted. Both very, very welcome. Similarly, there is this whole provision that if your transfer pricing is accepted, it is accepted for a block of 3 years. Again, will make not a lot of non-residents relook at India and come back to say the transfer pricing litigation will come down. All very, very welcome.
Okay. No, that's good to hear. Actually, I have some problem perhaps with the confidence. Corporate tax growth, according to the BE for the current year, works out to 7.5% higher. For next year, the estimate is that it will rise by 10.5%. So we keep our fingers crossed over there. One expects that corporate sector has to do better, but obviously that is the estimation. But otherwise, the estimations are very modest. For instance, income tax this year, it is up by 22% as of December, for which we have data. They have estimated only 20% higher for the full year. But for next year, the estimate is only 14.4. Clearly because tax rates have come down. So the estimates seem modest when it comes to income tax. Corporate income tax, I hope we deliver on that 10.5. But I think within this, in spite of not assuming very aggressively, they have been able to give a capex of up by about 10%. So that's very good. Yeah. Prashant, can you tell me why the market is sulking? It's got its tax cuts. It's got nothing negative in terms of capital gains. But actually, there's red on the screen. Bank Nifty is down about 0.5%, 0.6. Anything that's niggling the markets at all? Prashant, and then I'll come to Madhukela on that.
See, hard to say with markets 0.5% here or there, but if it was me, I would read this as a positive, and I would think if I had not seen the market ticker, I would have expected the market to be positive today by a percentage point at least, because the absence of any negative itself is a big positive. And then, as we were talking earlier, there are a lot of, absent the fine print, still a lot of directionally very positive announcements. The 100% to FDI, 74 to 100%. In and of itself, none of these measures may be big enough to have a positive impact. But when you view them collectively, it shows the direction in which the government wants to take it.
Actually, it's I think the defense stocks and the railway stocks that are going down, because I guess something specific was expected on defense. But otherwise, FMCG stocks, consumption stocks, all the trends, the Britannias, the auto stocks, Bajaj Auto, all of them are up and about. Maruti Suzuki's numbers also have been good for December. Mr. Dinesh Khara is also with us, former chairman of State Bank of India. Mr. Khara, the borrowing has been kept almost as expected. It's about 14.8 trillion. I think the market expectation was 14.5. But the fiscal deficit is lower than expected at 4.4%. What do you think you can expect? Rate cuts now, good times for banks?
I think it may or may not have any impact on the rate cut, but just it certainly reflects that what is the government thinking. And so long as fiscal is kept within check, certainly it is an indication that inflation will also remain under check. That is what I would like to add. And also I would like to mention, when it comes to various sectors, particularly what is talked about in terms of the income tax, personal income tax, it is going to spare a lot of liquidity with the middle class, which will certainly spend. Likewise, when it comes to agriculture also, the KCC limit has been increased. Similarly, when it comes to MSME also, they have increased the guarantee cover. And similarly for the exports. So I think these are some of the sectors which are eventually going to have the mainstay when it comes to the economy.
Right.
So I think on these very parameters, it really augurs very well when it comes to the economy overall. And the kind of challenges which we faced in the last quarter numbers, they are very well being addressed through this budget.
Got it.
The point taken about MSMEs, I think what the chairman is pointing out is very well taken.
Sajid is with us as well. He was with us right before the budget speech started. Sajid, what did you make of the big macro numbers? All in line?
Very much in line, right? This is following the rhyme and rhythm of previous budgets. I think conservatism is the needed was the buzzword here. The deficit numbers very similar to what we thought. 4.8 goes to 4.4. Nominal GDP assumed quite conservatively at 10.1%, though this year is below 10. And the question was, and we had also said that capex to GDP would remain in line with what is achieved this year, and that's panned out as well. Capex is rising in line with nominal GDP. I guess the question was always, where was the consolidation going to be achieved? Would it be on the revenue side or the expenditure side? It's largely on the expenditure side, and it's happening on non-capex expenditure. So there's some expenditure restraint on revenue expenditures. The other one point to keep in mind is on tax buoyancy. Once you adjust for the foregone revenues from the tax cuts, the budget essentially is assuming a tax buoyancy of 1.3. Okay. Now, this year we got about 1.1. So we'll wait to see if that's achieved. But I think no major surprises as far as the big fiscal math is concerned.
The GTR, gross tax revenue, is assumed to rise by 10.8%. And nominal GDP by 10.1%. So it doesn't look like it's...
No, because Lata, you have to adjust for the foregone tax revenue, which is 1 lakh crore from the tax cuts.
Yeah.
So when you adjust for the foregone revenue, then what you're assuming is the effective growth in gross taxes is 13% in a nominal GDP of 10.1.
Okay. Well, we have Anish Shah also with us. Mr. Shah, what have you made? The auto stocks are up and about.
One is a demand stimulus that was much needed and very well delivered. Second, a focus on making India the manufacturing hub of the world. The focus on ease of doing business, on enabling capital goods to be imported at lower rates, and importantly, addressing the duty inversion that we've seen. These are all things that will help make in India in a much more significant way. And the third is inclusive development, which is also something that is important for us as an economy. So on balance, a very good budget. The capex from a government standpoint stays on course, which is something that we ideally would have liked. And the fiscal discipline stays on course as well.
Well, that's right. The fiscal discipline stays on course. Capex, along what clearly what the economic survey as well as the CA were highlighting would be the trend as far as capex was concerned. But then you can't have capex and the consumption boost at the same time. So the expectation of doing 20-25% on capex and then also providing income tax relief, which has been the big focus of this budget, can the two be reconciled together is the big question. So the government this time around has prioritized consumption and relief for the middle class. And if you just bring up all of those stocks, FMCG stocks at this point in time, the new age stocks, Zomato and Swiggy and all of the others, and Mangalam is standing by with a rundown of everything that's moving. That side of the market clearly is firing at this point. But let me bring back our budget editors into the conversation as well, Atanu Chakrabarti and Ratin Roy. Mr. Chakrabarti, to you first. As far as the big numbers were concerned, pretty much steady as you go.
Yes, very much in a sense that the borrowing numbers satisfy the requirement of I was looking in containment, they have actually gone in for reduction. So even if numbers don't hold at the end of the year, still the borrowing numbers, the gross borrowing numbers are lower than last year, assuming a fiscal deficit at 4.4%.
Yeah.
RE is at 4.8%. So a good glide path there. Consumption, Philip, given through, as you just mentioned.
Were you expecting them to go as far as they have? Or has it surprised you on the positive side?
Frankly, no. I am pleasantly surprised and very happy about it that the fiscal reduction, debt reduction is, because that opens up the credit growth for the industry in general, which has been sort of accounted for in a lot of expenditure proposals. They're depending upon bankable schemes.
Right.
So unless you open up that space and crowd out, you are not going to get that. So there is, I can see a design in the entire thing, that fiscal reduction, which was important, and that builds upon a lot of bankable schemes that have come.
So Ratin Roy, they have delivered on the 3 C's that we were talking about. Capex, you can argue about whether they could have done more, but more importantly on consumption, they've clearly delivered more than what the market or even the consumer was hoping for. And even on consolidation, they've stuck to the glide path.
Yeah, well, I was not expecting them to not stick to the glide path. I was not at all sure whether the government would engage in yet another round of wishful thinking. Quite frankly, I think the execution capabilities of this government, as far as capex is concerned, has hit its limits at 11 to 12 lakh crores. Now, the point is to try and promote capex in the private sector, where the real execution capability is. Looks like this is what the government has in mind.
Yeah.
But I'd like to puncture one balloon. Everyone here that's come on your program so far, me included, is in the top tax bracket. And everyone who pays tax in India is in the very rich part of the population. It is facile to call them middle class. So what has happened is, at the cost of 1 lakh crores to the exchequer, which is a small price to pay, is a major increase in the regressivity of our income tax system. Till yesterday, you had to earn 3.5 times the per capita income to start paying income tax. You will now have to earn 6 times the per capita income, 6 times the per capita income to start paying income tax. So by no stretch of the imagination can we say that these people who begin to pay income tax at 6 times the per capita income belong to anything other than the top 5 or 10% of the population. So that regressivity has come at what cost? Well, it has come at, the tax system has become more regressive because if you look at the indirect tax burden, it's the same. So you have the progressive part of the tax system, which is direct taxes, is now nicer to the rich people. The indirect taxes, where the burden is shared between rich and poor, remains high. And therefore, what ends up is the proportion of taxes relatively poor people who don't pay income taxes but do pay indirect taxes is now greater. So this is, in that sense, on the tax side, a regressive budget. It will increase consumption of you and me. It is going to do nothing, absolutely nothing, for consumption of the Aam Aadmi.
Okay, well, we'll have to wait to see, but the market reaction at this point in time is 2 thumbs up. Manglam, very quickly, run us through what's happening on that side.
Well, you know, it is a consumption budget, Shireen. Tell you, no income tax payable up to 12 lakh rupees, income of, you know, up to 18 lakh rupees, saving 70,000 rupees, and income of up to 25 lakh rupees will save over 1.1 lakh in taxes. What does this do? A shot in the arm for all the urban consumption names. So we have, you know, names like Jubilant Foodworks, Zomato, Trent, D-Mart, the ones who have a higher propensity of revenue coming in from the urban centers doing extremely well. No tinkering on taxes for you know, all the sin goods. Those stocks also doing extremely well, and some support coming into rural and agri names has a you know, positive impact on larger FMCG names as well. The FMCG index had been underperforming. The street was hoping for some sort of shot in the arm coming in from the budget to consumption. The government has gone ahead and made its 2 steps. Now the rest remains on the FMCG industry to go ahead and deliver those growth numbers. Most of these stocks are actually trading very close to their 10-year averages as well. So from a valuation standpoint as well, this budget has a trifecta of all positive news coming in from the consumption sector. And we're seeing that in names like Jubilant Food, Trent, ITC, all of them being among the top gainers in today's trading session.
They certainly are, but let me go back to Anisha before I let him go. Anisha, you know, in what way does what has been delivered today change the needle? Do you believe, as far as private investment is concerned, that's been the big hope and the big ask in terms of consumption as well? And also from a manufacturing standpoint, the measures announced by the budget, including on the customs side, on each of these 3-pronged areas, how does the needle move post the budget?
I think it just accelerates our pace, Shireen, because the fundamentals have been very strong in the economy. We've seen short-term blip from a demand standpoint. With the consumption incentives given here, hopefully that is addressed. The more important thing is to ensure that we can manufacture in India at a much lower cost than the rest of the world. And that will allow the economy to grow at a much faster pace. And a number of measures taken here are steps in the right direction to make that happen.
Okay, got that point, Anish. By the way, I just want to point out, trying to go through more and more of the annexures. So while the budget speech spoke about the reduction in TDS thresholds for certain segments, for instance, the LRS limit 7 going to 10 lakhs, there is an increase in TDS rates or the thresholds for a whole range of payments. Dividends for an individual shareholder, income in respect of a mutual fund from a specified company undertaking, winnings from lottery, crossword puzzle, winnings from horse races. So there are several cases where the thresholds have been increased. So that's what we have at this point in time. I just want to go back to the panel here and, Sunil, if I could come to you, what is the big picture takeaway? The headline clearly seems to be that the middle class has finally gotten the relief. But one ask, at least I have not found even in the fine print so far, which is corporate India was asking that new manufacturing companies should be given more relief, that concessional income tax rate of 15% should be brought back, if not 15-18%. But as of now, we've not seen evidence of that in the speech or in the documents. Your overall take on what this will mean once we go beyond the personal income tax bonanza?
So thank you for having me. So I think, Surbi, a lot of eyeballs and discussions is obviously pertaining to the income tax relief, and rightly so. The government has given 1 lakh crore in the hands of crores of Indians, and that is a welcome step because I think the economy was suffering from low consumption, a combination of obviously maybe less disposable income as well as tight liquidity situations. So the liquidity situation was eased off a little bit 3-4 days back when the central bank pumped in 1.5 lakh crore, and now this 1 lakh crore additional also has the potential of at least kickstarting a little bit of a temporary blip in consumption. Having said that, I think capital expenditure, which was slated to be 11 lakh crores, the government has not been able to spend the entire amount, maybe because of inflation, everything got deferred. And to that extent, the kickstart as far as capex is concerned has got deferred a little bit. Luckily for next year, we are again looking at a 10% growth on this lower 10 lakh number. And I think that is something which is very interesting and is very, very needed. As far as your comments are concerned, I think a lot of announcements were made in terms of, pushing manufacturing in India, particularly, industries where it's more smaller industries, SMEs, with a lot of imports, a lot of manpower required, like textiles or leather or toys and so on and so forth. So I think the intent is very clear that we need to make India a powerhouse in terms of manufacturing also. We still have to see the fine print, but on the face of it, obviously this 15% has not been revised. But on the infra side, I think there has been a 5-year extension in terms of fresh investment, which will be
the sovereign wealth funds.
Its benefit. So I think it's a good balance. I think overall, it's a very balanced budget. I wouldn't say it's like a superlative growth focused budget, but this 1 lakh crore of added income in the hands of crores of Indians, I think that's a key positive.
Yeah, absolutely. And I just want to add to that the annexures show a whole range of announcements to make GIFT City more attractive. Again, that's a stated roadmap to try and get in more longer-term capital through that route. In fact, let me answer, and one more point we should keep in mind on crypto, by the way, there is a clear reporting framework that has been announced. It says there is a proposal to bring an amendment in the Act for this new reporting framework for all regulated entities, which would be crypto exchanges. They have to give information on digital virtual assets in a specified format as the government asks for it. So that's one. But comment on this point, if I could throw this to Ashok and maybe to Dinesh as well. Ashok, coming to you first. While, visibly we don't have that headline on 15% tax for new manufacturing companies, I don't know if you had a chance to go through some of the GIFT City provisions or the other provisions, sovereign wealth funds we've spoken about. Do you find anything else there that could excite longer-term investors looking at India?
I'm actually just looking at the fine print. It's just been delivered to me. And there does not seem to be anything which is specific. I mean, obviously, we've all spoken about the infrastructure. We've all spoken about the one question that's still unclear is that if a domestic fund, in other words, if a fund from India was to relocate to the GIFT City versus a global fund being relocated to GIFT City, whether the relocation from India to GIFT City also triggers the same benefit or not. That's not been clarified in my view. Where there's clarity about global funds being relocated to GIFT City, there is clarity.
Yeah.
I haven't been able to pick up whether, if for example, a normal fund, an AIF was to decide to relocate to GIFT City, whether that capital gains would be exempted or not. I haven't got that done. But there is language around parity on long-term capital gains on transfer of securities between residents and non-residents. And there was some lack of parity when changes were made last year, both in terms of property as well as, of course, in securities. And I think they seem to have brought that parity back. That certainly seems to have been provided as a clarification. But over to Dinesh for that.
I just wanted to come in with some of the sectoral outlays, guys, and maybe we should just bring up these numbers for the benefit of all of our viewers. The defense sector outlay has seen a reduction at 4.91 lakh crore rupees. The budget has allocated 4.9 lakh rupees for the defense ministry. That's down from 6.2 lakh crores in the July 2024 budget. So that's as far as the defense allocation is concerned. At 4.9 lakh rupees for defense, down from 6.2 lakh crores in the July 2024 budget. Rural development, an outlay of 2.6 lakh crore rupees. Agriculture, 1.7 lakh crores. Education, 1.28 lakh crore rupees. Health, 98,311 crores. Urban development, 96,777 crores. IT and telecom, 95,298 crores. We'd have to also see whether there is an enhancement or a reduction across, but defense, there is clearly a curtailment as far as the outlay is concerned at 4.91 lakh crore rupees versus the 6.2 lakh crores. You wanted to come in, Ratin?
No, I just wanted to say that one good thing in this suit boot budget, which should help all the suit boots who are celebrating this so-called middle-class tax cut, is a very promising announcement the finance minister made, that she's going to cut the tax code in half. That's been long overdue, long overdue. And much as I might be, sad at the celebration that's going on about this, people earning 6 times the per capita income getting a tax break, lowering the tax code bill, I think, should incentivize the growth in taxation. I also want to caution about the numbers for next year. The implicit buoyancy of 1.3, 1.4 that is implied in this budget is very rarely achieved by government, especially at a time when growth is tanking. So this particular cut, although the absolute amount is only 1 lakh crores, might actually put pressure on government outlays. On defense, I want to say, I think the government has been very realistic. They are unable to spend on defense. So there's no point allocating money for defense when you can't spend any money. And I think the government has done quite the right thing to make it more realistic for next year, because they have a good idea about how they're going to be able to allocate money to defense next year. So all in all, I think on the expenditure side, the budget has been prudent, and therefore you're seeing more modest outlays, because the execution capability of the government is limited. And it is for that reason, and not because of the tax cuts, that the expenditure side looks, moderate.
Fair point, and that's an interesting and important point that you make as far as the defense sector allocation is concerned. Mr. Chakrabarti, you've been going over the fine print. Anything there, and especially as far as the housing sector, etc., is concerned, cement, steel, what do you believe that the budget does in terms of infrastructure, housing specifically?
Three things. For defense first, I guess we need to, because these are reasonably finely balanced. So perhaps we have to see between the revenue allocation, because revenue was about 3 lakh crores, balance about, so it was about 4 point odd something.
Right.
So I'm a bit surprised when we say 6, because there are some other allocation for roads, etc., which keep changing. So I guess a fine print needs to be seen. This is unlikely. There's not much of a scope for cutting, because almost 75% of the capital acquisition in any case is domestic.
Correct.
So therefore, the numbers are reasonably well known. So that's one particular thing I'm happy about is about IFSC, which we just discussed.
The gift city,
A, income tax, B, getting AIFs in. Because if you see, the corporate tax is at 9.8% growth, less than 10.8% envisaged, 9.8 lakh crore, about 40,000 crore less than what was envisaged at B stage. It has not really kept up pace. So the only disruptors in the economy are going to be the startups and GCCs, where there's a lot of private equity movement, which could happen only through IFSC. To that extent, one again has to see the fine print of regulation and everything, but at least a correct direction on the things to come.
Correct direction, and of course, as we've been pointing out, we are poring over the fine print at this point in time, because the speech did not focus on the details which are available in the annexures. But let me toss it back to you in Bombay.
Shireen, thanks very much for that. I'm just looking at the market, and I don't want to sort of put everything which is happening on the budget. I mean, after all, it's for Saturday as well. So we must keep that in mind. But FMCG, of course, the index is up almost 4% now. So if anything, it's picked up a little bit more steam. And the auto space is up about 2% as well. On the other side, defense, as you said, Shireen, in terms of allocation, sharp deceleration, right? The index is now, there's a nifty defense index, it's down 3%. And the PSC, CPSC, a couple of these government company indices, oil and gas, they're all down between 2 and 3% at this point. The metals index is down about 1.8% as well. And IT as an index is down about 1.5% as well. I just want to go back to Sunil for a bit. Sunil, with this sort of 1 lakh crore boost to the, the taxpayers, as an investor, does it make you any more bullish directionally to look at that area? There is on this Friday, we'll have something from the RBI as well, maybe a rate cut.
So I think, Prashant, last 1.5 years, consumption generally has been pretty slow. Combination of maybe a little bit of inflation, maybe a little bit of fatigue post the huge boom we saw in the consumption post COVID and so on and so forth. I think a little bit of liquidity squeeze also from NBFCs and banks in particular post the regulator directing them. So I think all this is getting sorted to some extent. On the fundamental side, we have had good monsoon season, good crops. I think crop prices are good. So the rural income should be pretty handsome or should see a pretty handsome growth. You had RBI, which infused 1.5 lakh crore only a few days back. So liquidity has been to some extent taken care of. And now we have this huge boost of 1 lakh crore flowing into the hands of Indian consumers. So I think at the margin, obviously, yes, there will be some move up as far as consumption is concerned. However, what is happening on the consumption stocks is a combination of a lot of things. One is they have never been cheap. They are not cheap. So there's a valuation headwind. Second, there are a slew of new products coming in, and particularly with this advent of digital economy and D2C brands and so on and so forth. To some extent, there's been a cannibalization, even in terms of existing players losing some market share. So I would say that at the margin, this is positive, but this is not something which would lead, an investor to double or triple the weightage as far as consumption is concerned. Maybe, a slight tweak. But for the economy, I would say it's a bigger boost because the economy needs consumption as well as capex to move back to that 6.5–7% nominal and real and 10% nominal growth rate. Rate cut, I'm not sure whether it's going to happen very soon. But the good thing is the path to fiscal prudence is maintained. And to that extent, the environment as far as interest rates in India is concerned is pretty, on the downside, which is refreshing compared to what is happening in the world.
Okay. Well, point taken on the consumption boost. And I also take Ratin Roy's point that, that also means that there is that much less in terms of welfare expenditure. You cannot take away from the fact that we have a very large number of people who are not earning even 6 lakhs, forget 12 lakhs a year. But Mr. Dinesh Khanna, to come back to the fact that there is more money in the hands of those who would take retail loans. 12 lakh rupees is the minimum income tax limit now. Does this mean that banks can now have more of a retail loan, or do you see the capex baton being picked up at all by private sector, given what the budget has said?
No, I think there is a very clear focus when it comes to the infrastructure investment, and also they have brought in the PPP concept also. So I think part of the infrastructure also, they have also indicated that even state government are expected to join them in this PPP investment for the infrastructure. So I think infrastructure boost will certainly be seen. And when it comes to the retail borrowing, maybe, there are, of course, when it comes to the consumer unsecured borrowing, that is expected to remain expensive. But nevertheless, I think as far as home loan, etc. are concerned, there will be enough disposable income to support the EMI. I expect that even that sector will get a boost with this kind of a income tax relief which is seen. And also I would like to mention that, now the startup also, they have increased the guarantee scheme for startup as well. So I think to that extent, they are addressing all the very critical components which are required to be addressed for giving the required push to the economy.
All right, got that point, Mr. Khara. Just going back to Dinesh. Dinesh, earlier, I asked that question to Ashok as well. Let me take that to you now. Whether there is anything further that you've picked up in the annexures, in the fine print. There are lots and lots of announcements on gift. One, we discussed, but like Ashok was saying, that there still needs to be clarity whether there is a domestic relocation from, anywhere in India to gift, whether that also gets a capital gains exemption. Anything else which could boost investments and flows?
Lots and lots of things. So far as GIFT City is concerned, income arising by way of ship leasing is specifically exempt now. ETFs have been brought under the ambit of what can be done in the GIFT City. One very welcome thing which one has seen this time is that most of the extensions are for a period of 5 years rather than 1 year, which you see at a time. So for example, the income of a startup is exempt for a further period of 5 years straight away. So up to 30 or whatever startups are there, 5 years exempt, which is again a very, very welcome thing. One very interesting change, and the finance minister did mention this in her speech, but I didn't pick it up at that point of time. There is this concept under Income Tax Act that if a foreign company has a significant economic presence in India, then it is liable to tax in India. This, of course, applies where there is no tax treaty. And the question is that if the significant economic presence is only for the limited purpose of export, would there be a tax liability? And that has been clarified, and that should provide a relief to several people, because that was something which was acting as a barrier to exports. So again, very, very welcome. So quite a few clarifications out there.
All right, Mr. Kanabar, we'll come back to you, sir. Let me bring in Amitabh Kant. He joins us now. Mr. Kant, always a pleasure. Many thanks for joining us here on CNBC TV 18. She saved the best for last. It is a budget that's delivered on the hope of boosting consumption, on delivering for the middle class, and that was the promise that the Prime Minister had made. On balance, Mr. Kant, your big read, your big takeaways from Budget 2025.
So, Shireen, first and foremost, I'd say that the main attempt has been to give a fillip to demand and put more money in the hands of the consumers. That should give it a big push. But it has been done in a fiscally responsible manner. She's also looked at the macroeconomic stability of the economy, because 4.8% fiscal deficit in the RE and aiming at about 4.4% for the coming year. Also, I think if you look at the budget, there's a huge focus on labor-intensive sectors. The first time I've seen so much of emphasis on tourism, on textile, on footwear. So labor-intensive sectors, there's been a focus, but I was particularly glad that the startup fund of funds has been replenished by another 10,000. This will have a huge multiplier impact, because there'll be a risk sharing with the venture capital funds. And also this putting another 20,000 crores for innovation, and saying that there'll be a separate fund for deep tech areas, which requires patient capital. So that should be a big push to the startup and the deep tech movement in India, which is job creating in many ways. And I would also say that two good things that have happened in the budget is that, I'm a great believer in free enterprise and private sector. The focus of taking asset monetization forward from 6 lakh crore between 21 to 24, now to 10 lakh crore. And that means asking government departments that put out your assets for monetization, and private sector to come in and do better operation and maintenance. And secondly, to ask every ministry, prepare a pipeline for PPP projects for the next 3 years, because the government departments were getting very comfortable by owning and managing infrastructure, and that was causing great inefficiency in the economy. So putting all these out and bringing in greater thrust to PPP will be a very good thing. The total allocation for infrastructure on CapEx has been kept at about 11.2 lakh crores, which is a little higher than the previous time. But infrastructure, greater thrust on execution and implementation of infrastructure projects is very, very critical. I would have felt that there should have been a much greater, even a greater emphasis on infrastructure, because infrastructure boost gives a long-term impact. And lastly, I feel that there is a clear realization in government that several departments and regulatory bodies have caused a regulatory cholesterol, and they need to scrap rules, regulation, procedures, and acts all over. A huge amount of scrapping of laws, etc., needs to take place. And rightly, the finance minister has talked about laying a huge emphasis on ease of doing business and creating a committee which will come out within 1 year, a report. I think it should be much quicker, much faster, because at the state level, a whole range of deregulation is necessary and is required. And this, to my mind, is very critical. And I also feel that this emphasis on clean tech mission is very important, because today, if you look at it, solar, we are importing 80%. EVs, batteries, we are importing about 75 to 80%. All these things require an approach of Make in India in a very big way. And so overall, I rate the budget as giving a major push to demand creation in the Indian economy, and a very macroeconomic stability is really the focus, despite this big giveaway of 1 lakh crore.
Yes, it is a big giveaway in terms of the revenue foregone for what the finance minister has delivered as far as direct taxes are concerned. But Mr. Kant, this regulatory cholesterol that you spoke of, and of course, a lot of what was announced in the budget will be work in progress. As you pointed out, a committee will now look at these areas of deregulation and so on and so forth and come back within a year's time. But on the infrastructure side, because you said that you would have hoped for the government to do more. At 11.21 lakh crore rupees, the capex, do you believe that that is enough? Do you believe more should have been done?
Yeah, but the intention, again, Shireen, is that you have better quality of infrastructure creation with 11.2 lakh crores, but you also push out a lot of government assets for private sector management through the asset monetization pipeline, which has done well. They were able to achieve the 6 lakh crore and now to target for 10 lakh crore. And also say that we are going to have more and more of PPP, because in the last 7-8 years, there's been a slowdown on the public partnership projects, and that requires you to do a lot of homework in terms of land, your ability to get all clearance and then put them out for bidding. So you need, every ministry has been asked to do this in the next 3 years. That, to my mind, is very important. It's a clear message that the government believes in private sector and it believes in private sector management of infrastructure creation. That's important. I really feel that the next bid round is the fiscal bid has been done, and the next bid is to allow, in the monetary policy, to allow greater credit to flow, because I'm a great believer that the private credit to GDP ratio in India is still low at about 50%. That needs to increase, and the RBI needs to pick up the baton and allow greater credit to flow to India's budget.
Right. Okay. Shireen, I just want to quickly make a mention on what's happening to insurance names, and they're all up on your screen right now. HDFC Life is down. These are big moves. 6.5%, 6% on HDFC Life. Max Financial is down 4%. ICICI Pru is now down 7%. And you can look at something like a SBI Life, which is down about 6.5%. It's not something which has been done for insurance, or there's no negative per se for insurance as a space. It's not directed at insurance. It's just that the new tax regime has been incentivized heavily in a big way, and this will make, the no tax up to 12 lakhs will make a lot of people think to move. The thing is, under the old tax regime, under the sort of 80C benefits, etc., insurance gets a fair bit of relief, tax reductions, and if people move from the old to the new, I think that essentially is the reason why these insurance companies are selling off. I saw estimates ranging from about 5 to 7% of individual new business premiums on account of this 80C benefit. So it's not that large also, but in the margin, it's certainly negative. I think Yash is with us for a quick take. Yash, over to you.
Well, Prashant, I want to explain two things. One is, of course, the obvious question that if the government is going ahead and increasing FDI to 100%, why are life insurance companies or insurance stocks reacting negatively? Let me clarify that first. FDI going to 100% has no impact on the listed companies, because what comes in the way there is the minimum public shareholding norms, where the promoter can only have 25%, 75% have to be in public. So, of course, FDI of 100% does not matter at all as far as the listed life insurance companies are concerned. So, there is no positive coming out of there for the listed life insurance stocks. Then why are they down today? That's exactly what you were also alluding to. Government's move to sweeten the new tax regime. Now, of course, as per the new tax regime, if an individual plans to take exemptions, which the government plans to introduce under the new tax regime, then there won't be any tax payable up to 12.75 lakh. Now, what that creates the fear is that more and more people, if the new tax regime becomes beneficial to them, will look to move towards new tax regime. And what that does is that it defeats the purpose of buying life insurance or health insurance for the intention of saving taxes under 80C as well as under 80D. You spoke about the estimates, about 5 to 7% of the life insurance premium still comes for the intention of tax saving under ATC, and that is the impact which might get impacted for life insurance companies as well as on the ATD side for health insurance companies if people indeed find the new tax regime more beneficial, more attractive, and start moving there. And that's exactly the fear which is rattling the life insurance stocks particularly today.
Yash, I just want to make one, you said FDI is not negative. It wanted people, biggies come in with 100%, won't that raise competition?
So, Prashant, it is positive for the sector because, of course, a lot of foreign capital, a lot of capacity with that would come.
No, I'm saying from if you're already an incumbent large player, it raises competition, right, at the end of the day?
Correct. It will increase competition, but, I mean, with a penetration of 3%, insurance density of just $92, much lower than developed economies. I mean, it's a large pie for all players to go there and acquire. So that's not a very big concern.
Point taken. So they're not falling because of competition. They're falling because the tax stop
the
given.
stock move is basically this thing.
Because the tax stop may not work anymore in their
my
favor.
only point is that FDI thing is also not positive. I mean, if you're from a competition perspective, at the margin, 3% penetration, but the point is it's a small pie expected to go up, but right now it's 3%. So,
Absolutely.
But also
in which there will be foreign competition. But actually, the nature of the stocks that are in the red today clearly indicate those dependent on public spending are the ones that are falling.
Absolutely.
So if you look at the names, RVNL, IRCON, BEL, I mean defense budget cut down, JSW Energy, IRFC, all these are,
everything infra, defense, oil and gas, PSU, CPSE, everything is coming off. Energy, so that's the pack.
Because that big capex push has not come through, and some of these stocks, by the way, had recovered from the recent bruising fall. They'd all started rallying in the run-up to the budget. So positioning was for a much bigger capex announcement, which
maybe that the market is overestimating or overreacting to this. Because if you look at the revised budget, actually capex has gone up by 10%. Because they've brought it down from 11.11
from RE to B, it's gone up. From B to B, it's
so if you look at it from RE to RE, the expansion last year also was only 10%, and this year also is 10%.
Which is what the economists have been saying, that in line with the nominal GDP growth, but perhaps the market was expecting for a bigger number.
Nimish is pointing out that Dixon is down 6-7%. It is indeed down. It was down 10%. It's down 7.5%. We had the Dixon management with us earlier in the morning, and we were talking to him about the PLI. There is, of course, electronics component PLI, which is a new thing, 25,000 crore allocation, which was expected. Maybe it'll come out of the outside of the budget. We don't know. But he was also saying that the earlier PLI, which finishes in FY26, maybe there is the mobile PLI, basically, of which Dixon is a beneficiary. Maybe there's some extension, etc. Which I don't think that was really an expectation built into the price. It was something I think we asked him, so he said, well, we need it. But it's a big reaction, and there are many listed other players as well. We should just sort of run through those names: Keynes and Amber and so many others, right? I mean, Sirma, PG Electroplast, and we'll put all those names up for our viewers.
They're mostly down. Sirma is down about 2%. Keynes is down 0.5%. Not too much, but the price damage on Dixon is the highest at this point in time. Perhaps the stock market also didn't pay too much attention to what the CEA was saying, and then our team was flashing this even yesterday. The commentary that came through. The indication this time actually was there in the economic survey. The government saying that the onus is now really on the private sector to fire up the animal spirits. But even having said that, I think that 10% increase in capex is still what the economist was saying. Maybe the market wanted more. I think Shireen's coming in.
Surabhi, this is exactly what I've been pointing out, and I think Anantha Nageshwaran made it very clear that to continue to expect the government to do 20%, 25% is an unrealistic ask, especially when you're also asking the government then to provide for tax relief. I mean, revenue foregone of 1 lakh crore rupees on account of direct taxes. Where is the government going to make up all of that is a separate question altogether. But to expect that it will be the historical, what we've seen in the last few years, a 30% kind of increase as far as capex is concerned. Even last year, the finance secretary had said, look, we have kind of reached a peak. We have reached a limit as far as how much we can do as far as government capex is concerned. So the message has been sent out, not just in the economic survey yesterday, but was sent out in the previous budget itself by the budget makers who were here with us on the channel explaining how they were looking at this. But Mr. Chakrabarti, you wanted to make a quick point as well.
Yeah, quick
You're looking
point
at the numbers.
related to defense. it is RE number is roughly 4.56 and BE number is 4.91. It's actually effectively an increase.
It's an increase. That's right. So that's a correction. There is an increase if you look at the RE number. So that's an increase as far as defense is concerned. I'm curious as to why we have Dixon, etc., selling off at this point in time. Because as I was pointing out again in the morning, we have Ashwini Vaishnav on record saying that the PLI component scheme is being worked on, and there was no guarantee that it would be part of the budget, but it's certainly something that consultations are taking place, so it can come post the budget, so the window is not shut, is the point that I'm trying to make. But is there something else? There was a whole host of issues related to customs duty rejig. I don't know whether that has anything to do with it or not, but perhaps it would be best to check with those companies directly. But that's the story as far as the markets are concerned. A quick final take before I let the two budget editors say goodbye. Ratin, we'll of course see you back in the evening as you digest more of the fine print, but on balance, your final headline.
The best thing that's happened here, and I'm not a Bihari, so I suppose the best thing that has happened here is for every Bihari in this country. And there's an election coming, so I understand. But I think is the promise to rationalize the tax code. What I'm very worried about, I'll come back with the exact numbers in the evening, is that the taxation system of India now is far more aggressive than it was yesterday. The proportion of corporate taxes haven't gone up much. Income taxes now kick in at 6 times the per capita income, and the revenue foregone from indirect taxes is almost zero next year, whereas the revenue foregone from direct taxes is 1 lakh crores, which essentially means that the Bombay Gymkhana has gained at the expense of the Aam Aadmi. And this is regrettable. I think I completely would like to endorse your point about capital expenditure. The government, to its credit, has very clearly said repeatedly that the heavy lifting on this front will ultimately have to be done with the private sector. And that has not yet been forthcoming, but there's only so much the government can do to raise capex. I'm not so puzzled by the markets not responding warmly to this budget. Because again, if it's only the Bombay Gymkhana whose net disposable income is going to go up, that sector is already maxed out. We don't see new sources of demand coming here that would give a permanent boost to the growth rate of the next 150, 200 million who don't pay taxes. And therefore, probably the markets quite correctly have reacted with caution, unlike us consumers who are very excited about the next thing we'll buy or the next holiday we'll take with that 1 lakh crores. In terms of fiscal prudence, I think this budget has done a very skillful job. 1 lakh crores is not a large amount in budget making terms, as also given attest to. However, it is the optics of doing that in personal income tax is absolutely massive, and that's a core support base of this government, and therefore this has definitely benefited them without too much cost to the exchequer. The government has stayed its course on fiscal consolidation, which is good. Let's see what's happened to expenditure, but that I'll tell you in the evening.
Okay, we'll hear back from you more on the expenditure side. Mr. Chakrabarti, a final take before I let you go.
One of the things which, since it came initially, on the agriculture side, a very comprehensive scheme has come. Normally, they are all divided up. Something for irrigation, something for fertilizer, something for... It's a comprehensive scheme which has come up. I didn't get the name correctly, but it covers 100 districts and covers irrigation, markets, technology, everything. Though what one misses out on agriculture is it's supply side heavy. It also covers warehouses, rural warehouses.
Correct.
I really welcome it. However, on agriculture, we are still supply side heavy. It has to be, the market part. Perhaps it's still a work in progress. Everything cannot happen on the budget.
I have the name of the scheme, the Dhan Dhanya Krishi Yojana.
Dhan Dhanya
Krishi Yojana in partnership with Skates, which will cover 100 districts. And the finance minister saying 1.7 crore farmers will be benefited on account of that. So you're saying...
it's an excellent scheme. The other part is, second one is the part 2 of Swami. It was launched almost
the housing
4.5 years back for the stalled housing. If you recollect, all of us see a lot of shells of housing lying.
He's being modest, he designed it.
And there 15,000 crore additional has been provided. Of course, I wish this would of course come as a mix from both government as well as private sector. I hope 90% of it comes from private sector. let's hope, because it depends upon how the rules and everything work out in this. It's a very well worked out scheme, has been successful. And it's only the risk weights that RBI is going to attach to the assets which would be standard. That will decide.
Right.
Third is on the regulation part. FSDC has been given the role on the financial regulations.
Yes.
Which means adding a lot of muscle in the finance ministry to the financial market division and other division to see that they can, because they're all very powerful regulators.
Yes.
To bring them, even though FM heads it, but somebody has to really act it hard. So a lot of lots of muscle has to be added there.
Lots of muscle.
To ensure that direction gets taken, otherwise we'll miss woods for trees. And lastly, I'm very glad with the consolidation part, which is something I guess should, over a period of time, don't look at the market.
Yes, absolutely. Well, yes, consolidation, I think everyone concurs. That's positive. And two schemes that you specifically pointed out, the scheme for stalled housing, which gets an additional allocation, good move there. And of course, on the agriculture side, a more holistic approach with that Dhan Dhanya scheme. But Prashant, back to you. More information on what's happened to Dixon?
No, Shireen, as I was talking, I spoke with the Dixon management, and what they said is that if anything, actually what has come through is positive for their business. So, as the finance minister said, the basic customs duty on open cells has been reduced. They are setting up a display manufacturing capacity. We speak with them every quarter, and that's been something which the market is looking forward to. So, actually, it helps them. And they also said, the Dixon management has said that even for mobile parts, there are some reductions which have happened. And that is also actually positive. So, unaware whether stock was seeing a bit of a swoon, but you just see what's happening now. It's about 1,200 rupees recovery from the lows of the day on Dixon already. So it's actually almost flat now on Dixon. So I think, initial kind of knee-jerk reactions starting to get reversed. Even actually for insurance companies, you look at the price reaction, right? HDFC Life was down 7%. It's down 2.5%. Because, the dependence on the old regime is about 5 to 7% of individual new business new premium.
Prashant,
so a lot of it, there is excessive move, and then it kind of gets moderated.
I think what we have to keep in mind is today there isn't much volume. And perhaps that's why you're having these rather eccentric or volatile moves, because the volume perhaps is not like on a normal day. Remember, it is a Saturday, and foreign funds are not in the game. Well, actually, I want to look at it this way. Mr. Khara, you just correct me if I'm wrong. What could have gone to capex 1 trillion less because the increase is only 10%, and that 1 trillion actually is gone into the pockets of the taxpayer, right? Especially the small taxpayer, up to 12 lakh. Which means more people can spend, more people can take loans, retail loans, for instance. So, and normally the Reserve Bank's thinking is when fiscal deficit is kept under check, they are more courageous to cut rates, because you don't want fiscal looseness and monetary looseness together. If the fisc is tight, normally the central bank cuts rates. This is their normal thinking. So do you think that this is a boost for retail loans?
So I think, it is certainly a boost to the retail loans, because when it comes to the ability to repay, they have got a better ability to repay. So that is a positive. But, when it comes to decisions relating to the policy rate cut, etc., they have got multiple other factors which they have to evaluate. And perhaps herein, even if the policy rate comes down, whether the interest rate structure will allow the reduction will be a function of the liquidity. If at all, unless and until liquidity improves, I think my apprehension is that the ability of the banks to cut the interest rate would be little constrained.
Fair point. Well, I agree with you. Liquidity also is something which the Reserve Bank has been giving. So hopefully, going forward, we will see more such steps from them. Mr. Khara, thank you very much for being with us on such an important day. Sunita Reddy, the Managing Director at Apollo Hospitals, is also with us. Sunita, thank you very much for your time. Your first thoughts, there was a mention that medical tourism will be promoted. What have you made of the budget?
I think it's a fantastic budget, because what is good for every Indian is good for healthcare. And the first part of it, of course, lowering of personal taxation is something that is going to put more disposable income in the hands of many more Indians. And moving on, this will give them access to health insurance products. The 100% FDI in insurance, while it might not show on the stock market, I see it as a very positive move, because bringing in more liquidity will give insurance companies the ability to have higher risk pools, and therefore create products that the middle class can access. We have seen private insurance and insurance products grow by 25% in the last 3 years. This is the best way to access corporate healthcare. So certainly a positive move. The second is the focus on oncology and cancer. The incidence of cancer is growing at far more than 7%, which is reported, because it is not detected early. And with this focus, the dual focus, the first on creating daycare centers, they've mentioned 200 chemotherapy centers, which will cover all of the districts in the next 3 years. I think it's a great move. What needs to be done is to create a hub and spoke model and use AI and connectivity to make sure that we cover large populations. It would have been fantastic if we could have done this even on equipment that's needed for radiation. Currently, we pay between 28 to 36%. So a customs duty, a reduction on oncology treatment equipment would have been, very comprehensive for treatment of cancer patients. The third aspect is clearly the Heal in India, which you mentioned. And Heal in India, Heal for India, all of this is good. It's a $100 billion opportunity. And I believe that we have the capabilities in place. If you combine this with the skilling and the addition of 10,000 more medical seats, moving to 70,000, I think we can set up a very strong healthcare system that not only heals India, but heals for the rest of the world. And by doing so, like I said, it's a $100 billion opportunity. I think we will earn foreign exchange, we will provide more jobs, and we will create a healthier India. So to me, the budget was definitely a step in the right direction.
Well, absolutely. And there was a mention of that in the speech as well, that promoting and enhancing medical tourism is also one of the focus areas for the government. By the way, look at the intraday charts of insurance stocks all over again. It's all happening right here because of a very sharp reversal playing out now on stocks like SBI Life, HDFC Life. Many of them have bounced back very significantly from the lows. Big uptick coming through as the market settles down and digests this. By the way, folks, I was doing rough back of the envelope calculations, trying to figure out how much do you save in this, new era of the new slab. So very rough. I mean, for someone who's earning 15 lakh rupees, my rough calculations show that in the earlier, this is a new concessional tax regime, but with the old tax slabs, that person would have had to pay 1,40,000 rupees in tax. Now the liability is coming down to about 1,05,000. So roughly speaking, 35,000 rupees of savings for someone who's earning 15 lakhs. Again, I'm not taking surcharge and cess, too many things going on at the same time. But roughly speaking, that's the saving that we're talking about.
No, the finance minister herself gave us those calculations. Those people earning 12 lakhs will save 80,000.
Yeah.
Those earning 18 lakhs will save 70,000. Yeah. And those earning 25 lakh will save 1,10,000.
Exactly, because for those who are earning 12 lakhs, the rebate itself is coming in. Yes. So it becomes nil. I mean, the rebate, which used to be only 7 lakhs, has now gone up to 12 lakh rupees with these new tax slabs. But anyway, it's anyone's guess. Now, where will this money be spent? Will it go in SIPs? Will it go to, buy new clothes? Stocks like Trent are surging about 7%. Will it go for travel and tourism and holiday? Or will it go in buying maybe better health covers? Because the market is worried on health insurance. And they're not being covered, with more people perhaps moving to the new regime. But there is generally higher disposable income. So could that benefit? Anyway, let me take that question to Nilesh Shah, who's joining in as well. Nilesh, the markets become so polarized today. All things economy are selling off and all things consumer are moving higher. But as the dust settles on the day and the budget documents, how do you think we are poised and, what next for a market that's been, hurting for several months now?
So while it is fashionable to say that market has been hurting for last 2 months, last 5-year return of market is 20% plus. So if you have given so much of profit, obviously there will be a consolidation or correction. This budget has clearly shifted focus from pure investment to also boost for urban consumption. And now that roti kapda makan is secured for most of the people, focus will be shifting to education, travel, entertainment, consumer durables, and stuff like that. And that adjustment is happening in the market. More importantly, from a valuation point of view, capital good companies were pricing in price to vision ratio. So there is some amount of deceleration there. Consumer stocks, they normally trade at a higher valuation, but compared to their historically higher valuation, they were at a discount. So there is some amount of investor pulling over there. So we are seeing a distinct shift from infrastructure investments to consumption, both in the budget and hence in the market.
By the way, the market itself, it's not just life insurance stocks. The market itself is pulling back from the lows. Should keep that in mind. The Nifty's cut is around 60 to 67 odd points. That's the recovery that I'm talking about. Apart from life insurance, you've got stocks like Bajaj Finance moving higher. Of course, auto stocks are up. Aisha, for instance, is gaining more ground. And the Bank Nifty is also trying to reduce its losses.
You're right. Bank Nifty and mid-cap index were down about 1.5% at one point in time. Now down almost like 0.5%. So it's a fairly decent recovery that we've seen. Zia Modi, you've been with us for quite a bit. Thank you very much. But any last thoughts that you've heard, everyone? IFSC investments, anything from an investment point of view that you want to leave us with?
I think one will have to look at how the promotion of Gift City takes place, Lata. I think there will be a lot of movement there. I think one thing that I focused on was the concentration that the FM gave to the MSMEs, given that, they apparently constitute 36% of our manufacturing and 45% of our exports. And that led me to think about what is the boost she has given to the skilling sector? Because we have Indians, but we need to have employable Indians. And I think there also the government has tried to do what it can in skilling. And in addition, I don't think anyone has mentioned the AI part of it, where the government has basically said that they're going to set aside a large amount to train people in AI for the Excellence Center. And I think that is one where both the country, the startups, and the foreign investment should converge well. And it's a new area for us. I think all in all, stable budget, no surprises from a foreign direct investment point of view. Some over-regulation by some regulators, which make it more difficult for FDIs and FPIs. But I'm assuming that will get sorted out at the back end. All in all, I thought it was fine.
Thank you. Thank you very much for that, for those wrapping up thoughts, Zia. And actually, under the FSDC also, they have, they are looking at an inter-regulatory committee, which perhaps will take out these extra compliance. Prashant, you wanted to say something? Go ahead, please. Yeah, Prashant, I think you're on mute.
Sorry, before Zia Modi goes, and unfortunately Kanabar is no longer there, but Nilesh Bhai is there. So a lot of things have been said about Gift City and the positives. In fact, I would say, despite my overall very positive view on the budget, and in fact, I believe it's the best budget in a long time, it did nothing to address the core problem of Gift City, which is that under Section 9A of the Income Tax Act, which Nilesh Bhai is very familiar with now, fund managers like me or my peers who are seated in Singapore or Hong Kong or London, who are managing FII funds, are effectively prevented from relocating to India, to Gift City. So you can relocate a few funds and make it like a mini Mauritius. But unless the fund managers are allowed to relocate, Gift City can't be made into the kind of city that our Honorable Prime Minister Modi ji has dreamt it to be. Just to complete the thought, metaphorically speaking, to grow a tree, it is not sufficient to have good soil, water, and sunlight. Most crucially, you need the seed. And the fund managers and investment teams, their investment managers are the crucial seeds to grow those trees, metaphorically speaking. So I must add that all this excitement around Gift City results into nothing but zero unless that issue is addressed.
You know, I'm glad you raised that, Prashant, and I want to go to Ashok on this because we were debating and discussing this earlier as well. What clarifications come and have it on the relocation part. That and one more thing, Ashok, I remember this was a very big ask earlier. Basically, some of the non-bank units that are operating in GIFT, they wanted to get parity with the bank branches, the bank units in GIFT, in terms of issuing instruments like ODIs to overseas investors. That was a big ask. I don't know, I've not seen it in the fine print so far, but your thoughts on some of the issues that Prashant has also raised.
No, you're right. I mean, I have now seen the detailed fine print on IFSC, and the amendment required for Prashant to relocate to India is still missing. I mean, it goes back, his and my discussion goes back to many, many years when we first made this request to the government. But sorry, Prashant, there has not been an amendment, and the rules still remain rather rigid, which effectively means that existing funds operating out of Singapore, most of them are now from Singapore, not so much from Mauritius, are finding it difficult to relocate their fund managers. You can relocate the fund, but if you can't relocate the fund manager, then who's going to manage the fund? And I think sooner or later that change has to happen. Having said that, there is an interesting change that they have made in the GIFT City rules, which is what they've said is, if there are two related companies and you have a treasury company located in the GIFT City, historically, when there is a transfer of money from one related company to another related company by way of a loan, it's deemed to be dividend in the hands of the receiving company. What they have now clarified is that if the giving company is based out of GIFT City, then any loan given by that company to a related company not based in GIFT City is not subject to deemed dividend tax. So that's a very positive step forward in terms of enabling large corporates to set up their treasury business, certainly in GIFT City, both domestic as well as global companies, without causing a deemed dividend tax. But to the point that was made by Prashant, we probably have to wait one more year.
And what about ODIs, Ashok? What about ODIs? Because some of Nilesh Bhai's peers, for instance, I mean, Kotak has a unit. Many other Indian entities have set up non-bank units in GIFT, and they all want to be able to do the business on ODIs as well, which I think the tax benefits are restricted to the bank branches right now. Did you see anything there?
No, unfortunately, nothing there either.
Okay.
No change in law. But just two other points that I'd like to make is coming back to MSMEs and Zia's point that there is a lot of focus on the middle class. I think we are missing the point on the number of new opportunities in terms of increasing the limit for both micro enterprises as well as small enterprises. You know, I think a lot of microfinance companies and unsecured lending, even secured lending businesses with small ticket loans have gone through an immense amount of stress in the last 6 months. You can see the delinquencies, you can see the challenges in collection, and therefore you can see that several companies are either reeling under pressure if they're listed, or many that had filed for DRHP are not getting listed because of the environment. Increase of limits over there and providing insurance on a larger base, I think, is a very positive step. Government is giving an assurance to more and more lenders to say, you can continue the business. And we know that there is some pressure at the lowest end of the economy, but we will cover you with insurance by increasing these limits. So that's a very positive step.
Got it.
On insurance itself, on the FDI side, I think there is a very positive movement. I mean, we have 22 odd companies that
Mr. Badva, sorry. I just wanted to, a point taken. I just wanted to clarify something. And I don't know if you've seen this. This is the point about bringing clarity in income on redemption of unit-linked insurance policy. And the wording is, it is proposed to clarify that the profit and gain from the redemption of unit-linked insurance policies to which exemption under Section 10D does not apply shall be charged to tax as capital gain. Is this the way it is worded? Does it look like it perhaps is retrospective? I mean, just your sense. Redemption from here on, basically.
Yeah, so effectively, if the redemption happens from today, it does not matter when you invested. Therefore, if you invested historically, but you redeem today, the language seems to suggest that it would be. I haven't read that still in the document. So my apologies that I can't provide you greater clarification. But if that's what it reads, then it means in some sense it's retroactive in nature, because past investments, if redeemed from today onwards or whenever the effective date is, shall become subject to tax.
So this is like what they did to debt funds last year when grandfathering was removed? Something similar?
Something similar.
Okay. I mean, that is... Zia, you want to comment quickly on this? Any thoughts? Okay. Okay, I think you're on mute, but I think you're saying you're not seen it.
I've not seen it.
I've not seen it. Okay, all right. We'll have to, I think, clarify with our with Sapna, reporter in Delhi, whether this is what they mean.
I'll have to run to the money control interview that I have right now.
Prashant, carry on. Let me just actually toss it across to Shireen now, who's at the CIA budget headquarters with the panel of guests there. Shireen, over to you.
Well, thanks very much, guys. Consumption is the theme that's playing out, and we're seeing a recovery even as far as the markets are concerned. The Sensex moving back into positive territory, but the man with the biggest smile, Sanjeev Puri, the president of the CII, as well as the chairman of ITC here with us. Sanjeev, many thanks for coming back into our CNBC TV 18 budget headquarters. Consumption, that middle class boost that was being asked of, the finance minister perhaps doing more than even what industry was expecting. What do you make of it?
Absolutely. I think the relief to the middle class is very welcome, and it's going to certainly provide impetus to consumption, and therefore, contributing to the virtuous cycle of investment and employment. And this was much needed at this point of time. Of course, we do expect interest rates also to come off in February to reduce, and that should provide some further impetus. But the larger point of this also would be that this is the immediate relief. But a lot of sectors that have been touched upon in the economy are areas that which are very labor intensive.
Right.
And the economic activity increasing in those areas will have larger impact on employment generation.
Footwear, toys, tourism, all being identified as sectors.
Even agriculture.
Yeah.
It has enough people, but
healthcare.
Income can improve. Income can improve. So all this itself actually feeds into the virtuous cycle of, therefore, consumption and investments. So there are measures for the immediate and measures that will also unfold over a period of time. So from that perspective, I think is a very positive.
But, in terms of growth and in terms of providing that consumption boost, I mean, realistically, what are we talking about, given what the finance minister's already announced in the budget? As you pointed out in the morning, rural had picked up, urban was still suffering. Do you believe that this could alleviate the pain?
You see, it will certainly provide some impetus, and there are multiple things that come together. Right? For example, social security for gig workers. That will provide relief on medical expenses.
Yeah.
So a lot of pieces like that are there in the budget, and as I said, as employment comes in employment intensive sectors, that further provides boost. So we'll have to look at the full picture. This is one element of it.
One element of it. Rajiv Memani, let's look at that particular element as far as the tax cuts are concerned. Revenue foregone of 1 lakh crore rupees on the direct taxes side, 2,600 crores on the indirect tax side. But the signal that the government has sent out clearly saying that, look, we want to come in and provide a shoulder to the middle class. The big takeaway, we've of course got two big elections, Delhi right around the corner and Bihar, and that's the message the government's sending out.
Yeah, I think, I think we've had pre-budget discussions. Everyone was expecting relief for the lower and middle income. But this extent of relief, I don't recollect, has been given 1 lakh crore in personal tax, which is almost, about 7 to 8% of the total personal tax collection that the government has. So I think it's a very significant relief. And overall, if you look at the overall theme from a tax standpoint, I think a lot of it is based on just simplification.
Right.
From the new income tax, 50% of the provisions coming down in the new income tax bill, that will be tabled next week. All the other things that they have also done, whether it's on TDS, TCS, all the other areas that have been laid out, a lot of that is on simplification. Also in continuity, no significant changes anywhere except addressing some, minor tweaks here and there. Unless if something is there in the fine print, then we don't know. But this government generally, whatever is on the table. IFSC always gets, they're trying to encourage and project IFSC more. That's there. And overall, the emphasis, whether you look at the economic survey or you look at the budget, this ease of doing business. And I think it is so important to unleash the spirits and to ensure that India achieves its full potential. I think that, setting up the committee, coming out with in the next 1 year, setting up some competitiveness among states, clearly recognizing that a lot of these things have to happen in states. I think that's a big change. And the pillars that they have identified, and focusing, some of which Sanjeev mentioned, focusing on those 4 or 5 pillars that are so critical for growth in the next 10, 15, 20 years, including nuclear power and making changes in the act. I think that was quite good to hear.
Yeah, a target of 100 gigawatts as far as nuclear power is concerned. Remember, the IEA has said that 2025 is likely to be a breakout year when we talk about nuclear energy. So India getting into the ring as far as small modules are concerned. But Chandrajit Banerjee, what the finance minister has delivered on the consumption side, perhaps some disappointment on the capex side. Clearly not on the lines of what industry was expecting or even hoping for, but it's in line with what the government has been saying. So on balance, the balance has been done and the balance has delivered?
Absolutely. Of course, we talked about a 25% more. I mean, there's no restriction to asks, but
no, clearly there isn't. Clearly there isn't.
But yes, this was expected, and one had thought about that. But if you really look at the type of spend that one sees on the capex, which is still, I mean, quite reasonable in terms of if you compare it, what goes into rural infrastructure, even this about the states that 50-year interest-free, so all of that actually would help in crowding even the private sector, which has been called a laggard, so to say, for some time. And I see that coming in because we see a focus on a lot through that will come through the consumption demand. So all in all, not really any disappointment with the capex which the government has done, because it has done more than to offset through the consumption demand.
Done more than what was expected, certainly on the consumption side. Sunil Mujal, thanks very much for joining us. On balance, the big headlines, the big takeaways, what does the budget do to accelerate growth?
So actually the whole exercise, I think, was a balancing act between maintaining fiscal discipline, which the finance minister has put on herself over the last many years, at the same time figuring out a way to bring growth back in. So I think it's been done in multiple different ways. One is the building blocks, is on education, skilling, research, innovation, tech focus, that's very good. Second is picking specific sectors for high growth potential. Clean energy, deep tech, so the seeds, that's a massive area actually. What they've done in agriculture is a wide coverage. What I like is also focusing on some of the fundamentals, things like nutrition, things like the elderly, things like the farmer, small industry, export capability. So it's actually, I'm actually broadening the answer to your question, because I don't think it's only about that. It's not only about, growth is not something you can flick a switch and get tomorrow. But the tools have been put in place, and the point you were making just now about the higher liquidity in individual and families' hands will either go towards savings or investments or consumption, and all three will do good. Even if you say it's about 1/3 each, roughly. So you're talking about 30,000 crores coming into consumption this year. So some of it will need to go because personal and family balance sheets were getting a bit upset because there was over leverage taking place on individuals. I think some of that will go to offset that, as companies and banks have done over the last 7 or 8 years. So I think we will come out better, healthier, cleaner. I do hope, unlike what CB is saying, I was hoping that the infra spend would have been higher, because this consumption takes a little bit of while for the virtuous cycle to kick in. Consumption can start, but consumption leading into production, leading into additional capacity, leading to jobs is a bit of a time lag. So that's one miss from my side. But I guess to be able to maintain the 4.8 instead of 4.9 at the FISC was a pretty magical number.
Oh, and it certainly was a surprise that came in there after having delivered on the kind of cuts that they delivered on. But Sanjeev Puri, let's talk about those untapped sectors where the government hopes to unlock potential. Tourism, this identifying 50 cities, PPP with states, PPP with industry as well. I'm not sure what the details are, but also including hotels as part of the infrastructure harmonization scheme that they're talking about. What did you make of that? And, you know, a lot of actually the schemes that were talked about are work in progress. The actual operationalization still has to be detailed. So what do you take away from many of the announcements that came in?
See, first of all, many of the specific interventions that are there, you alluded to some in tourism. Then there are others, for example, in exports. I think the integrated approach, cross-ministerial approach, I think is absolutely the one that is required, because in the morning also we spoke about some of the issues that have to be dealt with, which requires a cross-ministerial approach. And something CI has also been talking about, you know, having an integrated approach. Looking at setting up this committee on ease of doing business.
Right.
And taking an integrated and focused approach on agriculture, 100 districts, all-round development.
Yeah.
Taking an integrated approach on rural, the non-farm development. You know, really up sending some development and resilience hubs for rural areas. So these are very fine ideas, very good ideas, and certainly will unlock the potential in many areas. You know, creating a framework for GCCs. GCCs are already, you know, doing well in India.
And massive job creators.
Massive job creation, and the world has demographic challenge. So it's a great opportunity for India, and to provide impetus to it, to make some, you know, today it's happening on its own. Without really any impetus or for specific interventions. So right now, to create a facilitative framework for this, I think it's going to provide further impetus to it. Then the whole idea about the strong point of reforms and collaborating with states. I think this will provide a lot of impetus, because a lot of reforms now need to be done at the state level. Right? So a lot of the right things are there. And I think what I'm very happy to note also is that there is a lot of clarity on the mechanisms that will be used to do it. It is not just a statement without an institutional mechanism.
Sure. Rajiv Memani, the big headline for you as I say goodbye, at least as part of this session, but the big headline that you take away from what the finance minister has delivered.
I would say identifying the critical growth drivers for Viksit Bharat, ensuring that there is, as he rightly said, that there is a focused approach, interministerial approach for that, including ensuring that there is good state-to-state collaboration, and identifying all the levers, you know, even AI, deep tech, you know, global value chains. So at least the thought process of growth, the growth levers are very clear, and how you take that through. Now the main thing is, you know, how these committees come, how the execution happens, and what changes on the ground.
It comes down to execution. CB.
So adding to what Rajiv said, I would think the national manufacturing mission. That's going to be very critical, because that's going to really cut across. And secondly, the element of trust, the Vishwas Bill 2.0, that again is a very big takeaway for me.
Okay, Mr. Munjal, final word.
So the setting up of a group to review all rules, regulations de novo, I think is one of the most critical things which has not got enough airtime from many of you. Because for a long time, we've all been cribbing about excessive red tape. We've tinkered with the laws and rules for 50 plus years. We've scrapped many, we've decriminalized many, but it's not enough, because they were designed over 100 years ago. I think this is a fantastic move, other than making things easier for industry, accelerating M&A, and there's a whole bunch of things on that front, which I think are quite welcome.
Well, we'll have to wait at least a year for that committee to deliver its verdict on what will be axed, what will need to go, but a clear message being sent out by the budget. Mr. Munjal, CB, Rajiv Memani, Sanjeev Puri, appreciate you joining us here on the CNBC TV 18 budget headquarters as we digest what the budget will do in terms of growth and how it will propel the needle of the economy. We are going to take a break. We haven't taken one in a very long time. We're back in a moment with more. We leave you with where the markets are and come back for closing. Stay with us.
Presently, taxpayers can claim the annual value of self-occupied properties as nil only on the fulfillment of certain conditions. Considering the difficulties faced by taxpayers it is proposed to allow the benefit of 2 such self-occupied properties without any condition. To streamline the process of transfer pricing and to provide an alternative to yearly examination, I propose to introduce a scheme for determining arm's length price of international transaction for a block period of 3 years. This will be in line with global best practices. With a view to reduce litigation and provide certainty in international taxation, the scope of safe harbor rules is being expanded. A number of senior and very senior citizens have very old national savings schemes accounts. As interest is no longer payable on such accounts, I propose to exempt withdrawals made from NSS by individuals on or after 29th August 2024. I am also proposing to allow similar treatment to NPS Vatsalya accounts as is available to normal NPS accounts subject to overall limits. The middle class provides strength for India's growth. This government, under the leadership of Prime Minister Modi, has always believed in the admirable energy and ability of the middle class in nation building. In recognition of their contribution, we have periodically reduced their tax burden. Right after 2014, the nil tax slab was raised to 2.5 lakhs of rupees, which was further raised to 5 lakh rupees in 2019 and to 7 lakh rupees in 2023. This is reflective of our government's trust on the middle class taxpayers. I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees. So, detail the indirect tax reforms and changes in direct taxes in Part B. Financial sector reforms. The FDI limit for the insurance sector will be raised from 74 to 100%. This enhanced limit will be available for those companies which invest the entire premium in India. The current guardrails and conditionalities associated with foreign investment will be reviewed and simplified. The services of India Post Payment Bank will be deepened and expanded in rural areas. NABFID will set
Welcome back. This is our special budget coverage on CNBC TV 18. We've been telling you what's come out of the budget, what's the positive and what's the negative, although there is nothing very much negative which we've been able to pick out so far. Usually about 2 hours, 2.5 hours later, you know, tax experts, and we've got many here in our studios and our offices who are poring over the finer details, will come up with this or that, you know, which is like, for example, last year there was, you know, that big googly that the benefits on debt funds were removed. I mean, the grandfathering relief was removed for debt funds, but this time around, at least so far, there is nothing as such. Markets have come off quite a bit from the day's lowest point, and we are down only 20 points or so, 23,490. And of course, what's doing well is consumption. and all kinds of consumption names. Even I saw Swiggy, Zomato, etc. surging quite a bit. So that's the picture. Well, we've got my colleagues joining in as well. Rima is here, Nigel is here, Mangalam. You guys were holding the bull by its horns, guys. And
I think one of the horns of that bull worked. That's the one in the green.
I mean, consumption is the story today, Mangalam.
Consumption is totally the story. You know, everyone was hoping for some boost coming into consumption itself, and that's largely because urban consumption had been struggling. We've been hearing from companies over the last couple of quarters, etc., as well. So we'll leave it to the tax experts to find out the exact benefits. But speaking from what the finance minister had said, and quoting her speech itself, zero income tax incidence for people up to 12 lakh rupees. That saves them 80,000 rupees annually. Income tax of 18 lakh will now have to pay 70,000 rupees less in terms of annual taxes, and income of upwards of 25 lakh rupees will save 1.1 lakh rupees annually in terms of taxes. That's roughly 10,000 rupees additional that people have per month for people upwards of 25 lakh rupees, urban dwellers that are. And as a result of which, all these urban consumption plays, the likes of Zomato, Swiggy, Nykaa, you have the likes of ABFRL, which is the biggest gainer. You have Trent, which is doing extremely well as well. So the urban mass consumption spaces are doing extremely well. Premium was doing well already. And even in staples, if you look at something like a Nestle, 75% of their revenue comes in from urban India. GCPL, which is among the bigger gainers, 70% of their revenues come in from urban India. We have Britannia, Marico, all of them, nearly 2/3 of revenue as well coming in from urban India itself. Add to all of this, you have ITC, which is doing extremely well as well. Why? Because before every budget, there's a fear that there could be an increase in tax incidence out there as well. That's not come by. But most importantly, the FMCG sector had been underperforming for the last couple of years. If you look at, the valuations as well, if you look at names like HUL, you look at names like Britannia, you look at names like ITC itself, Nestle, Jubilant FoodWorks, all, the table comes up for you on the screen. If you compare it to the FY26, their current FY26 price to earnings, 1 year forward price to earnings, and look at it from a 10-year average basis, they've come down to the mean. And in cases like HUL and Dabur, they're actually below the mean as well.
So there is that,
valuation,
comfort as well.
Yes, comfort as well. And then add to that, you had big gains in capex and infra-related themes earlier. If there has to be a sectoral shift coming by, then it has to be the consumption space.
Will this cause that sectoral shift is the question. And we'll get to, the other sectors as well, one by one. Insurance, Yash is also standing by, and we'll bring him in. But I think we have Ramdev Agarwal now joining us, chairman and co-founder of Motilal Oswal Financial Services. Ramdevji, good to have you with us here. Good afternoon. It's been a couple of hours now. Budget, I'm sure your team has briefed you. You've poured over all the important things. What's the sharp take at this hour, according to you? Is it how would you rate it if I were to rate it on 10?
10 out of 10 for sure. If I could give 10.5 also. So it is definitely 100 out of 100 budget. First thing is there is no negative. Right. Okay, at least as far as I know, there is no negative. So which is a big positive. Second, that whatever they said in economic survey, everything has given, it has found some space somewhere. So I mean, now insurance is 100%. That shows the kind of intention to attract capital into the country. Then they have also talked about global competency centers going to the tier 2, tier 3 cities. That's a very big revolution in India. I mean, it is after IT, GCC, evolution of GCC is very, very large. So I don't know what all they have done.
Yeah. No, absolutely. We'll get to some of those things in a bit, but for our market audience, right? What Mangalam was talking about, how much of this is this a boost on personal income via personal income tax route enough to spur meaningful growth for listed companies, and where would that show up in a more meaningful way, according to you?
Yeah, so I think. Clearly, I'm not in a position to figure out when you get about when your income level is about say 20 lakh or 24 lakhs, and you get a benefit of about 70,000-80,000 rupees. Where does it go? My sense is clearly there will be that money will tend to go into the consumption, and that's what market is betting on. So I would go by the market judgment that. That consumption will, particularly the FMCG kind of item or Zomato and all who sell small ticket items, they would get benefit clearly.
Mr. Agarwal, afternoon, this is Reema here. Now, CAPEX infrastructure was seen as a multi-year, multi-decade kind of a story for India. But given what we've seen over the last 2 years and the thrust now on consumption combined with the welfare schemes announced by the government in the last 12 months, is there a shift now in the narrative from CAPEX to consumption? And therefore, should you step back from the CAPEX-related themes as a multi-year story, especially after the kind of returns they've generated?
Yeah, so I think as far as the economic allocation is concerned, that remains same, just that the market was sitting on the capex side, and there is a shift in the allocation. And in fact, we were saying that economy is growing at 7%, 7.5%, but there's no feel on the consumption side, anything of that kind of a growth. So now that consumption, which was completely amiss, there is some money which has been put in the hands of this middle class. And because if you can't increase the income, you have to reduce the tax so that people can buy some more. And other way was to reduce the cost of the goods by reducing the GST and all. So that side they have not done. So they have put some more money in the hands of consumers. And see, real benefit is going to come from economic growth. Will they go from current 5.5% kind of a growth for last quarter? Will they again go back to more like 7%? The real benefit will come from there, and then from there allocation will happen.
No, fair enough. But what about the CAPEX story? Is there a change? Would you continue to allocate the same amount to the CAPEX infrastructure-related stocks, your defense, railways, etc., as before?
Yeah, so we will, of course, there will be reallocation of the resources. Ultimately, the fund manager has only $100. So out of 100, if I remove 10 to the consumption, obviously the 10 will come from the capex side. I mean, if I say the capex and consumption, there are only two buckets. In that case, if I increase the allocation to consumption by, say, 5 or 10 rupees, that will come immediately will come from the capex side. Though the story has not changed for capex, but the story has improved for consumption. That's how I look at it.
How much do you think for a lot of the consumption companies is in the price? Because when we speak about urban consumption, there are names like Zomato, Swiggy, Trent, etc. They are trading at high multiples already. It's the staples which are actually trading at 10-year means. So in that case, the incremental allocation to consumption itself, does that go to consumer discretionary urban consumption, which is already trading at elevated valuations? Or would you look at staples as well? Because now that rural is improving and there is some push to urban, maybe that makes a better value bet.
Yeah, so I think as far as the stock selection is concerned, it's also a question of at what price you are buying and what you are buying. So those things are about the stock picking. But broadly, if consumption is going to happen, where is the actual value lying? Say, I would think that all the digital companies, quick commerce companies, that's a good place to, if they get a little more booster, I would rather spend there than the 70, 80, 100p old companies, where the growth rates at best will be 10, 15%, whereas here it is like 70, 80%. So that's a matter of choice. This is what I'm saying, but somebody else will have some other view. Right. But clearly, consumption companies, if yesterday it was worth 100, today it is worth 105. That's what market is saying.
And another way of playing consumption is also via autos and some of the consumer finance companies.
Yes.
Would you bet on any of those as well, or maybe you will look at just some of these new age consumer-focused, tech-focused consumer companies itself?
No, I mean, see, I don't manage money, so of course managers will go deeper into the thing and they'll talk to the companies, and just that little provision has come in the budget. It doesn't mean much overnight. I mean, Monday, a lot of things will get equalized or things like that. But I mean, individual companies are very important. So and there is going to be a lot of second-tier effect. Like the entire tax benefit is not going to flow into just the consumption companies. That in fact the capital markets can benefit significantly, because the lot of people who are well off, say about 25 lakhs and all, they they're not constrained by the income for the consumption. The incremental a lakh rupee comes to them, that a significant portion might come to the capital market. So we'll further examine. Right now we are just in the in the mood to react to what is given. Just that there is no negative and positive tailwind is there for consumption, auto or things like that. So that's how market is sentimentally moving that side, because there is no seller there. There is only buyer. On the capex side, there is no buyer, there are only sellers. That's what is reflecting right now in the market.
All right.
The real rational movements will start happening next year.
And, okay, no, absolutely. You said that your fund managers will speak with companies and figure out exactly what is going on. You may want to listen in, Ramdevji, to this next conversation, because it's a space where, a lot of the fund managers, your fund managers have been bullish as well, EMS, right? And Dixon is the leader. We have Saurabh Gupta, CFO at Dixon, joining us. The Dixon stock saw almost about a 1,500 rupee swoon. It sold off very aggressively and then it basically came up very sharply. Saurabh, good to have you with us here. The basic custom duty on open cells has been brought down. Whereas as far as flat panels are concerned, the customs duty has been taken up. This is at the margin. How does this affect you, Saurabh?
Yeah, so definitely interactive flat panel display, the duty going up from 10 to 20% is a big positive for us, because we have been manufacturing this for last 1 year. So this will trigger more domestic manufacturing, and we manufacture for some of the marquee brands. And this is a good industry. So we think this is a major positive for us.
How major you think, Saurabh? Can you, any way to kind of quantify this? How much was coming in and how much of that import will now become unattractive?
So my sense is this is broadly a 5,000 to 6,000 crore industry in India, and large part of it was service to imports. We also had a small revenues coming in last year, but definitely this would now trigger a large part of import substitution, and we should have a decent portion of our revenues in the next 1 year should start coming from this category.
Mr. Gupta, afternoon. Any other measures that have been announced in the budget which impact you, and if yes, if you could explain?
Yeah, so duty has also been cut on some of the mobile parts. We are also examining it, but that is also a big positive, because if India has to be competitive and industry has to be competitive as far as exports are concerned, because we're already exporting some of the duties, high import duties that were levied on mobile phones. So that is a big positive, especially when we have all the brands with us on the Android ecosystem, and we are already exporting for some of the brands. So this is also add to the competitiveness of our industry and for us.
All right, so sort of just net, we want to understand, going by the kind of volatility that we saw on the stock price today, you're not seeing any negatives in this budget for Dixon. In fact, every statement that you've made it's positive, right?
It's positive, and this 12 lakh relief also is a big positive for us, because demand lately has been slightly subdued. I think so this would really trigger that positive sentiment and demand
in India. And that open cell bit, Saurabh, that is also something.
That is also positive, because the parts of open cell, especially for the TV parts. So we also manufacture, do the display assembly for mobiles, IT hardware, and hopefully in TV we had thought in future. So if the parts come at a lower duty, that also is a positive for us.
Right. And what about capacity? I mean, for the incremental demand that you foresee coming in on account of import substitution, do you have the capacity for the same?
Yeah, we already have a capacity for this, especially for this interactive flat panel display. We already have a capacity in our Tirupati plant. And for the display assembly, we are setting up a unit in Noida, which hopefully should be commencing operations by Q2 of next financial year.
Just for better understanding, what proportion of your revenue comes in from a product like this?
So as of now, it's a small revenue. It's around 200 to 300 odd crore revenues. But clearly, we see that the industry potential is almost 6,000-7,000 odd crores. And large part of it was service to imports. Now it will really trigger that domestic manufacturing, like the way a 20% duty on all the other products have triggered domestic manufacturing. Now the same thing will apply to IFPDs as well.
And at peak capacity, what is it that you can do from this product itself? Currently, it's 200 crores. You have capacity headroom. How much can you do?
My sense is we should be targeting somewhere around, at least in the first year, somewhere around 800 to 1,000 odd crores, if not more.
Okay, and the thing, as you said, the other one is, of course, the personal income tax cut, right? Phone sales has been very sluggish for the last at least 6 months, if not more. And we were talking with Ramdevji on the other side. I think he's still with us, and he was saying, I'm wondering where will people spend this 60,000-70,000 rupees. Phones definitely is one area as well. Saurabh, thank you very much for joining us. Quick reaction there. Ramdevji, if you're there, if you heard the Dixon management, any thoughts here?
Yeah. I think he was the guy to talk about Dixon. I mean, I think, see, what is happening is market is in too much of a hurry. So you saw the cut, I mean, stock slumped and again came back all the way. I think even markets, the moment fiscal deficit number came to about 4.4, markets sold off.
Yeah.
And then slowly it is recovering to when the thinking is happening that this is actually a positive thing rather than negative, crowding out will not be there. So I think by evening when everything is thought out, I hope there is not much of, between the lines, there are not too many negatives. I would think that market will recover. And then it will go back to its own momentum in terms of whatever is happening globally.
Now, you know, Ramdevji, from a market perspective, they had two asks. One was that the RBI goes ahead and loosens some liquidity, and hopefully they've done some bit of it, and next week we see a follow-up. And the other one was that the capex spend continues.
Yes.
You have given this budget 10 on 10, 100 on 100 cent marks, so to say it. But you know, don't you think that that little bit of a capital expenditure push is missing, and that would have been actually the cherry on the cake?
Actually in capital, see, right now what has happened in actual, they have not been able to execute what was projected. Say it was projected for 24-25 to be, say, 11.2 lakhs. They are barely able to do 10.1, and I'll be surprised if they finish even 10.1. You know, because most of the momentum has started only in December. So you are left with only just about 2.5-3 months. So my sense is that they may not be able to even complete the actual what they are talking about. Because it has to be a cash accounting, isn't it? You have to actually execute and pay. So even if government wants and orders are not given on time, which is slipped because of the elections and all, so the next year, again to, make a comeback and spend more than 10-15% would be very tough. So they are being very practical at about 11.2 lakh crores next year's execution. And if they execute full 11.2 next year, I think the momentum in capex would broadly be maintained. And if by chance economy actually recovers to 7-7.5%, they will have enough margin in terms of tax collection. Tax bonds should be very good, and hence they can, in the second round, they can further allocate for the capex. So, but I think the intent is very clear that they'll keep pushing the capex in various segments.
Ramdevji, just one quick thing. I know you don't manage money directly, but you have a defense fund. Defense stocks are all selling off. 4-5%.
Yeah.
Any feedback you've got from your team?
Yeah. No, I mean, Prashant, I mean, I'm just in the studio itself.
Okay.
And see, those guys are also talking to them, understanding. It is very difficult to develop anything. And in any case, it's an excess fund in the sense that it's an index fund. So they have to allocate whatever is the index composition is saying. So per se, in passive funds, you don't have any option but to allocate the way index is designed.
Right.
So, to that extent, active manager doesn't have much role to play out there.
Right. We request you to stay with us, Ramdevji. You know, the interesting thing about the way these stocks are moving also is that there's no counterparty today. It's a Saturday, right? So no FIIs. And a lot of these FNO stocks, which had been beaten down, are seeing big spikes. Trent, for instance, is up 8%. DMart, you're talking about that stock, is hit the temporary freeze at a 10% up move.
Oh, wow.
We're seeing big traction on Zomato, up 7.5%. AB Fashion and Retail up nearly 4-5% as well. And you're speaking about ITC, how there has been no tinkering with tobacco taxes. That stock is up just around 3.5-4% in context of the way the market is right now. But look at something like Godfrey Phillips. That too is up close to around 13.5%. So it's a big move that we're seeing in a lot of these stocks. How much of that is, because of the impact of no counterparty right now? How much of that is on account of the impact of...
Mangalam, but to be fair, the counterparty usually is on the sell side.
Yes.
So they are there.
So which is why the exaggerated up move, right? That's the exaggerated up move is what I'm
you're saying they're up because
there is no
the big seller is away.
The big seller is away, and there is, the FNO impact as well. But
we're seeing some big moves even in the textile, footwear, leather-related names. Look at a Mirza International. We've practically forgotten about that stock. That's up close to about 20-odd%. So Campus Activewear, that's another one, as the government spoke about it, right?
They spoke about it. There are two parts to this. One, these sectors, these stocks were beaten down. Secondly, while they're focusing on exports, also remember the rupee is closer to 86.5, right?
That's a tailwind.
So that's a big tailwind coming in for all these exporters. And again, the lack of any counterparty out here as well. So we'll keep an eye out on all of these stocks. But we do have Sandeep Bhatia, who's the MD, Head Equity India, Macquarie, joining us now. Sandeep, How would you rate this budget? Point number one. Secondly, the capex versus consumption debate. Does it shift towards consumption from here on in terms of allocation?
Well, I think it should definitely shift to consumption, and there's no reason for it not to be. I've said this on your channel before the budget was presented, that we need a tax cut up to 12 lakhs of income, and the finance minister delivered exactly on that. So what do I say? I think it meets the prescribed cure for the economy, and to that extent, it's a good job done.
Sandeep, I remember you saying in the morning that Maruti would be a stock to look at if the government chooses to prioritize consumption, which they have. And Maruti is a stock which is up 5.5% because small car sales have been lagging, and that could get a boost. So tell us, the stocks that have, swum into your ken because of the announcements that we've heard in the budget, particularly on the consumption front.
So the entire consumer sector has been a laggard. And again, just for the sake of a proper disclosure, that doesn't mean that one budget will change the entire story of consumption in India. But yes, it's a good 1 trillion rupee or $11.5 billion tax break, which comes to every taxpayer every year, year after year. And therefore, it is a meaningful tax break. Therefore, all the consumption stocks are going to go up, and that's what's happened today. But we should also remember that finally it's earnings that matter. I think the large cap consumption stocks have suffered. Volume growth is in very low single digits, if at all. And these competitive issues or these demand issues, until they are resolved, will these stocks remain expensive. So despite today's movements, and anyway, I think as all the anchors have been discussing, we don't have a fully functional market. On the other side, we don't have the other institutional players, which are the foreigners. We will definitely see more supply of stock come through when the market is fully open on Monday. Okay. So some kind of rationality will come in stock prices then.
Okay, all right. Hi, Sandeep. Always good to speak to you. I recall the last time we chatted, you said that the quick commerce space could have a big potential, but you're fairly cautious on this space. Now these stocks have come off, from the top. You have this bit of a booster shot as well that's coming in there. Still cautious. Zomato now is one of the top gainers as we speak on high volumes as well.
See, today's movement is not a benchmark to change anything on any sector or stock. Okay, I think all of us know that. People still ask these questions because that makes good headlines. But I think the whole market is expensive. The whole market needs to correct. I've been saying that multiple times whenever I come on the channel. I continue to reiterate the market needs a correction. But in the near term, let me tell you, I also expect a rate cut on Feb 7. So I think we have to see some positive news on the economy. Yeah. The tax cut has happened, the rate cut will happen. So yeah, in the near term, the market will show some strength, which is fine.
No, absolutely. I was actually going to ask Ramdevji that. Rate cut. Next is North Block is done. Main Street is next. Ramdevji, 7th of Feb, next Friday. Yeah. So what is your sense of the
it's very crucial.
Yeah, not only the... If you'll get you get more measures, you get a rate cut, you get guidance of maybe a little bit more. We're presuming, but if that were to come, where does that place the market according to you?
See, market, nobody knows, even I don't know what it will do in next 15 days, 20 days, because there's so many players. The foreigners are very large chunk for the short-term trade. So I wouldn't know how they will react. There is a global allocations and things like that. But as far as our economic performance is concerned, I think the demand, aggregate demand is dependent on the credit flow. So the credit flow has slowed down to more like 9-10%, 10.5%. That must go to 15-16%. And when that will take some time. So I'm sure the economic activity will also take some time. So it might take 2 quarters, 3 quarters before that pickup happens. But the turnaround in the credit cycle, that year-on-year growth from 10% goes to 11, 12, 13, that's what I expect, and that's what even the governor should be indicating in their next policy meetings and things like that.
So, yeah, near term is... Okay, just let me put it another way, and we'll ask Sandeep this as well. And I think Hiren Ved is also joining us. So Monday morning, we come back, Ramdevji, and say, we got this weekend tariff risk also, right? Trump's, maybe we wake up to 10%, 20%, we don't know. tariffs. So is that, will there be collateral damage in that sense, or what's your sense?
See, Monday is Monday. We are on Saturday today. Whatever was the activity today, we have taken care of that. Monday will its own balance sheet of activities, whether it's Mr. Trump, whether FIIs, interest rates. I mean, then it takes over, you know. So today's job is like which way the wind is blowing. Today, wind is blowing towards consumption. That's what has happened. And I think market in next 1 hour should take a call.
Ramdev is the bull. He's given 10 on 10 and he's saying Monday ka baad Monday dekhe.
By the way, he's sounding like a full philosopher. And you're saying Saturday hai. And by the way,
philosopher ne abhi kya kar sakte ho? Matlab, you know, Prime Minister ने सबेरे बोला कि लक्ष्मी जी के आपके पास आशीर्वाद रहेगा middle income group के ऊपर, and that's what she has showered.
Oh, she has absolutely. Thank you very much for your time, though. Appreciate it very much here. And Mangalam and Nigel, you guys always make the point about Fridays and Saturdays and
Saturday and Sunday.
And beverage stocks. Radico has moved up 9%.
You know, I have to get Varun beverages actually.
Actually, you know, Rima, I just want, you know, I think we need to check out if there is something that's come on the telecom space, because as we speak, you know, we just entered the studio around 20 minutes or so ago. Idea is a stock that's locked in upper circuit. I think it's up close to around 10% as we speak. And Industars is the other one as well. So both those two stocks, I don't know whether we have got any kind of details with regard to a potential relief or something that the street wants to read with regard to that. But both these two stocks, they are firing away, both of them at the high point of the day as we speak. So we'll wait by Rima as well as, you know, just checking up. And I think our ticker team as well will try to alert with regard to that. Both those
Bharti is not moving. So usually Industars moves when Bharti does because the fortunes are linked. But Bharti Airtel as a stock, if you're looking at pure telecom industry, Bharti is up close to about 0.5%. But yeah, there has been a little bit of an uptick. So we'll try and find out if there was anything in the budget.
All right. Well, let's welcome Hiren Ved onto the show as well. Hi, Hiren. Good afternoon and good to have you in. Well, the markets have been seesawing in today's trading session, trying to, you know, analyze this budget. Some would argue that maybe, in fact, we required a bit of a more, you know, push with regard to the capex, while others are quite happy with regard to the consumption boost that we've got. How do you rate this budget?
I think it's a very balanced budget. I think what was lagging was consumption, and I think by giving a tax cut, you've given a push to a part of the economy which was struggling. I also believe that people are not thinking through as far as the capex number is concerned. So I think, you know, on day one, whatever hits you on the face, people tend to react, you know, instinctively. But let me give you some sense on the capex itself, right? So they had budgeted for 11.1. They finally revised that to 10.2.
Yes.
We have the numbers from April to December. The December number was a big number, 1.7 lakh crores, right? If you take April to December, then you have essentially 3.4 lakh crores to cover in Jan, Feb and March of this year, and 11.2 lakh crores in all of next year, which means you have to spend 14.6 trillion rupees in the next 15 months. To give you context, the first 9 months, the average monthly run rate was 76,000 crores of capex. If I now take 14.6 lakh crores, then the average monthly run rate for the next 15 months is going to be 97,000 crores. I don't think people are thinking. In no 15-month period have we seen a spending of 15.6 trillion rupees, right? Now, this is obviously assuming that whatever numbers they have given, they are to execute. But if you purely look at the math...
you know, we request you to just hold on to your thoughts for a minute. We do have our colleague Parikshit, who's in conversation with the Commerce and Industry Minister Piyush Goyal. So you might want to listen into this, and thereafter we'll hear your thoughts once again.
Right, joining us right now is Commerce Minister Piyush Goyal to speak to us about Union Budget 2025, the big push for supporting the middle class, startups and the manufacturing sector. Mr. Goyal, how do you think this budget fares in terms of giving more consumption power back to the middle class, because that had been a pain point over the last few quarters?
Well, it's a very transformational budget. It's balanced,
continuity is evident in the budget, but very strategic in its outlook. It has planned a vision very holistically. Now, the benefits given to the middle class. It straightaway results in money in the pocket of the middle class. India has a very rapidly growing middle class with 25 crore poor having come out of multidimensional poverty. You are rapidly seeing more and more people with increasing incomes. Their disposable income becomes much bigger, savings of up to 1 lakh of rupees for all those who are earning up to 25 lakh rupees. And for those who are in a job at 12,75,000 rupees salary, you have zero income tax. I think it's a very, very big message that so far the government had focused on investment-led growth. Now we will have investment-led and consumption-led growth, which is how developed economies of the world have been created. So it's the right pathway to a developed India.
Sir, there was a concern about India's growth going forward, whether there are structural problems. The CA has said that the growth in this fiscal could be between 6.4 to 6.8%. What is your view on what this budget will now do for growth revival for FY25 and FY26?
My sense is this budget and the number of elements it touches, whether it's MSMEs, whether it's farmers, whether it's the youth for creating more job opportunities, our startups, creating the right infrastructure mix, monetizing 10 lakh crores worth of assets for reinvestment into the economy, focusing on ease of doing business, the Vishwas bill 2 also coming in now, working with the states.
मिशन को ड्राइव करने वाला है। ये बजट एक फोर्स मल्टीप्लायर है। ये बजट सेविंग्स को बढ़ाएगा, इन्वेस्टमेंट को बढ़ाएगा, कंजम्पशन को बढ़ाएगा और ग्रोथ को भी तेजी से बढ़ाएगा। मैं वित्त मंत्री निर्मला सीतारमण जी और उनकी पूरी टीम को इस जनता जनार्दन का बजट, पीपल्स का बजट, इसके लिए बहुत बहुत बधाई देता हूं। साथियों, आमतौर पर बजट का फोकस इस बात पर रहता है कि सरकार का खजाना कैसे भरेगा, लेकिन ये बजट उससे बिल्कुल उल्टा है। लेकिन ये बजट देश के नागरिकों की जेब कैसे भरेगी, देश के नागरिकों की बचत कैसे बढ़ेगी और देश के नागरिक विकास के भागीदार कैसे बनेंगे, ये बजट इसकी एक बहुत मजबूत नींव रखता है। साथियों, इस बजट में रिफॉर्म की दिशा में महत्वपूर्ण कदम उठाए गए हैं। न्यूक्लियर एनर्जी में प्राइवेट सेक्टर को बढ़ावा देने का निर्णय बहुत ही ऐतिहासिक है। ये आने वाले समय में सिविल न्यूक्लियर एनर्जी का बड़ा योगदान देश के विकास में सुनिश्चित करेगा। बजट में रोजगार के सभी क्षेत्रों को हर प्रकार से प्राथमिकता दी गई है। लेकिन मैं दो चीजों पर ध्यान आकर्षित करना चाहूंगा। उन रिफॉर्म्स की मैं चर्चा करना चाहूंगा जो आने वाले समय में बहुत बड़ा परिवर्तन लाने वाले हैं। एक, इंफ्रास्ट्रक्चर स्टेटस देने के कारण भारत में बड़े शिप्स के निर्माण को बढ़ावा मिलेगा, आत्मनिर्भर भारत अभियान को गति मिलेगी। और हम सब जानते हैं कि शिप बिल्डिंग ये सर्वाधिक रोजगार देने वाला क्षेत्र है। उसी प्रकार से देश में टूरिज्म के लिए बहुत संभावना है। महत्वपूर्ण 50 टूरिस्ट डेस्टिनेशन वहां पर जो होटल्स बनाएंगे उस होटल को पहली बार इंफ्रास्ट्रक्चर के दायरे में लाकर टूरिज्म पर बहुत बल दिया है। इससे हॉस्पिटैलिटी सेक्टर को, जो रोजगार का बहुत बड़ा क्षेत्र है, और टूरिज्म जो रोजगार का सबसे बड़ा क्षेत्र है, एक प्रकार से चारों तरफ रोजगार के अवसर पैदा करने वाला एक क्षेत्र को ऊर्जा देने वाला काम करेगा। आज देश विकास भी विरासत भी इस मंत्र को लेकर चल रहा है। इस बजट में भी इसके लिए भी बहुत महत्वपूर्ण और ठोस कदम उठाए गए हैं। 1 करोड़ पांडुलिपियों के लिए संरक्षण के लिए, मैन्युस्क्रिप्ट के लिए ज्ञान भारतम मिशन लॉन्च किया गया है। साथ ही भारतीय ज्ञान परंपरा से प्रेरित एक नेशनल डिजिटल रिपोजिटरी बनाई जाएगी। यानी टेक्नोलॉजी का भरपूर उपयोग किया जाएगा और हमारा जो परंपरागत ज्ञान है उसमें से अमृत निचोड़ने का भी काम होगा। साथियों, बजट में किसानों के लिए जो घोषणा हुई है वो कृषि क्षेत्र और समूची ग्रामीण अर्थव्यवस्था में नई क्रांति का आधार बनेगी। पीएम धन धान्य कृषि योजना के तहत 100 जिलों में सिंचाई और इंफ्रास्ट्रक्चर का डेवलपमेंट होगा। किसान क्रेडिट कार्ड की लिमिट 5 लाख तक होने से उन्हें ज्यादा मदद मिलेगी। साथियों, अब इस बजट में 12 लाख रुपए तक की आय को टैक्स से मुक्त कर दिया गया है। सभी आय वर्ग के लोगों के लिए टैक्स में भी कमी की गई है। इसका बहुत बड़ा फायदा हमारे मिडिल क्लास को, नौकरी पेशे करने वाले जिनकी आय बंधी हुई है ऐसे लोगों को, मिडिल क्लास को इससे बहुत बड़ा लाभ होने वाला है। उसी प्रकार से जो नए नए प्रोफेशन में आए हैं, जिनको नए नए जॉब मिले हैं, इनकम टैक्स की ये मुक्ति उनके लिए एक बहुत बड़ा अवसर बन जाएगी। साथियों, इस बजट में मैन्युफैक्चरिंग पर 360 डिग्री फोकस है ताकि एंटरप्रेन्योर्स को, एमएसएमईज को, छोटे उद्यमियों को मजबूती मिले और नई जॉब पैदा हो। नेशनल मैन्युफैक्चरिंग मिशन से लेकर क्लीन टेक, लेदर, फुटवियर, टॉय इंडस्ट्री जैसे अनेक सेक्टर्स को विशेष समर्थन दिया गया है। लक्ष्य साफ है कि भारतीय प्रोडक्ट्स ग्लोबल मार्केट में अपनी चमक बिखेर सके। साथियों, राज्यों में इन्वेस्टमेंट का एक वाइब्रेंट कॉम्पिटिटिव माहौल बने, इस पर बजट में विशेष जोर दिया गया है। एमएसएमईज और स्टार्टअप के लिए क्रेडिट गारंटी को 2 गुना करने की घोषणा भी हुई है। देश के एससी, एसटी और महिला जो नए उद्यमी बनना चाहते हैं उनको 2 करोड़ रुपए तक के लोन की योजना भी लाई गई है और वो भी बिना गारंटी। इस बजट में न्यू एज इकोनॉमी को ध्यान में रखते हुए गीग वर्कर्स के लिए बहुत बड़ी घोषणा की गई है। पहली बार गीग वर्कर्स का ई श्रम पोर्टल पर रजिस्ट्रेशन किया जाएगा। इसके बाद इन साथियों को स्वास्थ्य सेवा और दूसरी सोशल सिक्योरिटी स्कीम्स का लाभ मिलेगा। ये डिग्निटी ऑफ लेबर, इसके प्रति श्रम एव जयते के प्रति सरकार के कमिटमेंट को दर्शाता है। रेगुलेटरी रिफॉर्म से लेकर फाइनेंशियल रिफॉर्म्स, जन विश्वास 2.0 जैसे कदमों से मिनिमम गवर्नमेंट और ट्रस्ट बेस्ड गवर्नेंस के हमारे कमिटमेंट को और बल मिलेगा। साथियों, ये बजट न केवल देश की वर्तमान आवश्यकताओं को ध्यान में रखता है, बल्कि हमें भविष्य की तैयारी करने में भी मदद करता है। स्टार्टअप के लिए डीप टेक फंड, जियोस्पेशियल मिशन और न्यूक्लियर एनर्जी मिशन ऐसे ही महत्वपूर्ण कदम है। मैं सभी देशवासियों को एक बार फिर इस ऐतिहासिक पीपल्स बजट की बधाई देता हूं और फिर एक बार वित्त मंत्री जी को भी बहुत बहुत बधाई देता हूं। बहुत बहुत धन्यवाद।
All right. Well, that's how Prime Minister Narendra Modi seemed pretty pleased with the budget that was just announced. Well, let's take a couple of other pointers that the street has been debating about, and that's the insurance stocks. They've been all over the place. To help us out with, the first take with regard to the insurance companies, we have Ms. Vibha, the CEO of HDFC Life, who joins us on the show. Hi, Vibha. Good afternoon and good to see you, and thanks a lot for joining in. Well, one factor is been on with regard to the changes in taxation, particularly for the new structure, and the other one is on ULIP. Let's take the first point first. Since there will be some kind of leeway given, particularly on the new structure, the fear is that it could result in fewer people taking insurance, and in that regard, hitting your volumes. What do you have to say with regard to that?
Couple of points here, and thank you for having me on this show. The first point is it's widely available data that almost 70% of taxpayers have moved to the new tax regime. That is the first data point. Second data point is with our own policy holders, less than 2%, our analysis shows that less than 2% are dependent on tax, or tax being a reason for them possibly buying life insurance. So really a non-material number, and even that would reduce as we go along. So we have moved a long way from a tax being the reason. This might have been certainly the case a decade ago, but now given innovation in the sector and many other products and emphasis on more and more of protection, I think at least certainly for HDFC Life, but I think even broader for the sector, just given the number of people who moved away into the new tax regime, I don't think that is really a dampener in any form or shape.
Well, that's heartening to hear, actually, Vibha, not just from a market perspective or from a policy perspective, but people are taking insurance because of, for the core interest with regard to insurance, not because of, tax exemptions. Yeah, Prashant?
No, Vibha, hi, afternoon, Prashant here. So you're saying that 2% of ATC roughly contributes about 2% of the new individual premium. That's what you're saying?
ATC is overcrowded, as you know, Prashant. There are many, many things, and if you're salaried, in all probability, when we do an income proxy, we know that even if they did not buy life insurance, their contribution to Provident Fund, other things, ELSs and so on, would have consumed or utilized ATC anyway. So that was not the primary reason or the reason at all for them buying life insurance.
The other change was this redemption of unit-linked schemes, right? And there, for a brief period, there was a misunderstanding. There was a little bit of fear that maybe, it's being taxed at capital gains. But then clarity, Yash told us that it was being added to your income tax, charged at the marginal rate. Now actually it is going to be taxed at 12.5%, which is the capital gains tax. Is that the correct interpretation?
Yeah, absolutely, and actually it's significantly better. So let me just deconstruct, the somewhat of a misunderstanding in terms of what was intended. First of all, the language, and I'm just referring to the language mentioned by the FM. is bringing clarity in income on redemption. So it was to bring clarity and not to introduce anything new, anything that was significantly adverse. Now, post 2021, 1st of February 2021, there was a cap of 2,50,000, and anything above 2,50,000 annual premium was taxed, and it was taxed as and continues to be taxed as capital gains tax. Up to 2,50,000 was tax free. Now, before the policies that were sold before 1st of February 2021, if they adhered to certain conditions, for example, number of times of the ratio of premium to sum assured, then it was completely tax-free, regardless of the quantum. However, there were some other policies that didn't satisfy this multiple of sum assured, and they were being then taxed and continuing to be taxed until today at the highest marginal tax rate. So all that the provisions now unveiled are going to do is to simplify it, to say that anything that is not compliant will now be taxed under capital gains tax, instead of all this hybrid of earlier was a marginal tax rate and so on. That's all there is to it.
Okay.
And just to add on that, if you were to look at, say, hypothetically, if I had bought a policy before February 21 and say I had only say 6 times sum assured, then that would have not been even then eligible for under Section 1010D. And so I would have been paying at highest marginal tax rate. So if a taxpayer has been paying or would have paid a maturity proceeds at 30% tax, now it will be at a capital gains tax rate at 12.5% tax. So actually there is a benefit for those policyholders that would have bought their policies before 21.
Okay. Ma'am, the third important announcement from the insurance sector is opening up the sector to 100% FDI. Will it impact listed players like you, one? And two, how does this change the competitive dynamics? Would some of the unlisted players now get that 100% FDI and therefore become a lot more competitive and aggressive?
While I welcome 100% in insurance, being pragmatic, even when it went up to 74%, it's not like there was a lot of money flow. What could happen is there could be some foreign insurers or foreign investors for whom it's either 100% or it is zero. It could attract people like that, or if they want full control and don't want a partner, say if their brand presence as an insurer somewhere else is extremely strong. But barring that, will it make a huge change in dynamic to the competitive intensity? I don't think so. I think what is really important is some sort of regulatory certainty. I think that is the biggest aspect that will attract flows into the, why only insurance sector, but any sector really. And that's really what could be a game changer in terms of certainty on regulatory outlook.
All right. Thanks a lot, ma'am, for joining in and giving us all your views on the space, assuaging some of the fears that the street had with regards to shift into the new tax regime and that impacting business for you as well. But, meanwhile, while this conversation was on, there was a lot of fear in the jewelry space that will there be any increase in customs duty for gold once again or not? There has been a notification, but there is clarity as well that there is no specific change coming in for gems and jewelry sector. The new tariff line that has been introduced is largely to differentiate between gold which is imported in bar forms and the other forms. Most of the gold imported in the country right now is in bar forms, but increasingly there was some platinum alloys, etc., that were being imported as well, and that had an impact on the overall equilibrium of the market. Okay. So this tariff is on the non-bar gold import, which is not a big portion of this business as well. So on account of that uncertainty, we had seen a big dip on names like Titan and Kalyan Jewellers. We'll just keep an eye out on that. The clarification that has come, there is no specific change for gems and jewelry sector when it comes to this business itself. But Hiren Ved is still with us. Hiren, thank you for waiting patiently, hearing out all the conversations that we've been having on the channel so far. But you were making a point on capex that the street may have been overreacting to this less allocation towards capex. You complete that point, and a word on consumption stocks from here on as well.
Yeah, so just to complete the capex point, right? I mean, as I mentioned, if you look at the data for the first 9 months, the actual numbers that have been spent gives you a run rate of about 76,000 crores a month. They now have put that by March end, they will spend 10.2 as opposed to 11.1, which means that you have another 3.4 lakh crores for this 3 months and a total of 11.2 lakh crores for the rest of the 12 months.
Yes.
Which means that in the next 15 months, you will have to spend at the run rate of 97,000 crores a month, as opposed to 75,000 crores that you spent in the first 9 months of this year. That is actually a 30% increase, right? But as I said, people tend to react very spontaneously. Very clearly, the big delta of this budget is the push given to consumption, and therefore it's very apparent in the consumer stocks. And I believe that rightly so, most of them have been bid up. But even there, I think that to the point that, Sandeep also made, is that substantially going to change the volume growth for the FMCG companies? We have to wait and see. But clearly from a sentiment perspective and the fact that the biggest needle has moved in terms of consumption, we are seeing a significant rally in consumer stocks as well.
Okay, got that, Hiren. Thanks a lot for joining in, Hiren, and giving us your initial take with regard to the budget. But Sandeep, before we let you go, one final question to you. I recall when we chatted the last time around, you were not ruling out further downside. Maybe a 10% correction is something that we could be bracing for. We almost got that, and we have bounced back in the last few sessions. What do you think? Budget is already done now. I mean, most of it is done. That we'll have the RBI. Hopefully, they inject some liquidity. But on ground, sentiment is still a little bit subdued. Earnings really haven't picked up. So what's your take for the remainder of this year with regard to the Nifty's moves? All right, Sandeep, I think you're on mute. We'll just try to... Yeah, Sandeep, you're on mute. If you could unmute yourself.
Yeah.
Please go ahead, Sandeep.
So remainder of the year is some time away, but we are on 1st Feb today. I think in the near term, the market will have some legs and strength. I do expect a rate cut. I do expect, liquidity injection to happen, and all that should be good news for the market in the near term. The earnings picture is not going to be as buoyant as the policy announcements and the rate cuts that I'm expecting. And around the earnings season, again, there could be weakness. That's what I expect. I think the real turning point for this market is how the meeting with President Trump and PM Modi goes in February at the White House, and if India can continue to work, which I do expect with the US, and that will be good news for the markets, and that would be a more longer-term positive picture. But in the near term, earnings will continue, and lack of earnings will put pressure on the market, and that remains unchanged.
I mean, that's interesting. That meeting, the stakes are rising. Prime Minister Modi and Donald Trump, and what can come out of it, some sort of an agreement. I mean, it's certainly a break from the past. Which way is the break going to be is the question. Sandeep, thank you very much for staying with us and, of course, taking all those questions. And we look forward to our next conversation. Thank you. We'll take a quick commercial break here. We'll come back. Nilesh Shah of Envision comes back. You heard from him pre-budget. So he'll give you his take on what we've seen. And we'll also have Shardul Shroff joining in. That is going to be a broader conversation on what Mr. Shroff has made of the budget. Stay tuned, coming back.
Credit enhancement facility for corporate bonds for infrastructure. Public sector banks will develop Grameen Credit Score Framework to serve the credit needs of SHG members and people in rural areas. A forum for regulatory coordination and development of pension products will be set up. To implement the earlier announcement on simplifying the KYC processes, the revamped Central KYC Registry will be rolled out in 2025. We will also implement a streamlined system for periodic updating. Speaker, I present the budget for 25-26. This budget continues our government's efforts to A. Accelerate growth, B. Secure inclusive development, C. Invigorate private sector investments, D. Uplift household sentiments, and E. Enhance spending power of India's rising middle class. Together, we embark on a journey to unlock our nation's tremendous potential for greater prosperity and global positioning under the leadership of Honorable Prime Minister Shri Narendra Modi. As we complete the first quarter of the 21st century, continuing geopolitical headwinds suggest lower global
Welcome back. Absolutely unchanged on the benchmark indices, but railway stocks are tumbling hard and fast. Ircon down 8%, RVNL, IRFC, Jupiter Wagons seeing cuts anywhere between 6 to 8%. And these are stocks which have fallen 30 to 50% from their 52-week highs in the last couple of months. That said, stocks like RVNL have gone up 1,000% in the last 3 years. They've had a massive run up. They've undergoing profit booking. And in the budget, there is no increase in the railway capex for FY26. And that has disappointed the street. For defense, there has been an increase. But for railway capex, it's absolutely unchanged. And the street is a bit disappointed. As we said, the stocks have had a big run up. RVNL, for instance, is up 1,100,000 or 1,100% in the last 3 years. Nilesh Shah, MD and CEO of Envision Capital, is now with us on the show. Nilesh, thank you for joining in. So outside of the big thrust on consumption, tell us, are there any other portfolio plays that you would recommend post the budget?
So, apart from consumption, I clearly believe there's one sector for which budget has been positive is the insurance sector. And I say this because first, of course, is the overall FDI limit has been raised to 100%. Which was widely expected, but nevertheless, that gets confirmed. So that's, I think, a key proposal. The other thing going positive for the insurance sector is that given that the tax exemption limit has been raised for the middle class, the post-tax take-home or the post-tax disposable income goes up. That gives them a lot more leeway to spend on healthcare. And within healthcare, clearly health insurance is a priority. So clearly believe that outside the core consumption space, the discretionary consumption space, I think one sector which benefits straight because of this clearly is the insurance space. I think there's a lot for the sector there.
Enough for you to increase your allocation to insurance if you have a medium to long-term view?
Yeah, I clearly think it should be part of it. And we've essentially been liking more the insurance distributor, the insurance platform company, and not the standalone insurance companies. But maybe with these developments, we'd probably take a hard look at some of the standalone insurers, especially the health insurers. That space is interesting. Some of them have essentially kind of been very aggressive in the underwriting, realizing mistakes. There has been a course correction. In some cases, stock prices have also corrected sharply. So clearly, I think we remain constructive. So maybe it's time for us now to start looking at standalone health insurance companies as well.
There's Star Health and others as well. We have Mr. Shardul Shroff as well, Executive Chairman of Shardul Amarshal Mangaldas and Company. Mr. Shroff, good afternoon. Thank you very much for joining us on this important day. What are the key points? I mean, there's of course the personal income taxation, but from a corporate perspective, we heard a lot of stuff on focusing on ease of doing business, etc. What are the top 2 or 3 things which really will make an impact, maybe not on day one, but which you think are meaningful?
I think the fact that ultimately the income above 24 lakhs will get uniformly taxed at 30%, and that has an impact on the consumption budget and the capital budget for the middle income group. Now, as far as the corporates go, clearly two things which matter are the new Income Tax Act, which is expected in the next week. That's what she said in her budget speech. And she has also indicated that the Income Tax Act would be reduced to half its current form. Now, this is an interesting development because you're having a significant change in the law. I hope they don't bring in new stuff because I've been just reading her speech and there is a lot to be said in relation to the speech. I understand that there's a changed definition of capital asset for the purposes of capital gains. I'll have to pay focus to that. And the other change which is happening is going to be the decriminalization of laws. About 120 laws still need to be decriminalized. And that is something which you will see in the context of how the law is simplified. This budget is a budget which has a simplification as a norm. And besides the Income Tax Act and besides the decriminalization, I think the compliance aspect for small charitable institutions, the fact that ease of doing business has been made part of the budget, the fact that the laws which have become obsolete and which some years ago the government had scrapped by a single bill, all these changes will have an impact on the corporates.
No, absolutely. Mr. Shroff, quick comment today, but I think you'll come back for a more extensive chat over the coming days as we sort of go through and pour over the budget. But for now, let me cut across to my colleague Shireen, who's in conversation with Mr. Hardeep Singh Puri, the Petroleum Minister. Shireen, over to you.
Well, thanks very much, guys. Yes, joining us now live and exclusive here on CNBC TV 18, the Oil and Gas Minister, Mr. Hardeep Singh Puri. Mr. Puri, many thanks for joining us here. As I've been pointing out, Mr. Puri, it's been a focus on... We'll just get him in a second. But of course, as far as the oil and gas sector in specific is concerned, you can see the oil marketing companies under pressure. And that is largely on account of the fact that LPG under recoveries have not been factored in. So that has not been allocated. And that is what we will seek more clarity on. But that's the impact as far as the OMCs are concerned. That is the call there for the oil marketing companies on the under recovery side. But, stocks like RVNL, etc., also under pressure. And that's largely RailTel, largely on account of the fact that it's pretty much status quo as far as the railway capex is concerned. And overall, the capex is at about 11.21 lakh crore rupees. Prashant, we'll come back to Mr. Puri as we get him to join us. But for now, I'll hand it back to you.
I think, Shireen, just one point that you'd like to make. Mangalam just made that point with regard to clarification on gold. And, Titan was the stock that had taken a hard knock. Kalyan Jewellers as well has taken a hard knock. And Mangalam essentially said there's no big change. Just take a look at those stocks. In the last 10 minutes or so, both of them have seen a big recovery from the lows of the day. I think Titan was down close to around 3% or thereabouts. That's recovered. And Kalyan Jewellers, I think Mangalam was down 4% odd. So big recovery. The street is taking note of that clarification.
Yeah, this market currently has been a trader's paradise. If you look at the way the stocks have moved, we earlier saw the way the reaction was on Dixon Tech. Yes. There was, Vodafone Idea, all of them surging, and thereafter they've been sold into as well.
Insurance today.
Insurance as well. All of them. It's been all over the place. So similar is the case that has taken place on, the jewelry space as well. The street was looking at, a proposed increase in the alloys of gold. Anything which has less than 99% pure gold or silver will be, there will be a tariff of 10% imposed on that. That was mainly to differentiate, or put in at par the gold alloy imports versus gold bar imports. Gold bar imports, there was always a certain, duty. And as a result of there being no duty on alloys, there was this arbitrage that was playing on. And now that there has been just normalized. So nothing specifically changes for these companies, and after that big decline, we've seen a recovery, subsequent recovery as well.
Absolutely. I think, markets all told with about, 15-20 minutes to go are just about 15 odd points lower, right? I mean, that's essentially the story by close. And it's been true for the last 2-3 budgets now. The close has been absolutely inconsequential. Flattish has been the close. I think we can toss it back to Shireen. She's got Mr. BVR Subramaniam, Chief Executive Officer, Niti Aayog. Shireen?
That is right, Mr. Subramaniam. Many thanks for joining us here on CNBC TV 18. To start with, what the budget delivers on in terms of growth, what are the big takeaways that you read into as far as the budget is concerned?
Okay, I've been hearing a lot of comments on the budget since morning. First of all, it's an outstanding budget. It supports growth. It will accelerate growth. It addresses all the choke points or all the bottlenecks which will hinder growth. But one point I think a lot of people are missing. If you see the fine print, the GDP of India next year crosses $4 trillion. It's 357 lakh crores. That translates to $4.1 trillion. The budget has been a very finely balanced act. They've addressed both the consumption side as well as the supply side. And I think that's remarkable. And all that has been done where there has been fiscal compression, both on fiscal deficit and also some tax giveaways to the middle class. When about 2.5 lakh crores is the compression that has been done in terms of either less revenues or cutting the fiscal deficit. So I think we must actually compliment the finance ministry, the finance minister, and the team working with her to produce a budget like this. If you want, let me just tell you what the macro picture is. It's a very simple budget. About 50 lakh crores is the expenditure, 35 lakh crores is the revenues, and 15 lakh crores is the deficit. That's 4.4%. She's cut the fiscal deficit from 4.8 to 4.4%. I think it's a solid signal to the external world that India is for fiscal prudence, India is for fiscal stability, and I think it's an excellent signal to the global investor community that while we promote development, we promote growth, and we are going to invest for the future, we will also manage our fisc very, very efficiently, prudently. And the big thing is, this is a budget for Vikasit Bharat. First thing, this budget has to be actually read along with the previous budget. We must understand these two budgets have come with a gap of 6 months. So I think that budget addressed some issues like skilling, employment. I think that was the big focus. If you look at this budget, the big focus here is 2 or 3 things which are very, very apparent. Number one is manufacturing. I mean, it's out there, up there, a national manufacturing mission, an export promotion mission. There's some things which he didn't speak, but you need to read the print and see the schemes. There is one for industrial parks. There is one for industrial housing. There are a whole host of things there. So I think manufacturing and exports is one big leg of the mission. The second one is actually agriculture. India, a lot of people don't realize, has actually more agricultural land under cultivation than any other country in the world, including the United States. And she said that very correctly. India can be the food basket of the world. And I think there's a lot of stuff there to support. I think she's mentioned they've drawn inspiration from the Aspirational Districts program, 100 districts for one program, 100 districts for the other program. And I think that's a big, big takeaway. The third thing, and which is again something which people don't think about very quickly, it's the focus on cities and urban. I mean, that's almost 8 or 10 paragraphs in a speech only on cities and urban. Now, if that is not infrastructure, what it is? It is also infrastructure. And in cities, they're putting aside a 1 lakh crore urban growth challenge fund. I mean, that is for cities as growth hubs. This is not metros. This is for other infrastructure which cities need. And I think this is something which is going to be a very, very big landmark initiative. The other thing, which I don't know how many people are noticing it, the mention of a nuclear mission, a nuclear power mission, and 2 commitments to amend the Atomic Energy Act and to amend the Civil Nuclear Liability Act. This and the boost in budget to the Science and Technology Department. It's about 25,000 crores, which is going for science and technology. That's larger than the increase in allocations for many other areas. So I think these are 4 or 5 big areas in which the budget is actually focusing on. And on the supply side, one thing, the investment in human beings, I think that's big. Education, healthcare, women, children. I think there's a huge increase. If you look at this whole as a group, it's about a 45,000 crore increased allocation for all these put together. I mean, this is investment in people because they're all part of the supply chain. The demographic dividend, if it has to be exploited, if that has to be taken advantage of, you need to invest in people. And 47 looks far away. But for the child being born today, That child is going to be the workforce of 2047. I think that investment is going in.
One of the other aspects of this budget, sir, has been a lot of focus on getting the centre and the states to work together, whether it is to do with the identification of those 50 tourist destinations where the government believes that the centre and the state should partner and work together, or on many of the other aspects that the government has also spoken on, including putting out a competitive index of states and how they are performing in the context of ease of doing business and deregulation, something that we've seen previously as well. On this centre-state compact, how far does the budget take us and how effective do you believe it's likely to be in moving the needle?
I think there is a huge amount of work. I mean, if India has to be Viksit Bharat, then I said this is a budget for Viksit Bharat. There has to be lifting jointly both by the centre and states. And if you see the Urban Challenge Fund, the monies have to be spent by states, which means they have to actually come up with proposals, and the government will match it. They've said they'll give a 25% grant, and they're pushing states towards PPP and private participation. They said almost 50% of that has to come from banks, bonds, or PPP. There's the other one, the one on a couple of other missions which are there. The one on agriculture, the two missions there depend totally on state governments. The one on industrial parks, again industrial parks have to come from state. There is one on industrial housing, again it has to come from state. So there are a large number of initiatives there which are actually funding states, apart from the 1.5 lakh crores which is for the long-term capex loans. This requires states to get their act going. And I think NITI also will have a role there in actually helping states projectize ideas and bringing them so that they can be funded by various ministries. So I think the centre-state compact is coming through very, very strongly. Apart from, I mean, the total devolution going to states in this particular budget is about 25 lakh crores, of which only 15 lakh crores is actually Finance Commission related grants. The other 10 lakh crores is central or centrally sponsored scheme related transfers. All these require states to also get their act going. Even on the reform side, there is this mention of this committee, a high-powered committee on regulatory reforms. There's a clear mention there that the states will also have to be brought on board. I think this also has to be read with the economic survey which was produced yesterday by the CA. The clear mention, let's get government out of the way. I think that's the message there. And when we talk of government there, it is not just central government. I guess 80% of that is state government. Land, labor, electricity, utilities, water supply, roads, they're all state issues, state subjects. So I think this budget not only moves the needle forward on things like manufacturing, agriculture, etc., it also brings to the forefront that centre and state has to work together, and they're putting the money to actually enable states to do what is required to be done. This is on the growth side. I'd also like to mention one thing on the tax side. This is actually addressing, if you've been reading the media for the last couple of months, general talk about, it's on the demand side, there's a lack of consumption demand, etc. I mean, putting 1 lakh crores into people's pockets, and the middle class actually have a very high propensity to spend. This money is not going to go into bank accounts or, or fixed deposit. It's going to circulate in the economy. And it'll also have a huge multiplier effect. So I actually see this addressing one major side of the demand equation. Similarly, I think the capex, I mean, it's remarkable that while there's this fiscal compression, 1 lakh crores given away in taxes, 1.5 lakh crores compression as far as fiscal deficit is concerned, you're still able to keep your capex. It's 3.1%, as good as it can be, and you're also incentivizing states the 1.5 lakh crore thing. And other thing is, she didn't mention it in her budget, but you need to read the numbers. I mean, the investment in railways is being maintained. The investment in roads is being maintained. And you see the additional focus now on cities, which is also infrastructure. We don't forget that, we tend to forget that cities are as important as railways and roads. And I think this is the future. We are rapidly urbanizing, and the budget is investing in high quality urbanization.
High quality urbanization, consumption, and of course growth. The budget ticks all boxes. It's an outstanding budget. Those are the words of the Niti Aayog CEO BVR Subramaniam, and also lays down a framework for a deeper centre-state compact. Mr. Subramaniam, always a pleasure. Appreciate you joining us here on a big day on CNBC TV 18. Thanks very much for your insights and for your opinion this afternoon. Well, we're almost getting to the point of the market close. Prashant, Nigel Mangalam, back to you.
All right, Shreen, thank you very much for that. That's a very interesting conversation there. Markets are down 30 points. There is about, I think, 13 minutes to go as far as closing is concerned. I mean, the trends largely hold. Maybe there is a bit of moderation which has happened in prices, but it's largely consumption. And Mangalam Trend, Maruti, Tata Consumer, Eicher, Bajaj, ITC, Mahindra, Asian Paints, there is not one single infra type name there on the gaining side.
Take that point, and it's been a long time since these names were gaining as well, right? So their time, perhaps, as they say in the movies, apna time aa gaya for the consumption stocks itself. And while we speak about consumption, low-ticket urban, mass consumption itself, some of the urban mass premium consumption is doing as well too. If you're earning more than 25 lakh rupees and you're saving 1.1 lakh rupees on a annual basis on your taxes, what are you buying? Are you looking to buy some luxury watches? Look at Ethos. That stock too has been down in the doldrums from the highs and now suddenly up around 10% odd. So not only are you eating pizzas, a 9% up move is what we're seeing on Ethos as well.
Real estate is the other sector which is doing very well. The real estate index is up more than 3%. Macrotech 6.5%, Prestige up 5%, Parswanath, Sobha, DLF all gaining up. So
I don't know if you save more than you drink more also, because you have United Spirits, United Breweries, both of them at the high point of the day, Mangalam. So.
Urban consumption, all of that doing extremely well. So what we'll do is, while all these consumption-related names are doing well, you're watching us here on CNBC TV 18, but not only on the television. CNBC TV 18 is the #1 business news outlet on YouTube as well, the most viewed channel on budget day among the English business news outlets. CNBC TV 18 clocked more than 3.3 lakh concurrent views on YouTube. This is nearly 3 times more than our nearest competitor. CNBC TV 18 remains your budget headquarters for the last 25 years. And for that, we have no one but you to thank. All you viewers, thank you for your continued support, not only on television, but on digital, and as we speak, on YouTube as well.
Over the medium term. However, our aspiration for a Vikasit Bharat inspires us, and the transformative work we have done during our government's first 2 terms guides us to march forward resolutely. Our economy is the fastest growing among all major economies. Our development track record for the past 10 years and structural reforms have drawn global attention. Confidence in India's capability and potential has only grown in this period. We see the next 5 years as a unique opportunity to realize Sabka Vikas, stimulating balanced growth of all regions. The great Telugu poet and playwright Gurujada Apparao had said, Deshamante matti kadoy, Deshamante manushuloy, meaning a country is not just its soil, a country is its people. In line with this, for us, Vikasit Bharat encompasses zero poverty, 100% quality good school education, access to high quality, affordable and comprehensive health care, 100% skilled labor with meaningful employment, 70% women in economic activities, and farmers making our country the food basket of the world. In this budget, the proposed development measures span 10 broad areas, focusing on Garib, Youth, Annadata, and Nari, spurring agricultural growth and productivity, building rural prosperity and resilience, taking everyone together on an inclusive growth path, boosting manufacturing and furthering Make in India, supporting MSMEs, enabling employment-led development, investing in people, economy, and innovation, securing energy supplies, promoting exports, and nurturing innovation. For this journey of development, our 4 powerful engines are agriculture, MSME, investments, and exports. The fuel, our reforms, our guiding spirit, inclusivity, and the destination, Vikasit Bharat. This budget aims to initiate transformative reforms across 6 domains. During the first 5 years, these will augment our growth potential and global competitiveness. The domains are taxation, power sector, urban development, mining, financial sector, and regulatory reforms.
Five, four, three, two, one.
Okay, no big change on the market screen, just 40 points lower on a 23,000 near 500 kind of index. So gains largely intact, which the market has accumulated from the lows that we've seen last Monday. So this is, of course, just a couple of minutes to go before we wrap up things this Saturday afternoon. Shardul Shroff, of course, has been very patiently waiting by. Shardul, I trust you heard the Niti Aayog CEO speak with my colleague Shireen. And very interesting, forceful remarks. I mean, this is a budget for Vikasit Bharat. But that is one. But the other thing is, there was some at the margin, not widespread, but some fear, especially after the economic survey and what we heard from the CA as well, that 7-8 years now, a corporate tax rate went down from 35% to 25%. And there was a table in the economic survey yesterday as well. Job addition has been anemic, absolutely anemic. So, organized, well-paying jobs, I mean. And that maybe the government will do something to correct that. But what they've done is, of course, lower taxes on the personal income tax side.
Correct.
On the corporate side, thankfully, nothing.
Yes.
You think that's an area of focus going forward?
I think the fact that corporate taxes don't go down is the manner in which the deficit is kept, intact. You have the FRBM and you have to maintain the deficit level below 5%. So not decreasing the corporate tax has the benefit of continuity in terms of taxation. Not reducing the HNI income also has the ability of raising the revenue bucket. And I think all in all, it's a good budget.
Shardul, thank you very much for joining us. Appreciate your time here on CNBC TV 18, and we'll speak again. But good conversation after a long time. Prakash is back with us to wrap things up. There's 4 minutes to go for close. Prakash, some of the moves that we're seeing is all local investors, foreigners, of course, absent today, holiday. Some of these moves on consumption, etc., will last. As Mangalam was saying, there's no counterparty in that sense today.
Absolutely. So these are just gimmicky things. You get some names, you want to kind of trade on that, and you made money on both sides today. So even if you sold, you made money. You bought, you made money. A lovely market, but.
And at times in the same stock.
Absolutely, and that shows that it's so indecisive. It'll take some time because consumption is not something which will change numbers overnight. So and there's no point buying into the dying moments of the market and say, oh, this is the last day you get to buy. But consumption makes sense. So you could choose so many things out of that because everything is undervalued from a relative perspective.
So if you could, just give 3 stocks after today's budget that people should look at.
So let me give you names which, of course, you could do it on Monday, but think about it.
Today.
I was talking about tourism, medical tourism is trying to make a comeback, and Thomas Cook, for example, is one of the names that tried doing this some years back. People have more money, they'll take tours, travel, You buy Indigo, you buy ancillaries in airlines, you buy an updater services, the gig economy plays kind of support you. All these new airports, 52 new destinations, you'll need people to work and ground services and so many things. So that's the way to look at it, saying which pockets of consumption are either too underinvested or underowned, and you'll be able to find a whole list in the value chain. It might not just be just prominent names, but that's what we've been doing. So mining, there's so much being talked about mining. You have AI engineering, Tejo, these are pure mining equipment guys. So, that's where a lot of capex will get directed eventually. So I'm sure we have enough to do, and we'll have to wait for 7th of Feb to really see some decisive moves, but we'll discuss more on Monday.
By the way, Vishal Mega Mart is also one of the consumption plays and affordable consumption plays, and that's up nearly about 7-8%. And NIIT, given the focus on skilling, NIIT Limited has moved up close to about 7%. And Zensar, sort of an unexplained move, but that's up nearly about 10-10.5%, and pretty good volumes today on that.
Right, so let's, I guess, wrap it up on that.
But I think Prakash put it nicely, gimmicky. I think that's the word he used, right? And I think that nicely summarizes, at least not all. I mean, there is, of course, a boost, no doubt. It's just positive consumption.
In the long term, it's going to be very favorable. But right now, you just keep throwing some balls in
Animal
there.
spirits are they unleashed?
It's good if it's not only on one day. Let it build up.
No, I'm saying, does the budget unleash the animal spirits?
Not yet, not yet. No.
All right, so we'll, let Prakash hold on to his thoughts, maybe take the Sunday off, speak on Monday once again, as Ramdev ji said. Monday is Monday.
It's a tamed animal for now.
Unleash himself over the weekend.
Unleash himself over the weekend as well. So, let's wrap it up with the consumption stock doing extremely well. Nothing to show for on the Nifty. Just a 40-point downtick. If you looked at just the open and the close of the market, it wouldn't look like it's the budget day. But if you looked at the consumption stocks, it would look like, okay, apna time aa gaya. Is that how one would summarize the day?
Well, that's right. And if you looked at the railway stocks, you would say it was budget day because nothing came to them. And all those stocks, in fact, they went home with sharp cuts. Ircon was down close to 10%, RBNL down close to around 10%, IRFC as well. And actually, we got used to it in the last few budgets that something will come for the railways. This time around, they missed out, as Mangalam said. Consumption was the top gainer. You had some of these economy-facing companies, Capex, Defense, all of them did sell off in today's trading session.
Just one thing, guys. Mangalam said that this did not look like a budget day. Actually, if you go by the last two budgets, this looked exactly like the budget day on the Nifty. The reason is February 2024, which is before the election, right? The budget Nifty closed down 0.1%.
That was the interim budget.
Final July 2024. Minus 0.1.
Again, that was the first small budget.
And guess what the change is? 0.06% today. So in that sense, and I mean, go back to 2023 as well, I mean, 0.3% lower. So actually, last three budgets, there has been less than 0.5% change on the day of the budget. And actually, even intraday, the moves, I think today the intraday move is about, I don't know, 1.25%, 1.5%. But otherwise, it's been largely, maybe not even 1.5% today. But it's been very quiet on budget days for the last three, and I think now for the fourth budget as well. So I think we're done for the day. Markets ending slightly lower on a very, very kind of a tentative note, but not very much to take away one way or the other. Consumption, the clear leader, and of course the headline from the budget was the personal income tax cuts. And that too not without drama, because as the finance minister initially announced that 4.4 fiscal deficit number, markets assumed there's not going to be too much in terms of help on the taxes front, but she saved the best for the last with that personal income tax relief, which is amounting to about 1 lakh crores or so. From all of us here, it's goodbye. Thank you very much for watching. Rima.
Well, and before we go, let's just quickly tell our viewers that CNBC TV 18 is the #1 business news outlet, even on YouTube. It's the most watched channel today on Budget Day among all the English business news outlets. So CNBC TV 18 has clocked in more than 3.3 lakh concurrent views on YouTube. And this is more than 40 times than our competitor. CNBC TV 18 continues to remain your budget headquarters for the last 25 years, and we would like to thank all our viewers for that. Thank you.
Sir, with your permission, I rise to lay on the table a copy in English and Hindi of the Economic Survey 24-25 along with the statistical appendix. Thank you.
The House stands adjourned to meet 1 hour after the presentation of the Union Budget 2025-26 in Lok Sabha on Saturday, February 1, 2025.
Eighth consecutive time, Finance Minister Nirmala Sitharaman will rise to present the Union Budget in a few hours from now.
I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees. I propose to 1. Remove 7 tariff rates. This is over and above the 7 tariff rates removed in 23-24 budget. The revised estimate of the fiscal deficit is 4.8% of the GDP.
ये बजट एक फोर्स मल्टीप्लायर है। ये बजट सेविंग्स को बढ़ाएगा, इन्वेस्टमेंट को बढ़ाएगा, कंजम्पशन को बढ़ाएगा और ग्रोथ को भी तेजी से बढ़ाएगा।
ये भारत सरकार का बजट है कि बिहार सरकार का बजट है? आपने बिहार के अलावा किसी और प्रदेश का नाम सुना वित्त मंत्री जी के पूरे बजट भाषण में?
The infrastructure is not going for the rest of the country. It's only going towards Bihar because we all know that this year is the Bihar election. So basically, for essence, and Maharashtra has been ignored, and Tamil Nadu, there's not a single word for Tamil Nadu or for any other southern states.
Hello and welcome to this special budget broadcast. This budget puts more money in the hands of the middle class with income tax sweeteners, also stays the course of fiscal consolidation, but only a minor increase in capex outlay. Further, it continues to remain optimistic around divestment, but lowers targets for FY26. I'm Prashant Nair. With me, my colleagues Nigel D'Souza and Mangalam Malu. We're also joined by Amit Jaiswani of Stallion Asset Private Limited and Pankaj Tibrewal of Ikagai Asset Managers. Gentlemen, great to have both of you here as well. Nigel and Mangalam, thanks very much for joining in. The story of the day, I think, arguably was FMCG consumption. So, Mangalam, just wrap it up for us. What happened and how did the market take it?
You know, the most important thing that happened in this budget was the income tax cut, and as a result of which people have more money in their hands, which they're left with after paying lesser taxes as compared to last year. So just to quote the finance minister, no tax incidence on a person earning up to 12 lakh rupees. You save 70,000 rupees every year if you are earning more than 18 lakh rupees, and if you're earning more than 25 lakh rupees, then 1.1 lakh rupees every year is what you save as against the previous tax regime. All of that made all the consumption stocks, specifically the urban consumption stocks, a lot happier. Why is that? Because over the last few quarters, if you've seen, urban consumption has been hitting a bit of a wall. At the same time, that accounts for nearly 65% of FMCG companies' sales. We've heard from all the managements as well. So companies which benefit from a revival in urban consumption sentiment. You had the likes of Jubilant Foodworks, Zomato, Avenue Supermarts, maybe something like a Trent, etc. All of them doing well as well. From the discretionary side, even from the staple side, the ones who have higher, salience coming in from urban India, the likes of Nestle, which gets nearly 80% of its revenue from urban India, or GCPL, which is about 70%, Britannia, Marico, all of them recovered from lows. So that was a positive. Add to all these things the fact that these consumption stocks were under pressure for underperforming over the last couple of years, having come back to their 10-year average valuations as well, and with no incremental benefit or incremental growth coming in or attributed towards capex and railway themes along with defense themes, which have been doing well for the last few years, maybe capital shifts towards the consumption space from here on when it comes to growth from here. So maybe that was the reason. We're going with seize the moment for this budget. Maybe it's time for consumer stocks to go ahead and seize the moment.
Okay, all right, Mangalam, thanks a lot for that. Well, let's welcome our guest, Pankaj, as well as Amit. Thanks, gentlemen, for joining in. Pankaj, let's come across to you first. I think you were hinting to be in the camp that wanted a bit of a capex push. Now, we've got a consumption push and maybe a pretty decent capex outlay as well, though I think most on the street wanted a little bit more on that front. Your reading of the budget, and would you jump more into some consumption-related names now?
Good afternoon, Nigel. Our sense is that we went into the budget with very low expectation. We means the market. And there were concerns that there could be some tinkering with the capital gains tax, how the fiscal number maths will add up to. I think the FM has done an excellent job, if you ask me, in managing growth along with fiscal. And the maths we were looking at behind the fiscal and the assumption on taxation seems to be very realistic. So our sense is that there is an impetus towards growth, but this time it's from investment-led to capex, consumption-led. And I think it's very important to take directions from the government. If you remember, Government 1.0 pre-COVID, I think it was all about consumers, middle class, MSME, exports. Post-COVID, the government direction right from day one was manufacturing, infra-led growth, PLI, and government gave a huge push towards it, where 3 lakh crores became 11.5 lakh crores. Now, since June 24, we have started to see indication that this term of the government could be all about the welfare of the schemes back again. And first you saw the 12 states announcing some welfare schemes to the tune of 3 lakh crores, followed by this significant concession of 1 lakh crore in the hands of people. And if it is followed by interest rate cut, most probably in the 6th Feb credit policy, it will clearly show that government first wants to bring growth this time through consumption, which has been beaten down for the last 4 or 5 years.
And I think
market is clearly showing that shift. Maybe too early to take that call.
Right.
But I think normally these things starts to build in over a period.
And I think
my only sense is that when I look at the portfolios across the board, largely it's consumption, infra-led right now across the portfolios, because the last 4 years, the investment theme has done so well. Most of the portfolios are tilted across the board towards defense, railways, capital goods. And if that continues from a consumption perspective, I think people will have to make that shift. And that shift was clearly reflected today in the market. Maybe next few weeks and months will suggest us whether it was an inflection point and there is a theme change which is happening. I believe it could be that you could be back from value to growth again, and growth this time in consumption, not infra.
Okay, all right. You've been, over the last couple of months, we've chatted, Pankaj, talked about QSR and a few consumption names yourself. We'll come back on specifics, more specifics in a bit. Amit, your sense for the first time in many quarters, you turned a little cautious. Does today's budget change anything? Pankaj used the word, we'll find out in hindsight whether this was a bit of an inflection point for consumption names. What did he make of it?
Prashant, it was a super budget. It was a time had come in markets where only 10 stocks were growing. Like if there are 100 stocks across consumer, paints, autos, etc. Point had come that only 10, 15 stocks were growing and the rest 80, 90 stocks were not growing well. And too much capital was chasing those 10 stocks. And we were also doing the same thing, to be honest. But that worked very well for us in 2024 and 2025. Of course, money left those stocks because money just wanted to leave everything, and that trade got a little disturbed. But coming back, this is a super budget. While that 12 lakh is the game changer for consumer stocks, I believe there is some sentiment change because if you think about it, paints were growing at 0%. FMCG companies, majority of them were growing near 0%. Even the best retailers were not growing more than 20% in the country. So this is a pivot point where the capex on infra, etc., is the growth of capital outlay is now near 0% YOY. So market chases growth, and markets will keep finding newer places of growth. And looks like consumer after 2-3 years will make a comeback. It will not just be the top 10 companies. I think the entire basket, because the valuation is now not as expensive as it used to be. So hopefully we will make money on both sides. The good part, the companies who are executing in bad times will execute even better in good times, and the companies who are not executing in the good times, the bad times, will have a cyclical kind of recovery of valuation and earnings coming in. So let's see. I'm optimistic. We've had a rough January, but I think February has started on a super rocking note.
All right, February started on a super rocking note. The good part is that February started on Saturday itself. The markets were trading. We'll keep an eye out on how it pans out, when full volumes come by on Monday as well. But consumption wasn't the only thing that we were looking at in this budget itself. It was, the insurance space as well. If you look at the finance minister, she brought cheer to the insurance space as well with an announcement of hiking the FDI into the sector. But at the same time, there were worries about insurance seeing lack of growth because people opted for the new income tax as well because of the relief that came in from the finance minister on the income tax too. Yash joins in to tell us what the insurance sector takeaways from this budget have been. Yash.
Well, Mangalam, 3 most important takeaways. The first one, as you started with, increasing the FDI, the foreign direct investment limit in the sector, taking it to its optimum point of 100% from the current 74%. The last time when it was raised from 49 to 74, it got very little attention from foreign players in terms of bringing in the capital. But the regulator, the government, was confident that if a complete autonomy is given to foreign players, where they decide how much capital, the business directions, the policy decisions, then that capital will indeed come in. So increase in FDI was the first one, largely positive for the sector and the unlisted players more than the listed players. The second announcement, which was a dampener and which was largely expected also, was the push which will come from the government side on the new income tax regime. Remember, the new income tax regime does not give you any exemptions like the old one under ATC for life insurance and ATD for health insurance. The government said the big thing, which was essentially no tax for an income of up to 12.75 lakhs if exemption or rebate is taken. And that made the new income tax regime a lot more attractive. The fear is that if people start moving from the old tax regime to the new tax regime, then the purpose of buying insurance for tax saving gets defeated, both life and health insurance. Hence, that was the fear, and the stocks reacted to that particular news. Though HDFC Life on the channel said just 2% of their new business premium comes under ATC. For the sector, it is about 5 to 7%. The third one was taxation on ULIP. So far, ULIP premium of more than 2.5 lakhs, the returns which come in were taxed as other income, which gets computed into your income tax, and accordingly slab-wise you're taxed. But here the government has clarified that now it will be taxed as capital gains tax, which is 12.5%, which will be the lower range of tax as compared to the higher marginal rate under income tax.
Okay, all right. Thanks a lot for that, Yash. Pankaj, does this sector now come under your radar? You know, insurance companies, they were all over the place today. Initially, they saw a big downtick because a lot of people will move to the new tax slab, but then we had clarifications coming in there. Biba as well of HDFC Life did clarify only 2% do fall under that particular bracket. Your view, Pankaj, on insurance stocks?
So overall, Nigel, I think insurance companies are very well positioned. If you look at insurance, when they do well, whenever the yield curve steepens, and I think that's a time when really the insurance companies does well, because the non-par, the protection, the annuity part, they really make money in that. So my sense is that at lower levels, insurance could be a great opportunity from a 2 to 3 year perspective. If our view is that the yield curve is going to steepen from here on. And on 6th of Feb, if the RBI decides to cut rates and there's some steepening in the yield curve, probably insurance is a great play from overall. And valuations have come off over the last 3 years. Insurance as a sector has not given any return. And these are solid franchises from a medium to long-term perspective. And we ourselves are evaluating both the general as well as the life players in this space.
So Pankaj was having a look at that. Amit, does it come under your radar?
So insurance, we don't have any positions as of now. The growth's not picking up. If you look at the entire pack, the insurance pack, the growth has been very mediocre for us to get in. So we've not been we like the marketplace, the market leader, the marketplace market leader, the bazaar here, but that is also a little expensive. And markets have taken the last January, we sold out Policy Bazaar way back, but markets are looking at valuations also very aggressively since January. So you cannot just chase growth. You want growth and reasonable prices both going forward in 2025, 2026. So we let's see. We don't have any positions, or we're not even thinking in those lines. Very complex. Life insurance is a very complex business to understand. It is nobody understands embedded value. At least we don't understand embedded value, how to calculate what futures will look like, because you're taking money in now, you're insuring something that will happen 20 years in the future. It's very, very difficult to understand this
stocks
game.
Basically,
it's very tough. We don't understand it very well. So we only focus on general insurance. That is easier to understand.
Okay.
But I don't see the growth rates that we need.
Right. Got it. Before we wrap, Pankaj, it's based on one event. It's very difficult to change one's view or kind of suddenly go into something. As a trader, you can do it in and out and all of that stuff. But if the game this time around, the saransh, as they call it, out of the budget is more money in the hands of the consumer, it's figuring out where that money will go, right? Amit had some ideas. If you had to pick out one space, could it be, from a listed standpoint, we're trying to connect both. More hands in the consumer, which companies, listed space. So what would those be? 1 or 2 areas you think? Briefly, Pankaj.
So, Prashant, always remember that event could be one-off, but inflection points normally come like this. And if you remember 2021, 22, when we started to get positive on the entire investment theme, we didn't know that in the next 3-4 years, the push from both global and local would be towards investment in terms of PLI, in terms of Make in India and others, and government push. Probably this would be the time when probably government is indicating to us that the next couple of years could be welfare for the people. So we should not ignore that direction from a portfolio composition and portfolio construction perspective. And coming to consumption, I think it's a broad broad sector. What we are positive on is the consumer durable segment, home building segment, not so much on FMCG, but retailing, value retailing, and companies which have executed well in the past with a strong brand franchise. And don't forget, Prashant, that many B2B businesses today, which lie in the investment theme, are price to vision, not price to perfection also, but price to vision. And there we need to be a little now careful that there could be significant derating if growth is below expectation in terms of order inflow or the government push towards spending.
If it is indeed an inflection point, Pankaj, and I take your point completely. That's why, as they say, investing is simple, but it's not easy, right? I mean, because something has worked for very long. If something is changing, it's very difficult to make yourself believe that, well, this is it. But that's essentially what I guess you have to do, and you have to believe as well. Mangal, you want to make a point? Sorry?
No, I was just saying that when he said that, it's not a day that makes the market, or it's a period of time. Maybe this is the time for the consumption stock. So I guess we'll just wrap up on this edition.
Okay, all right. Well, we'll have to do that then. Thanks a lot, Amit, as well as Pankaj for joining in. We've completely run out of time. We'll wrap up on this edition. We'll be back with more news and updates on the other side. Don't go anywhere.
Is near a 2-year low. Can the budget unleash measures to fire up the growth engines?
It's important to understand that this drop happened just 2 quarters in the last 12 quarters that we're talking about. So let us not sort of pick on that one and predict future. This has been a steady growth and a steady sustained growth.
The new boss at Mint Street has unveiled measures to boost liquidity after the deficit hit a 15-year high. With monetary easing expected to begin this month, will the finance minister announce fiscal measures to bolster growth?
System liquidity is still tight and there is deficit.
The system needs more is liquidity. Liquidity is very low at this point, as you know, negative, 2.5 lakh or so.
Artificial intelligence has taken stock markets by storm.
How do we make AI all pervasive?
Powered by AI. AI first.
Artificial intelligence.
Ready for AI. AI is providing some cushion to that.
But as the correction set in, investors are largely hoping for a status quo on taxes to stem the current downtrend. Welcome to India's #1 budget headquarters. Decoding key policies, delivering market-shaping insights, and unlocking the potential of India's growth blueprint. Beaming live from the CNBC TV 18 Motilal Oswal Budget Headquarters.
Well, here's a fallout of the DeepSeek phenomena. The Indian IT Minister Ashwini Vaishnav making the big announcement that the Chinese large language open source model DeepSeek will be brought to Indian servers, will be brought to Indian shores so that it becomes available to Indian users. Sounds simple? Well, not quite. A lot of jargon there. What does it actually mean? Let's help you break this down to understand what really has transpired with this announcement being coming from Ashwini Vaishnav. Now, let's assume, and I'll explain that with the help of an analogy, the analogy of the humble tea, the common denominator between 2.8 billion Indian and Chinese. Now, let's assume that DeepSeek is this Chinese tea in this cup of tea. Now, what's important is that this is an open source AI model. What that effectively means is that the core code, which is the heart of the model, which is the recipe of the Chinese tea, is publicly available. So what the Indian government is proposing is that we'll use this recipe of the Chinese tea and replicate it here on Indian shores, on Indian servers, and have exactly the same model here present in India for Indian users. But that's not all. Let's bear in mind, we like our masala chai, like most things in life, we like a little tadka in our life. So we'll add a little input to this. We'll add some components. We'll add some sugar. We like some sugar in our tea. We'll definitely add some ginger. We like ginger as well. And let's not forget the milk in the Indian tea. And having done that,
All right, joining us right now is Commerce Minister Piyush Goyal to speak to us about Union Budget 2025, the big push supporting the middle class, startups and the manufacturing sector. Mr. Goyal, how do you think this budget fares in terms of giving more consumption power back to the middle class, because that had been a pain point over the last few quarters?
Well, it's a very transformational budget. It's balanced. Continuity is evident in the budget, but very strategic in its outlook. It has planned a vision very holistically. Now, the benefits given to the middle class. It straightaway results in money in the pocket of the middle class. India has a very rapidly growing middle class with 25 crore poor having come out of multidimensional poverty. You are rapidly seeing more and more people with increasing incomes. Their disposable income becomes much bigger, savings of up to ₹1 lakh rupees for all those who are earning up to 25 lakh rupees. And for those who are in a job at 12,75,000 rupees salary, you have zero income tax. I think it's a very, very big message that so far the government had focused on investment-led growth. Now we will have investment-led and consumption-led growth, which is how developed economies of the world have been created. So it's the right pathway to a developed India.
Sir, there was a concern about India's growth going forward, whether there are structural problems. The CA has said that the growth in this fiscal could be between 6.4 to 6.8%. What is your view on what this budget will now do for growth revival for FY25 and FY26?
My sense is this budget and the number of elements it touches, whether it's MSMEs, whether it's farmers, whether it's the youth for creating more job opportunities, our startups, creating the right infrastructure mix, monetizing 10 lakh crores worth of assets for reinvestment into the economy, focusing on ease of doing business, the Vishwas Bill 2 also coming in now, working with the states to get ease of doing business at the state level activated and incentivizing them, focusing on tourism. Now, tourism we all recognize is one of the largest job creators. When she has looked at the minute detail in which she has gone. 50 destinations chosen through a challenge route, but within that, not only will infrastructure be created, marketing will be done. You'll even look at simple things like hygiene and sanitation. Udan supplements tourism. 4 crore more tourists or travelers with 120 new destinations. So that many more airports getting activated, making it easier to reach the destination. Hotels being provided land at affordable prices so that hotels remain affordable. Homestays being given mudra loans now. I can clearly see in this Honorable Prime Minister Narendra Modi's way of working. He always thinks very comprehensively, always thinks out of the box. And actually this budget has to be read in its entirety to understand the interlinkages, how he has connected the dots to prepare India for developed and prosperous future.
I want to speak about the focus on labor-intensive sectors such as leather and footwear. What is the kind of schemes or the policy contours that we are going to now see for support for these sectors? And do you think this is being done with a China Plus One opportunity in mind?
Well, Prime Minister Narendra Modi has always believed in the capabilities of our MSMEs, and it is not only toys and leather. Toys and leather are clearly focus areas where we have a huge amount of success story in our last few years. But he has overall given the MSME sector a big thrust. He has increased the mudra loan limits. He has increased the limits of the very definition of MSME. We are finding that the credit guarantees will be given for term loans, for modernization of these MSMEs. Exporters will be given a thrust with easier finance available. There is a focus on food processing. In a way, when demand gets a boost, particularly through the benefits given to the middle class and greater disposable incomes, when our farmers' income increases, whether it's the focus on increasing their production or productivity, cotton, pulses, even look at the detailing. Makhana is a very nutritious and high demand product. Potential is huge. The farmers who are making makhana, when their product gets processed into a packaged, branded product, its value transforms itself. Just like we are seeing in tea, in coffee. Coffee, our exports went up to over $1 billion this year. So his whole idea is how farmers' income can be increased, how middle class can be getting a more disposable income, how the youth of the country can engage with technology, better skill sets. It's an effort to reach out to 140 crore Indians. Nobody should be left behind, is the mantra that Prime Minister Modi follows.
When it comes to duty, sir, we've got the new administration in the US and they have threatened tariffs. They've started with, of course, Canada and Mexico. They will go to China, and the feeling is they will impose tariffs on India as well. How are you gearing up, and how is that budget, how is this budget making India tariff ready?
Please don't go by feelings expressed by a few people. We have the courage of conviction that our friendship, our relationship with the United States is time-tested. Prime Minister Narendra Modi and President Trump share very deep bonds of friendship. He knows that India is a trusted partner of the United States of America. At the same time, we are wanting to work even closer with the United States of America to expand our relationship, whether it's on bringing back illegal immigrants, whether it's on making sure that American goods get a fair tariff regime in India which does not hurt their business interests, and simultaneously India
stakeholders and interest of education and health has been prioritized. When we're talking about education, from a child in a daycare center, Poshan for women, lactating mothers, till the level of getting skilling done, and also for artificial intelligence and digital reading material for students and in school and colleges. Every aspect of education and bringing in that dimension which is so critical for health. Daycare, cancer centers, and making sure more medical seats are available. These are kind of things with which I'm trying to highlight. The approach in this budget has been pointed on areas which definitely need immediate intervention, outlays, and action along with the states. So Vikasit Bharat is not just being described. I've given you also what we mean by Vikasit Bharat, or what is it that we expect to achieve for Vikasit Bharat. So this budget actually has given you several things on which you can understand how this economy is being planned to take forward a route towards Vikasit Bharat. Secretaries have joined me. All of them would also come in to explain or answer and give clarity and so on. But one thing which I certainly would like to highlight is responding to the voice of the people, which is what Prime Minister Modi is known for in his administration. It's a very responsive government. And as a result, the income tax simplification, which I announced in July, is already completed in its works, and we shall bring the bill in the next week. So the income tax simplification, about which in July budget I have gone in detail to say, the work is completed within 6 months is what I said. Within 6 months we've brought the bill. It'll be coming into the parliament next week. So if we are talking of reform, inclusive of taxation, the work is done. This budget also speaks about rationalization in customs. Tariffs are being brought down, tariffs are being simplified, and also the basket which consisted of so many different tariffs for so many different commodities are now reduced. 8 were taken off earlier, 8 has been taken off now. So whatever remains now, 7 I think remains, and that is all about India's tariff picture. So the usual narrative which goes on, saying is India being too heavy on tariffs? No, you find that we've drastically reduced and also simplified. So this budget has so many things for all of us to talk about. The more important thing about agriculture, which performed very well during COVID and which has contributed to India's food security, The proposals which are mentioned in this budget actually talk about everything to do with beads to bazaar, literally from the stage of seeds, hybrid seeds, resilient, climate resilient seeds, seeds which can give greater output, seeds which are going to be high yielding, all this together to the final point of India becoming the world's food basket. That's the definition I put in when I was talking about Vikasit Bharat. So we are making sure that India's agriculture gets the support across the board, whether it is on seeds, whether it is for skilling the farmers, whether it is rural prosperity, whether it is going to have agriculture and allied industries being set up in rural areas, and whether it is going to be farmers getting better and more loan with interest subvention, not just farmers, fishermen, and also dairy, meaning animal husbandry. So the picture for rural development and the picture for supporting agriculture is across the board, and that has been narrated. The second thing which I would want to highlight is the continued emphasis that we're giving since vote on account budget, July budget, and now on the MSMEs. Whether it is giving them sovereign guaranteed loan, whether it is support during COVID, whether the definition being changed now for better, more inclusive growth in MSMEs, access to bank credit. So MSMEs have also been given greater emphasis. Together with this, I'd like to highlight the point that energy security has had greater attention in this budget. We've highlighted in July budget how even pump storage will have greater attention. Solar and wind and renewable energy has also been taking consistently good importance in our budgets. This time we are talking about the small modular reactors. I've also announced that there shall be 2 amendments, one to the Atomic Energy Act and the other one for the civil liability. All of this is going to help us attain energy security. Insurance sector's FDI limits have been enhanced. That is another important announcement. I'll end my opening statement with 2 things. There is no reduction in the public spending on capital expenditure. Let's put that up front. We continue to place emphasis on the multiplier effect that capital expenditure done by government has shown, has sustained us. We continue on that. And with all this, our fiscal prudence has aligned itself to the glide path that we announced in 2020-21. So we've kept ourselves in alignment. Fiscal prudence has been maintained. And the next year, coming year's estimate is also been given. Well under 4.5 is what we had said earlier. We are also projecting the same. So this is just as an opening statement. There's a lot more to say. But as you all ask questions, so shall we answer. Thank you.
Thank you, ma'am. 225. 225. Mic, please.
Ma'am, this is Shrimi Chaudhary from NDTV Profit. I just wanted to understand, ma'am, here. Ma'am, you said the new income tax bill will come next week. Will that be in the form of draft, and where you are also going to take stakeholder comments on that?
Yes, as a bill, any bill goes to the standing committee, and the standing committee will, of course, consult with so many stakeholders. And then it will come back to us, and if necessary, any more amendments, if need to be brought in, we'll bring it in and take it forward in the House.
So do we expect implementation in this, in the fiscal year, in FY26?
Do you expect what?
Do we expect the implementation of...
Well, let it get passed. I hope it will get passed without much of a difficulty, but it is only after its passing.
Sure. Thank you.
35. Front.
Ma'am, Timsi Jaipuria, this side from CNBC TV 18. As you said, this is a very responsive government, which is why government decided to give these tax rebates. But given the structure that you have announced, ma'am, up to 12 lakh is the rebate. any reason why this rebate has been hiked from 7 to 12 lakh? Is it that the incomes or salaries were not growing up to the mark, which is why government thought that this rebate needs to be given? And also, how do you make up for this 1 lakh crore of revenue loss? Will it not impact the budget estimates? Where will you get this money from?
Gypsy, I think the first question is, you said that this, when the incomes are not growing. This is an income tax. Only when there is an income, then we are talking of the tax. So income has to grow to the level to discuss about the tax. Now, why from 7 to 12 lakh? It is something like, it was earlier 2.2 lakhs. When 2014, it became 2.5 lakh, nobody is going to pay tax. Then there was a 2019 that, we said 5 lakhs, nobody is going to pay tax. Then we said it was raised to 7 lakhs. And now it's being raised to 12 lakhs. So this is a perception that the government feels that, on the average 1 lakh per month, if you have, then you need not pay tax, which means that, we are doing it in two ways. One is we are reducing the slab rates. We are expanding the slabs. If you would have noticed, the slabs are now 0 to 4, 4 to the uniform slabs, and there is a gradualism. There was a thing when we had earlier 20%, then it was jumping to 30%. Now it is 20, we have introduced 25 also. So it's the gradual thing which has been done. Now this benefits every one of the taxpayers, because whatever benefits which has come from the slabs gets transmitted across. So therefore everyone gets a benefit. Now the second part, FM decided that, well, some people should get a little more benefit than merely slab rate reduction would have given. And so therefore an extra rebate. So slab rate reduction for everyone, and extra rebate for 7 lakhs were already getting it, not 7 to 5 lakhs more people have been added. So this is the philosophy behind it. And as you said, why you do it, I think we expect that all that money which they gave, it comes back to the economy in either consumption, savings, or investments, in whatever way they choose to do.
I just want to add to that. If you compare what we've done today with what prevailed in 2014 under the Congress government, what we are, most often the narrative is we should put money back in the hands of the people. I want to please give this comparison for your consideration. If you compare it with the 2014 tax rates under the Congress, for somebody who's earning 8 lakhs, nearly 1 lakh more money is in their pockets today because of the amendments that we've brought in. Meaning, 1 lakh income tax in 2014 is 0 income tax now. So that money is going back to the people in their hands for those who are earning 8 lakhs. For those earning 12 lakhs, 2 lakh was the income tax in 2014 versus today 0 which is proposed. Meaning nearly 2 lakh more money in the pockets of people who are earning 12 lakh. All right, did I stop it there? As Finance Secretary rightly said, across the board everybody is getting benefit because the rates have also been brought down. Not just the rebates being given to up to 12 lakhs. Rates for everybody is being brought down. As a result, take somebody who earns 24 lakhs in a year. The income tax on them in 2014 was 5.6 lakhs. 2014. For them, now it is only 3 lakhs. The rate change has benefited somebody who earns 24 lakh as well. So 2.6 lakh rupees more in the pocket of people who are earning 24 lakh. So it is not just those who are up to 12 lakh because they are not paying any tax at all, because rebate is given to make up for the tax amount which they have to pay. It is not just up to 12 lakh. Even for others, benefit is accruing, and compared to what it was in 14, that much amount of money is going back to those respective money earners. Just compare it with 28 lakh people, meaning those who are earning 8 lakhs. 30,000 rupees more is being put back into their pockets, meaning they would be paying 30,000 in the prevailing tax, 8 lakh salaried wale. Now they pay 0. in the new proposal. Similarly, 12 lakh salary or income wale would have 80,000 rupees tax to pay in the current prevailing taxation rates. They would have 80,000 rupees now go back to their pockets. They don't have to pay that tax. Go to the 24 lakh and compare with the present rates. Present prevailing rate, they have to pay 4.1 lakh rupees as tax. We are saying now they will have 1.10 lakh in their pockets, which they don't have to pay as tax. So we have put good substantial amounts into the pockets of people who deserve to get that. And I would want that to be highlighted compared to what prevailed in 14 and what prevails just this year.
3. Yeah, 3 number.
Ma'am, many congratulations. Something that has been quoted to you as well as the Prime Minister and yesterday the Chief Economic Advisor hinted, in terms of disinvestment and where you should not get into, government. You yourself have been talking from 2020, 21 and subsequently, government should be in less spaces. Has it been a strategy? Because I know you're committed to it, but last budget you didn't refer to it. This budget you have not referred to it. The target still remains there. Is there any impetus that you're going to do towards what has already been announced by the budget? For example, bank privatization of banks and others. That's one. And the second because that was unanswered, you're making it simpler, the income tax, and bringing a thing. Does this mean that you can now not necessarily all the time you can do it through a schedule or an executive order if you want to give some relief to a common man in the new income tax bill that you bring in?
No, giving relief any time will have to go to the parliament, because if we are giving fiscal, relief to people, it has to have approval from the parliament.
So
but what the tax simplification really means is the complication in the language, the circuitous way in which they were explaining things, and adding too many exemptions. You will realize that when we brought in the new tax regime, we didn't want the old tax regime imitated or copied. In that, there are several exemptions given in the old regime. In the new, we didn't want to give any because we wanted a simple, straightforward tax regime in which the rates can be brought down. That's what we've done even now. So the act itself had to be simplified. The attempt now is that.
And on the disinvestment and...
No, all that will continue. There won't be a relenting on any of this.
On disinvestment, if I can add, you see, the last time, July, also the similar questions were asked. We have actually since then, a value creation strategy, which was actually well explained at that time also. There is no disinvestment target per se. Disinvestment and dividend are both looked at together because both are money and money is fungible. And it has got 5 elements. The first element is that we are saying CPSC's performance. The second is we say that we should have communication of performance. The third we say that the capex of the CPSC, which is important, as you know, in terms of accelerating growth. The fourth is the consistent dividend policy. And the fifth is there is a calibrated disinvestment strategy. And the disinvestment also is there. The listing is a part of disinvestment itself. So if you really look at it, both dividend and disinvestment is about 80 to 90,000 crore per annum are being raised, but in a manner which are beneficial to the minority shareholders who are there in all our listed companies.
65, backside.
Good afternoon, ma'am. This is Ruchi Bhatia from Bloomberg News. I have a question for the Revenue Secretary and a question for you. If the Revenue Secretary can give us details on the benefits, the number of people who will benefit from the slab, from the rebates going up from 7 lakhs to 12 lakhs. And the question for you, Madam Finance Minister, a lot of people say that while the absolute number for CAPEX has gone up, the pace of spending has gone down as compared to a few years ago. So is it telling of the institutional capacity in terms of how much capex push can the government really do? And secondly, as far as a lot of analysts do say that the multiplier that capex has is a lot more than the multiplier in the economy than that tax cuts have. What would you say to like some of those concerns as well?
Well, 1 crore people will more benefit between the 7 lakh and 12 lakhs.
Meaning 1 crore more people will pay no tax. On the capex, I think there are two things playing out. One, of course, this particular year has had the elections happening, and because of that, both central government and state governments were catching up with investments, public spending on investments only from the second and the third quarter, so it showed. It's equally true that when fundamental requirements are taken care of, when you're bringing in additional overhead, there is a pace at which those additions happen. So it's not as if there is no thirst for capital expenditure, but now it'll be at a pace in which you can build on each one of the developments that you've done prior. So it'll continue. There are some departments which will need more. There are others who would probably reach a plateau, but expenditure will have to continue even in them. So the heads where the capital expenditure will happen will vary, but expenditure will happen in building assets.
121.
No, capex is also continuing. I have not foregone capex to give for revenue expenditure or consumption expenditure. So both continue. Ajay.
Look at what the overall numbers are. Even in the coming year, the next year, effective capital expenditure, including what Government of India provides to state for their capital expenditure, is 4.3% of the GDP, one of the highest. So it's not just what Government of India departments spend, it is the total money which goes for the capital expenditure. And if you look at that compared with this year's RE, there will be 20% increase. If you look B to B, still there will be a 10% increase. And it is not a capacity issue, it is a new sectors coming up. For example, if you notice, urban sector, the allocations are increasing. That's one area which requires a renewed focus.
121.
On the capex, because this point can come up later also. So one is the capex that we give directly, that is we do as central government directly. Other is that grants that we give to the state governments for the state governments to do capex. For example, for Pradhan Mantri Gram Sadak Yojana, for example, Pradhan Mantri Awas Yojana, and so on and so forth. So if you also include the grants in aid for creation of capital assets, the amount, total amount has gone up to 15.48 crores in the budget estimate for the next year, which is more than 15% increase over the current year's RE. So that is a substantial increase, whereas you consider that the overall expenditure, that is revenue plus capital, has grown by around 7% in the next financial year as compared to this year's RE. So this is almost twice the aggregate growth in the expenditure.
Yes. I would like to also add that on top of this 15 lakh crore capex, which is 11.2 there, and the extra money which goes into revenue but goes in capital building at the hand of the states, the CPSC, the Central Public Sector Enterprises, add about 4 lakh crore as capex from their own resources. So that's also the capex which goes in, and that is not counted here.
Mike on.
तरुण शर्मा फ्रॉम जी बिजनेस। मैम मेरे दो सवाल हैं। एक, मैम आपने इंश्योरेंस की जो एफडीआई लिमिट है वो 74 से 100% करी है, तो क्या मैम जो इंश्योरेंस अमेंडमेंट बिल था उसकी जो बाकी रिकमेंडेशन है उसको रिजेक्ट किया गया है, सिर्फ इसी को एक्सेप्ट किया है 74 से 100% का? दूसरा मैम, मूडीज़ ने कहा है कि जो पब्लिक डेट है स्टेट और सेंट्रल का वो अभी भी 80% है, इस वजह से हम रेटिंग अपग्रेड इस बजट के अनाउंसमेंट के हिसाब से नहीं कर सकते। तो डू यू थिंक इज देयर कंसर्न फॉर द ऑन द public debt?
In
Insurance? Yeah. See, presently the insurance is 74%. Now, fundamentally, whether it's 74% or 100%, the materially doesn't matter. But what actually matters is the psychological feeling that they can actually own the company 100%. Along with this FDI, we are also going to, FM also announced that we are going to simplify certain procedures and rules that we frame, which are including the key management personnel, person who can be chairman of the company, and personnel who can be the CEO and board of directors, and also repatriation of dividends. All those are part of this, the proposed reforms that has been announced by the FM today.
And sir, what about the other recommendation on the draft insurance amendment bill, sir?
That's what we are actually bringing. The draft insurance bill is the one FM has announced, but the main point she has mentioned that 100% FDI, including simplification of existing rules for FDI investing.
The draft bill is also coming.
Is coming.
Yes. And then public debt, ma'am. On the public.
Serial number 2. Finance Minister has also announced, this answer complete his question, the roadmap for fiscal consolidation by the centre. And please have a look at the FRBM statement, which carries the different scenarios. And over a period of next 6 years, how that will be brought down. Similar one, WACT has to be done through the state governments as well. So it is a process which is on.
Number 2. हेलो नमस्कार मैम, मैं आलोक प्रियदर्शी हूँ CNBC आवाज़ से। मैम मेरा सवाल है कि मिडिल क्लास के लिए काफ़ी बड़ी राहत है, 12 लाख तक जो टैक्स छूट दी गई है। इसमें आपने बजट स्पीच में कहा जो कैपिटल गेन से लोग कमाई करेंगे उसको इसमें शामिल नहीं किया गया, उस पर नॉर्मली टैक्स देना पड़ेगा जो स्लैब के रेट से है। तो ज़्यादातर लोग आजकल मार्केट में इन्वेस्ट करते हैं, उनको लॉन्ग टर्म इन्वेस्टमेंट होती है, उनको कैपिटल गेन्स होते हैं कई तरह से, उनको बाहर रखने का, उनको केप्ट असाइड रखने का क्या रीज़न है, क्या उसके पीछे वजह बताएं?
रेवेन्यू सेक्रेटरी उसके ऊपर ज़्यादा विस्तार से बोलेंगे। बाहर रखने वाली चीज़ नहीं है, इनकम का कैलकुलेशन कभी भी वैसे ही होता है, उसमें कैपिटल गेन्स का जोड़ते नहीं है। मैं स्पष्टता के लिए उसको जोड़ रखा है उधर सेंटेंस पढ़ने के समय। ये नया मेरा पद्धति नहीं है कि इसको अलग रखो उसको अलग। इनकम कैलकुलेशन इन जनरल is done without the capital gains. You want to explain it, please?
कैपिटल गेन्स टैक्स जो है वो हमेशा से रेट से अलग है, नॉर्मल इनकम से अलग है। यदि नॉर्मल इनकम में होता, शामिल होता, तो यदि 30% की ब्रैकेट में कोई होता तो उसके कैपिटल गेन्स में 30% टैक्स लगता, तो वो क्या मान्य होता? तो कैपिटल गेन्स को एक अलग टैक्स की व्यवस्था की गई है जो कि कम है। वो इसलिए की गई है कि रिस्क उसमें है और उसमें लोग रिटर्न करते हैं कैपिटल मार्केट को बढ़ावा देने के लिए, तो उसमें 12.5% हमने टैक्स लगाया, तो वो एक अलग रखा जाता है। उसमें एक अलग एग्जेम्पशन लिमिट भी है। यदि वो एक साल में कैपिटल गेन्स आपको इज इट 1.25 लाख 1.25 लाख यदि हो तो वो एग्जेम्प्ट भी होता है, तो और यदि शॉर्ट टर्म हो तो वो 20% होता है, तो वो एक व्यवस्था अलग है। और नॉर्मल इनकम की व्यवस्था है जो कि स्लैब रेट और उससे काउंट होती है, तो इसलिए वो अलग ही है। कंफ्यूजन ना हो इसलिए वित्त मंत्री जी ने स्पष्ट उसको कर दिया था स्पीच में, क्योंकि ये कंफ्यूजन की संभावना थी कि सब लोग ये समझेंगे, तो उसको स्पष्ट किया गया।
46 पीछे बैक साइड एक करके। Hello ma'am, Harsh Kumar from Business Standard newspaper. Ma'am, since government has decided to move ahead with a comprehensive asset monetization plan, so what are the new changes from the previous one, and if you can give some broader aspects of it in detail?
See, as we are aware that till the last year, the first program which was launched in 2021, achievements have been of the order of about 90%, which is a good progress. Based on that success is the next leap, almost double the amount which are coming up. And there are newer asset classes will also be come up. For example, transmission assets, and not just of the Government of India. Government of India doesn't own, say, Power Corporation, Power Transmission Corporation, but state government's assets are also there. So they will do the monetization, and you will hear very soon that entire plan will be out.
Sir, can we, in future, can we get a separate number of asset monetization and disinvestment?
See, this money, what the intent is, there's already an investment or rather the assets are there, which may be owned by Government of India, which may be owned by, say, NHAI, or they may be owned by one of the PSUs. They disinvest, not disinvest, they monetize that asset and use that money to build a fresh or a new project and a new asset, plow back that money back into the economy. So these are not necessarily money coming to Consolidated Fund of India. Very rarely the money comes in. NHAI doesn't invest, money remains with them, they build another road by using that money.
13. Front.
Hi ma'am, good afternoon. I am Kriti, I'm from Informist Media. So right now you just said that your fiscal prudence has finally aligned with your glide path that you had announced in FY21. This year you have given a new roadmap, so mentioned debt to GDP roadmap. You aim to bring down your debt to GDP ratio to 49 to 51% by FY31, considering the nominal GDP would be in the range of 10 to 11. So based on that, and you said that you will peg your fiscal deficit in a way that it goes on to bring down your debt to GDP ratio. So is there a rough estimation of what kind of fiscal deficit you may have by FY31? And secondly, on 31, when you aim to bring down your debt to GDP ratio. Secondly, on funding of fiscal deficit for the next fiscal year, you have brought down the borrowing from small savings from considerably low, it's 16% low from last year. Is there any reason for the limited optimism? Earlier it used to finance 25% of your deficit, now it's going to finance 22% of your deficit. So if you could just elaborate on if there is any reason for that. Thank you.
First of all, that what is going to be the fiscal deficit in nth year from now? The path is very clear that debt to GDP ratio will be on a declining path depending upon what the growth rate in the economies are, what kind of a stimulus measure or a further consolidation measures would be needed. And the roadmap does envisages three scenarios: mild, moderate and high level of consolidation. So do your math there, that the range is coming up. In the best case scenario, the highest growth rate and highest level consolidation can go as low as 47.5%. Very low growth rate, etc., it comes to 52. What the goal is taken is 50 plus minus 1%, and that's showing that physical response to needs of the economy. So that is the goal, but overall trend has to be declining trend. And just see the record. 2021, Finance Minister announced will come down to 4.5 next year. This year we are 4.8, next year is 4.4. So this is a track record, that's what we follow. Your next question?
Small savings, borrowing from small savings.
Here the interest rate, if you notice in the last 2 to 2.5 years, are being set in a manner so that there's neither an incentive nor a disincentive to come to small savings. These are the numbers where we see the trend, and based on the trend we project it. What is being overall is being monitored and watched or said is the overall fiscal deficit, overall borrowings. If more is coming in small savings, less from the market. If less is coming from the small savings, more will be from the market. So our assessment, numbers are slightly lesser than this year. And to that extent, market borrowings we have indicated, which will be slightly less than the current year numbers, marginally lower are there. But if there were to be more inflow of small savings, to that extent, market borrowings will go down. And as you are aware, we do set the calendar every half year.
51.
Hi, ma'am. This is Vikas from The Hindu. First of all, you've left us with very few questions after that announcement on the direct taxes front. And you mentioned that there is a 1 lakh crore, revenue foregone from that move, which is obviously going to help boost consumption and demand and private investment in turn. I wanted to get a sense of the mathematics behind the overall fiscal math that we've worked out for next year. Because despite this tax relief, we are looking at a direct income tax as receipts as a part of gross tax receipts are likely to rise to 33.7% as per the revenue receipts plan, and which is the highest ever, and marks a significant increase over the 24-25 income tax receipts. So I wanted to understand what's what gives, how do you work this out? Because on one hand we are giving away significant relief, where do we expect the gains
I hope
from?
you're not suggesting we shouldn't have done this. Are you? I hope you're not suggesting that we shouldn't have done this income tax, giving money back to people through rebates and other ways.
No, I'm just curious where we expect the buoyancy coming from.
That's fine. All right. It was answered at that time. Anyway.
Okay, let me just see. We are talking about personal income tax, taxes on income. And we had 19.7% growth in 22-23. We have 25.4% in actual terms, and 24-25, 23-24, we had 25%, and 24-25, if you take the RE figures, growth is likely to be 20%. And what we have proposed for 25-26 is a growth of 14.4%. So we have moderated. I mean, we have been growing 20% almost on this plan, and we have made it 14%. Now, coming to buoyancy, our buoyancy was in, for the taxes on income was 2.65 in 23-24. And 24-25 expected buoyancy is 2. And the buoyancy which has been assumed for 25-26 is 1.42. So you would see that we have assumed a moderate buoyancy looking into the sacrifice of revenue which has been done. So we have done our math. Thank you.
9. Third row.
Good evening, ma'am. Considering the government's measure to put more... Sorry, this is Chetan from Business Today. Considering that the government's measure to put in more money into the hands of the public, are you trying to mitigate the impact of a possible Trump tariff trade wars from the US? Or are you relying more on domestic production to ensure that Indians have a shield from the US trade wars if they happen to be so?
Well, I don't think we've gone that far to justify this income tax rate reduction. We've responded to the voice of the people and also made our own assessments, and therefore we've given this. And I thought there was an allegation also that we didn't respond to what may come through the US administration's tariff whatever decisions. Well, I don't think these two are connected, at least in the way in which we like to believe it. You may want to give a different dimension, but no, we have not done it with that intent.
64 at the back.
मैडम नमस्कार, मैं महावीर सिंह बोल रहा हूँ, फ्रीलांसिंग करता हूँ। आपने इनकम टैक्स में बड़ी राहत दी है, हम तो 10 लाख की उम्मीद कर रहे थे, आपने 12 लाख कर दिया एकदम। और मुझे लगता है कि क्या सरकार इनकम टैक्स रिजीम से हटकर एक्सपेंडिचर टैक्स रिजीम की तरफ जा रही है? जो आप इनकम टैक्स में आपने कहा कि इस राहत से 1 करोड़ लोग इससे बाहर हो जाएंगे और इसमें कम ग्रोथ होगी, और दूसरी तरफ आपका जो टैक्स रिसीट है वो बढ़ता जा रहा है, पूरे बजट का आकार बढ़ रहा है, तो सरकार क्या एक्सपेंडिचर टैक्स की तरफ ज़्यादा झुकाव इसका दिख रहा है?
ये सिर्फ आने वाले साल के, मतलब अभी अप्रैल 1 से शुरू होने वाले साल के टैक्स प्रपोजल्स है। आप पिछले साल का रेवेन्यू को देख करके इससे ये कनेक्शन मत निकालिए। हम जनता के लिए, मिडिल क्लास के लिए राहत दिलाने के लिए प्रधानमंत्री जी के आदेश के अनुसार रेट रिडक्शन किया है, उतना ही है उसमें।
47.
Just to add that point, to give you a data point, direct taxes are supposed to increase by 12.7% next year. Indirect tax, which is on the, say when people buy goods and services, is expected to increase by 8%. So that should answer your question.
Yes. Just
हमारी सेंट्रल अमाउंट शामिल है।
एक इसी पॉइंट पे और यदि हम देखें डायरेक्ट टैक्स और इनडायरेक्ट टैक्स का रेशियो, तो वर्तमान साल में आरई में ये 1.39 है, मतलब डायरेक्ट टैक्स लगभग 139% है इनडायरेक्ट टैक्स का। अगले साल ये 145% है। तो जो आप कह रहे हैं उसका उल्टा है, डायरेक्ट टैक्सेस पे अधिक अगले साल राशि प्राप्त होगी एज कम्पेयर टू इनडायरेक्ट टैक्स।
और यदि हम देखा जाए बॉयंसी जो है वो इनडायरेक्ट टैक्सेस में 0.82 है, क्योंकि कस्टम्स जो है वो कोई अभी हमारे लिए एक रेवेन्यू का साधन नहीं है, वो एक बॉर्डर मेजर्स है और बहुत समय में हमने ड्यूटी रिड्यूस भी की हैं, क्योंकि बहुत ज़्यादा हाई टैरिफ लगाने से भी उसके ठीक परिणाम नहीं, तो ये भी नहीं है। और CGST और सेस में हमारा जो बॉयंसी है वो सिर्फ 1.08 है, तो आप देखेंगे कि वो उसमें कोई एक्स्ट्रा हमारा करने का विचार नहीं है।
Ma'am, Prakash Priyadarshi from ET now. Yeah. The KCC limit has been enhanced to 5 lakh. So any assessment on how this decision will boost rural consumption? Secondly, ma'am, the budget document mentions something about sharing transaction details of crypto assets. If you could elaborate.
Sharing transaction details of?
Crypto assets.
Okay. Nagaraj, you want to say on the KCC? Increase in the KCC.
Yeah. This
Let me respond to the question on the KCC. This is to enable those farmers who are doing commercial cropping, they require more more crop loans are required. It will facilitate them, and government will provide the interest subvention for them up to limit of 5 lakhs. It is not first to assist the farmer. It is not a measure to boost rural consumption. That is not the intent. Intent is farmer needed more crop loans. It is to facilitate that. That is the purpose.
And 1 lakh, it's been decided long time ago. High time it was changed.
The KCC loans are given at the 7% rate of interest. It's already subsidized by the government at 1.5%. Now, if the prompt repayment is there, there is another 3% to the farmer. The effective rate of interest on KCC loans is only 4%. Now, with the current announcement by the FM, there will be almost about 26 crore additional budgetary impact for these KCC loans.
45.
जहाँ तक क्रिप्टो का सवाल है, अभी हम क्रिप्टो पे टैक्स लगा रहे हैं, although it's not a regulated entity. जैसे ब्लैक मनी में भी टैक्स लगता है, तो उसी तरह से क्रिप्टो में भी टैक्स लगता है। नहीं, मतलब रेगुलेशन ना होते हुए भी इट इज़ टैक्सेबल। उसमें OECD G20 के अंडर जो हमारा फ्रेमवर्क एग्रीमेंट है, उसमें 2027 से ये निश्चित किया है कि सब जो उसके सिग्नेटरीज हैं वो उसमें इंफॉर्मेशन शेयर करेंगे। तो उसके लिए टैक्स लॉ में ये व्यवस्था की जा रही है कि हम वो इंफॉर्मेशन गैदर करने का फ्रेमवर्क, जो रूल्स हमको बनाने हैं, वो हम कर लें।
Ma'am, Meghna Mittal from Money Control. The union budget has announced a big income tax relief in the new income tax regime.
Where's Meghna?
The budget has announced a big relief in the income tax. So, in the new income tax regime, so how many taxpayers have moved to this new income tax regime? And does this also mean that are we phasing out finally the old tax regime?
75% जो हैं, 75% have already moved to the new tax regime under the individual category.
No, if we are phasing out, I would have said it, na?
The scheme is available, but we expect that almost everyone will shift now.
224.
Good evening, ma'am. Shishir from Hindu Business Line. One of the popular scheme has been sovereign gold bond scheme. We have not seen any of the issue during the current fiscal, and we are not getting any mention for the next fiscal. Does this mean that there is a curtain to this scheme?
Well, yes, Ajay. Yes, in a way, but Ajay can give you the detail. Yes.
See, these are the decisions which are taken. What the purpose is? One, of course, is to raise borrowings from the market for the purpose of financing the budget, and at some point of time whether this asset class is to be supported or not. But the conditions of the recent past, or the experience has been that this has been rather a fairly high cost borrowings for the government. As a result, for the last several quarters, government has not chosen to follow that path. As and when a formal decision is there, you will get to know.
Please go on.
223, left side. We'll take two more questions.
Hello, hi.
After this.
Ruchika Chatravanshi from Business Standard. Just two things. One, if you could elaborate on the BIT that you've said that it will be made investor friendly. So will it be in the line with what we have with the UAE? And one, there is an increase in the corporate tax revenues also that have been projected in the FY26 budget. So what is the reason for you to, why are you expecting like a revival in corporate tax, which has been a bit of concern?
Well, on the BIT, I think I've stated the reason why we want to revamp it, to make it more investor friendly. Yes, I can understand you quoting UAE and asking whether it is going to be in line with that. UAE was a bit more than, it was 2016 plus, it was more than the 2016 version of the BIT. But there is no particular template that I'm adhering to. We want to make it lots more robust and lots more investor friendly.
125.
Ma'am, good afternoon. Karishma from Business Today. Congratulations to you and everybody. Ma'am, Manrega has again, it's seen a stagnant allocation in the last 2 years, despite that this year's FY25's utilization has already peaked until December. Do you expect a mid-year revision? And ma'am, a quick clarification on crypto. When is the DA-led crypto paper likely to be released?
See, on Manrega, I think every year the same question is asked and every year we answer the same question. It is a demand-driven program. If as a result of increased demand, a state or another state, a third state wants money because their demand has to be met, the RE shows the numbers and we increase it. But just because of that, it doesn't mean that my BE will have to be on the enhanced note. Every year the numbers, in fact every crop season, post the crop season, the numbers vary. So as a demand-driven program, we'll certainly respond to it as and when the numbers come. On the crypto, when is the DA paper likely to come? You'll get to know when it comes out.
This is last 6 at the back.
Ma'am, I'm Banikinka Patnaik from the Economic Times. In your speech, you have said that there would be a light touch regulatory framework and that a committee will be set up to review all non-financial sector rules and regulations. So, ma'am, is there, any possibility that it will also include financial sector regulations?
But even as I read the speech, there were two different things. One for the non-financial and another for the financial. The financial is still being looked through the FSDC, whereas the non-financial is where we have appointed or we are asking for an appointment of a high-level committee which will look at the regulations, particularly for compliance, for inspection, for certification. There are ever so many overlaps, friction points, pain points. So to sort that out, our approach is this, one through the FSDC for the financial, and for the non-financial, several of them which are non-financial, the high-level committee.
Ma'am, again, in the nuclear energy space, there is an announcement that there could be more private participation sought. So is there any particular frame in mind that, how we are going to do it or any incentives or something of that?
No, what I've announced at the moment is what stands, and the respective departments will go into the details and they'll come out after the year commences.
Thank you, ma'am. Thank you for that.
Product, which of course is a humble masala chai, is a humble cutting chai. So why are we doing all of this? Why is Ashwini Vaishnav doing all of this? Well, the long and short is, number one, let's not forget the obvious out of the way, which is the masala chai tastes a lot better. But having addressed with the obvious, the other two key components why the Indian government is doing is number one, all the components that we added, the sugar, the ginger, the milk, what that essentially represents are tweaks that Indian engineers will be able to do on Indian servers to this DeepSeek model. Now, why would we want to do that? Well, let's bear in mind there were niggles with DeepSeek when it initially came out. It wouldn't accurately answer questions about, say, the 1962 war or the status of Arunachal Pradesh. So this masala chai, with all these components, represents tweaks that the Indian engineers will be able to do on the Indian servers so that it becomes slightly more comprehensive. But the second and perhaps a larger concern that the government has is that the government doesn't want you sipping tea from the Chinese cup of tea, as that will leave your imprint, and by your imprint I mean your data with the Chinese servers. What the Indian government is essentially saying, let it come here and have a cup of tea from the Indian cup of tea, the Indian server, so that your imprint, your data stays safe within Indian shores. So this chai pa charcha is the long and short of why the Indian government is bringing DeepSeek on Indian servers to Indian shores.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC TV 18 budget headquarters, as we've done for the last 25 years.
Celebrating 25 years of CNBC TV 18.
Markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC TV 18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV 18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV 18 and CNBCTV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV 18 and CNBCTV18.com. CNBC TV 18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube. With me, Shireen Bhat.
India Business Hour live on YouTube at CNBC TV 18 weeknights at 7 p.m.
Presently, taxpayers can claim the annual value of self-occupied properties as nil only on the fulfillment of
Hello and welcome to CNBC TV 18, India's budget headquarters, as we decode what Budget 2025 has delivered. Finance Minister Nirmala Sitharaman presenting her 8th consecutive budget, and it's been a record-breaking budget for many reasons, not just because it is her 8th, but also because she has delivered on the promise of providing relief to the middle class. We had gone into the budget with the focus on the 3 C's, capex, consumption and consolidation, and the budget has managed to deliver on each one, but consumption clearly has been prioritized in Budget 2025. Joining us now is the top brass of FICCI, Harshvardhan Agarwal, Anant Goenka, Shubhrakanta Panda and Naina Lal Kidwai. Naina, gentlemen, appreciate you joining us here on CNBC TV 18. Harsh, let me start by asking you, as I pointed out, prioritizing consumption, giving in tax relief, much more than perhaps what was expected and anticipated. On balance, your big headline from Budget 2025.
Thank you, Shireen, for having us with you. Yes, I think, the tax relief up to no tax till 12 lakh, that's a very welcoming step, from the finance minister. Yes, it has been the expectation from the industry, as well as, our recommendation from FICCI to the government that, yes, we should give some relief on tax for the middle class. But yes, we were not expecting, to the level of 12 lakhs. So it's a very welcoming move, and certainly it will help the overall consumption.
It will help overall consumption. That's the hope, and that is what the budget promises to deliver on. But Anant, let's talk about capex, and perhaps it is short of industry's expectations. But as I've been pointing out, the government has been signalling the fact that capex has perhaps peaked at that 11-12 lakh crore rupee number, coming in at 11.21 lakh crore rupees. Both on capex as well as consumption, the dual power of what that could mean for growth.
Yes, we hope for about a 15% increase on the 11.11 lakh crore investment. That didn't happen. But I'd still say that there are a lot of other indications that signify continued investment in the longer term. 100 gigawatts of nuclear power over the next 20 plus years. I think that is no small number. That will result in a lot more investment in power transmission, distribution and other investments that will come in. The UDAN scheme, where you're talking about regional connectivity, more airports, I think that's another big announcement. Jal Jeevan Yojana, I think that's another one. So across the board there are underlying signals of continued investment in capex for the coming year. Yes, about 10%, 15% lower than what we expected.
Yes, certainly lower on that front, but more perhaps made up for or offset by the boost as far as tax measures are concerned to drive consumption. But Naina, let me come to you now with what the budget has delivered and what you believe this could do as far as accelerating growth is concerned. The budget pegs nominal GDP growth at 10.1%. What do you believe that this could do in terms of amplifying growth momentum from here?
I think what you've heard in terms of consumption and demand is a big amplifier. Capex itself is a big amplifier. There was very clear mention of the MSME sectors and continued focus on that, more so on the labor-intensive MSMEs, special mention of footwear, leather, toys, service sectors like tourism, because employment generation is not just employment generation because it provides jobs, but because it will be the accelerator through demand and consumption. So for me, these are very important aspects. I would just add on the point of infrastructure, almost a relief that the funding plans for the Jal Jeevan Mission and Swachh Bharat Mission continue to see focus, because these are very critical urban deliverables for health and also for the way we keep our rivers clean. And all the sectors, I was just seeing the numbers and the increases then, whether it's the National Ganga Plan by 13%, River Basin Management increase of 70%, Jal Jeevan Mission by 198%, Swachh Bharat 145% increases. So the success government has had in the implementation of these projects is giving them confidence to be able to spend further, because the absorptive capacity of these sectors has demonstrated that they are able to spend this in a meaningful way.
Well, let me welcome Vijay Shankar onto the program as well. Vijay, let's talk about manufacturing, the National Manufacturing Mission being announced. Of course, details awaited on the operationalization, the focus on labor-intensive sectors like leather, footwear, toys, specific mention there of making India a global hub for toys. Even on the exports front, of course, work in progress that will identify sectors and measures that are needed to amp up exports. But on balance, as far as Make in India 3.0 is concerned, what does the budget deliver on?
Budget has delivered a lot on the operational front, Shireen. I think, you spoke about exports and, the export promotion mission between the Finance Ministry and the Commerce Ministry, as well as the Bharat Trade Net, allowing people, rationalization of rates across TCS and TDS. There are a lot of operational improvements which I think really improve the daily work of an exporter who is meaning to do more and crack open new export markets. Including the announcement by the FM on the fact that on transfer pricing you don't keep provisional assessments open for beyond 3 years. I think these are very major steps in relieving the lives of a daily businessman from very many hassles that he has to undergo today. I think there's a huge focus on manufacturing. I think, as Anand said earlier, the focus on the nuclear sector is, apart from the labor-intensive sectors that you spoke about, the focus on the nuclear energy is big. I'd like to also draw your attention to the focus on the shipbuilding and the shipping sector. Extending the tonnage tax relief to inland ships is a big benefit, as they want to focus more on inland water transportation. Focus on import relief for equipment in the shipbuilding sector. Again, I think the marine sector has got huge potential in India. We have just a very small portion of the world trade today as far as ships go, hardly 1 or 2%. And I think the finance minister has focused a lot on that sector.
Yes, he certainly has focused on some of those sectors, but let me get Shubhrakant into the conversation as well. Shubhrakant, of course, plenty on the tax front, the direct tax code, the simplification, etc., taking that forward as far as both TCS, TDS is concerned. Even on the customs duty side, significant changes being announced. On balance, your big headline from Budget 2025.
Well, Shireen, I think the real takeaway from this budget has been the finance minister delivering on our request, and I think everybody had made the point about putting money into people's hands, and I think she's done it in spectacular fashion. Because 1 lakh crores, is no mean amount, and that will find its way into the economy, that will find its way into consumption, and provide a much needed impetus to the growth momentum. But I think the common thread for me, which stood out through the budget presentation, was a focus on reforms. In fact, the FM specifically referred to reforms as the fuel of growth. And in this context, I think talking about strengthening the rules-based approach to a trust-based approach, I think is what will pay a lot of dividend going ahead. And in that context, the measures like the Jan Vishwas bill and many other recommendations that we have made have found its way into the budget. So I think money in people's hand is important. It is going to flow into into the economy going ahead, and the focus on reforms to me are the big takeaways from this budget. Of course, many other aspects in addition to the infrastructure outlay, etc. The funds for creative redevelopment of cities, I believe, is very significant, because as we grow as an economy to cross 5 trillion and more, our cities are going to get larger. They need to be better managed. They need to be more easier to live in. So I think we are really seeing the building blocks of a real modern India being put into place.
Okay, Mr. Kanabar, you're perhaps going to be the busiest of our panel this afternoon, sir. I'm sure the phones are ringing off the hook, trying to understand the many changes that have come in, not just for personal income tax, but also, the simplification related to TDS, TCS, safe harbor rules, the GIFT City, and so on and so forth. What would you say were the key highlights as far as the tax part of this budget was concerned? What would you rate this budget on the tax front?
So before I come to just a humorous comment to say that if the new direct taxes bill, as it is proposed to be introduced after a week, is as simple as she makes out, then maybe I'll have to look for another job. So, but that's a separate matter altogether. But having said that, lots and lots of changes and lots of very welcome changes, Shireen, because if you look at it, most of the changes, for example, you go back and say that your price determination for transfer pricing is not for 1 year, but for 3 years. That's very, very welcome. Similarly, if you go back and say that you have a presence in India, but that is only for the purpose of exports, that will not constitute a taxable presence. Again, very, very welcome. Then again, the sunset provisions being extended for startups, etc., by 5 years. Most of the provisions of the GIFT City being extended by 5 years. Again, all very, very welcome. The extension of GIFT City to leasing of shipping, again, very, very welcome. So huge number of changes. There are some small changes which are a cause of concern. There is, for example, a retrospective amendment on a Supreme Court judgment in the case of safari retreats. I won't go into all of them. But overall, I would say from a tax perspective, a great attempt to simplify and provide a roadmap for the next 5 years rather than deal with a year at a time, which I think is very, very welcome.
Let's talk about what this can mean now as far as the immediate term is concerned for consumption. And Harsh, we'd started to see a pickup as far as rural was concerned. Urban was still feeling the pinch. After what has been announced today by way of tax relief, how immediate do we expect the change to be, the pickup to be? Are we still talking at least a few quarters out?
Shireen, I believe, because this has the potential to bring the money in the hand of the consumers, but yes, it might not happen, immediately from next month. I would say maybe, at least we need to wait for another month, another quarter or so before we see the impact of this on the consumption. But apart from this step of the tax reduction, there are many other areas, which has the potential to improve the consumption, the things that she has done for the rural, the agriculture. So it's a very inclusive budget, where again, if the income at the farm level, at the agriculture level increases, so that also has the potential to boost the consumption. These things also, if the consumption increases, it will help in improving the private investment, which we all are talking about, it's not growing or it's not happening as per the expectation. So I think this is a big move, and this has the potential to impact in many ways in the economy.
Yes, Anant, going back to the changes, and we've also seen, even as far as the auto sector is concerned, specific changes. In fact, the customs duties on CBUs has been cut across cars, and I'm given to understand across two-wheelers as well. Specifically from the auto sector's point of view, anything, and of course lots there on the clean energy transition, batteries, and so on and so forth. Anything there in specific that you liked?
Yeah, I think there was a boost towards electrification. So there was a fair amount of mention on a battery, on rare minerals, and making that more accessible for battery manufacturing and storage. Recycling of battery is likely to get a fair amount of boost over time, and general mention of clean tech across the board. Besides that, I would say there was not much else. We are seeing fairly positive headwinds today on the two-wheeler sector and on the farm sector. Positive tailwinds on SUVs. I think it is the CV and passenger segment that we hope to see increase, but not much mention on the budget, largely on the auto sector, except for a thrust on making EVs more real.
Yes, and there is, of course, an allocation there as far as the PM e-Vahan scheme, etc. is concerned. But Naina, now the budget is done. All eyes shift to the MPC and whether we will see a rate cut being delivered by the MPC. But, two questions there. One, do you expect a rate cut? Two, between the budget and a rate cut, do you really expect a pickup as far as private capex is concerned, which is the ask of the government? And my second question, with the changes that have been brought in as far as the new tax regime is concerned, do you anticipate that we'll now shift, whatever was remaining on the old tax side will now shift and it'll be the sunsetting on the old tax regime? Because the insurance companies, for instance, reacting negatively to that because the tax breaks don't exist on the new tax regime side.
So I think, Shireen, it's a journey. The direction is right. Are we ever happy with what we get? No, we always want more. Does private sector capex go up just because demand and consumption is addressed to some extent through the changes in this budget? Not in itself. So the issues in terms of challenges of ease of doing business, the way trade might develop, even while we look through thrust exports with all the advantages of presenting and being part of a global supply chain with the China plus one type of strategy, is happening at a time where tariffs are going up, certainly from one of our biggest trading partners, being the US. So there are headwinds in trade and exports, which may in fact get in the way of our own thrust in exports. So we can only do what we can do, putting domestic consumption, job creation at the local level, domestic tourism, etc., is in our hands. And even while we push to be part of that export chain. I just think if I can come in on finance and related areas where there's been some stress, as you well know, in microfinance. And I'm glad to see that that got mentioned in this budget with the Grameen Credit Scores framework for SHG members being looked at, because we really don't want to get into the situation we had many years ago in microfinance, or indeed in personal loans, where the credit data does not allow us to capture multiple loans by the same individual. So focus on that, focus on revamping the KYC registry. These are all going to be helpful in terms of the financial infrastructure that we need to help that growth and consumption. And I think if we can also look at what the advantages on the mergers and acquisitions, FDI and insurance bring, these are significant for those industries specifically and should not be forgotten.
Yes, point well taken there, Naina. And of course, just continuing with that, the measures that have been undertaken for MSMEs, including the change in classification, credit guarantee enhancement. Shubhrikant, what does all of that bode as far as the MSME sector is concerned?
So, Shireen, as far as the MSME sector is concerned, I think there was a lot of focus on that, and rightly so, because MSMEs are the backbone of any economy, and India is obviously not only not an exception, but is perhaps even more so in our case here. So something that we have been advocating for, which is an increase in the threshold of the definition of MSME, so increase in the threshold pertaining to investments and turnover, that has been granted, as well as a higher limit for the credit guarantees. So all of that will help, bring more money into SMEs, make credit available. But that apart, I think the general focus in terms of, even the export promotion mission, where it's not just the commerce and the finance ministries, but also the MSME ministry which comes into play, I think is important. We are in a situation where domestically speaking, our fundamentals are very strong. We have the benefit of a unified domestic market, but unquestionably there are external headwinds, and that is something that cannot be ignored. And in that context, I think MSMEs need hand-holding, and this budget does have plenty on offer in terms of hand-holding MSMEs, and see that they continue to play an integral role in India's growth story, thereby making growth more broad-based, more inclusive, and also with a positive impact on jobs. Because as you know, I think the most important outcome of supporting MSMEs is a boost to job creation, especially when a lot has been talked about the labor-intensive sectors, which will get special attention in this budget.
All right, Mr. Kanabar, I'll give you the final say before we close. There's a lot of cheer, a lot of optimism, and a lot of confidence that the budget seems to have delivered on. But many of the announcements are work in progress, are yet to be operationalized. So on balance, where does this leave corporate India? Where does this leave the consumer? And where does this leave our aspiration to try and move beyond that growth range of 6.3 to 6.8%?
So first, you had asked a question earlier that does this mean a death knell for the old tax regime for individuals? And the answer is absolutely yes. If there was any doubt for any taxpayer, individual taxpayer, as to whether they should now migrate to the new tax regime, the answer is yes, they would, because it's far, far more beneficial. And you're very right that nobody wants to have deductions which can be cantankerous. One would rather have a simple tax regime. Second, there was one mention about, and this is only a policy announcement, about a fast-track merger. And I wish that comes sooner rather than later, because NCLT today is overburdened with work. It takes months and months before a merger gets approved. And if a fast-track merger can be announced, that would really ease a lot of tension on NCLT. Coming to your question, this is a very forward, but is always a work in progress. One will wait to see next week as to what does the new income tax bill say. And that, of course, might go to a standing committee, and whenever it gets enacted, if it is indeed simple, it could be a harbinger for a lot of more foreign investments to come into the country.
All right, gentlemen, we will leave it there. Naina Lal Kidwai, Vijay Shankar, Shubhrakant Panda, Harsh and Anant Goenka and Dinesh Kanabar. Always a pleasure. Thanks very much to the top brass at FICCI for joining us here with your quick analysis of the budget that's been delivered by Nirmala Sitharaman. And the hope is that it will unleash the animal spirits, not just of corporate India, but of the Indian consumer as well. We will take a break. There's a lot more coming up on CNBC TV 18. Don't go anywhere. We're back in a moment with more. Well, we continue our coverage here on CNBC TV 18. You've heard from industry, you've heard from the economists, you've heard from the market participants, and it is now time to hear from the budget makers themselves. The secretaries of the Finance Ministry join us now, the Economic Affairs Secretary, Mr. Ajay Seth, and Mr. Nagaraju, the DFS Secretary, here with us on the CNBC TV 18 budget headquarters. Gentlemen, congratulations. Thank you very, very much for joining us. Let me start by asking you about the big C's consumption and the implications and the impact it's likely to have as far as growth is concerned. I'll put this in the context of what the former Chief Economic Advisor, K.V. Subramaniam, is saying about the multiplier impact of the tax cuts that you've been able to do. But I want to understand from you, what do you believe this could mean as far as the percentage of consumption growth as a percentage of GDP, and what this eventually means for growth as well?
See, what the estimated numbers are and what Finance Minister has announced, it means about 1 lakh crore on the income tax side. That will be more money in the hands of the people. How do they use it? Whether for consumption or for their savings or investment, buying house or buying durables, it is their call. Government took a position that yes, it needs to be enhanced and more money in the hands of the middle class. Depending upon where it goes, then multiplier effect will flow from.
But assuming, and I'm going by again what Mr. Subramaniam suggests, that the data says that 80% goes towards using it on spending and using it as discretionary spending, what will the multiplier impact be? I mean, you must have worked out some scenarios and some assessments on the implications.
So that's a matter of how it will pan out to be, and I would not like to jump to what the multiplier impact would be, because that is economy needs at this point of time get more money in the hands of the people. Those who are at the lower end of income, which is about 1 lakh rupees per month, that's the income is there. Now 1 lakh crore, how they will use it, as I mentioned it, and it is left to them.
Okay, it's left to them. What does this mean now as far as the growth assumptions go, sir? Because the economic survey has pegged growth between 6.3 to 6.8%. 10.5 is the nominal GDP growth number that you're working with. Assuming inflation, what should we realistically expect growth? What are you working with? Would it be fair to assume that the economic survey number is the number that you're going with as well?
See, economic survey has assumed 6.3 to 6.8 range. Whether it will be at the nearer to the upper limit or the lower limit depends on that how the global situation pans out to be over next year. And there are several measures announced in this budget which will suggest that we can be closer to the higher limit.
To the higher end.
To the higher limit. That was several measures are there. But that is in the future. But for the purpose of doing the budget mass, what is relevant is a nominal growth in the economy. That number is 10.2 or 10.3%. With a deflator of about 3.5 to 4%. That is what broadly the numbers are.
Okay. On the expenditure side, Mr. Seth, and that's what I want to understand from you. Has that given you the cushion to factor in this 1 lakh crore rupee revenue foregone on account of the tax relief that you've provided? Because there is a difference between the B, the RE, and then of course the B now goes up to about 50 point something lakh crore rupees. But the difference between the B to RE, has that provided you the cushion to move as much as you have on personal income tax?
See, budget making is always trying to balance different competing objectives are there. Number one, fiscal consolidation, which is an overall path, and announced that debt to GDP ratio must be coming down. There's a path. The second one, the revenues, and to some extent the revenues are moderated because of the changes in the income tax slabs and the rebate which have come. At the same time, one could find enough space to provide for priority expenditure. At the same time, announce for or provide monies for the new expenditure. For example, Research Development and Innovation Fund. Similar manner for Urban Challenge Fund and so on. So those and several missions which have been announced, one could provide for it. But yes, somewhere it has to lead to a more modest growth in what otherwise would have been possible. If you notice that on the capital expenditure side, as compared with where we are supposed to be in the revenue expenditure or the revised estimate, from about 10.1 lakh, next year is about 10% increase. That is a more moderate increase. However, on the capital expenditure side, effective capital expenditure, including what Government of India provides to the states for their capital expenditure, there is a good increase of about 20%. So it's a balancing different competing objectives. And I'm glad that the team guided by Finance Minister could find that right balance.
So, do you believe that what we are seeing today as far as consumption is concerned, the slowdown is a structural issue? Because when I asked the Chief Economic Advisor this question, he said he doesn't believe it's a structural issue, but you believe that this was the need of the hour, the intervention on consumption was the need of the hour, and which is what the budget has responded to.
See, the consumption has been growing, say at about 7%. There have been a minor variation from quarter to quarter. But at the same time, as again, you would have heard Finance Minister, you would have heard Honorable Prime Minister responding to what the expectations were. The government responds to those one, a middle class expecting that there should be more monies for them be in their pockets. That's why the government has responded to that and provided them a relief, a substantial change in the, it's not just a relief, it is a substantial change in the tax slabs itself. On top of it, the rebate which has been provided. So it is a all across effective reduction in the rates because of the slab changes and plus the rebate which has been provided.
Yes, both reduction in rates as well as the slab changes that you talk about. But Mr. Nagaraju, let me come to you now, sir, and understand from you what you anticipate as far as credit offtake on the bank side is concerned in light of the many measures that have been taken. And also, do you believe the budget will enable more deposit mobilization? For instance, with what you've been able to do on the senior citizen side, do you believe it will aid deposit mobilization?
Yeah, you're right. The current growth, is about 8.2, something like that. We had agriculture growth rate of little more than 15%, and MSME growth rate again more than little 17%. The growth rates are robust even this year. Now with the senior citizens incentive, I think we expect that more deposits will flow into the banking system.
Okay.
And that we may actually improves our CASA. And thereby the banks will be able to lend more to the needy segments of the society, which may lead to higher growth rates. That's what our feeling.
Okay, so you anticipate that there will be higher growth as well as deposit mobilization
Correct.
on the back of the measures taken. I come back to a comment that came in from the economic survey also, and Mr. Nageshwaran told me that there were, of course, measures taken by the RBI that were warranted to take care of the situation, the overheating, so to speak, especially on the unsecured side, but that may have also put the brakes on growth. Do you believe that that is now a thing of the past, it is behind us?
Yeah, see, the point is, at that point of time, the RBI has cautioned, but it seems the NBFCs, if you look at it, both GNPA, gross NPAs as well as net NPAs, not very high, not very large when compared to the banks. The NBFCs NPAs are about 1.2, 1.3. That's not the way out of the mark. So I think the RBI caution to NBFCs at that point of time may be relevant, but now I think the growth, the lending will move. The also thing is that the lending to unsecured is little steady, not increasing.
Okay. So less, you're not worried on that front any longer, or?
No, see, banks will take their own decisions, but as usual, they need to be very careful to give to unsecured. But it also shows that the unsecured is also a little hesitant to take loans.
Okay, okay. We have limited time and a lot of questions, so let me come to you again, Economic Affairs Secretary, on some of the other measures that the budget has announced. And let's talk about the fiscal consolidation glide path. And I think that's got, positive feedback from everybody that the government has stuck to its consolidation roadmap. But the move towards debt, does that provide you more flexibility as well when we talk about consolidation?
It does provide a flexibility to respond to the needs of the economy in a much more effective manner. If the economy is doing well, consolidation can be a much stronger pace. If the economy is not doing well, that means more support to the economy is needed to the fiscal expenditure. Moderation, there can be moderation in fiscal consolidation those years. And if you see what has been, details have come out, different scenarios have been suggested in the FRBM statement. 3 scenarios of fiscal consolidation have been assumed: mild, moderate, and high case. And of course, again, a combination comes in with growth rate being, nominal growth rate being 10, 10.5, and 11. So there are basically 9 combinations are possible. So that does provide a flexibility, that does provide a transparency, but direction is very clear that we have to build buffers, we have to bring down the debt to GDP ratio, and the goal is 50 plus minus 1%. By the end of the 16th Finance Commission period, which will be the financial year 30-31.
30-31. Let me address some of the other issues. Asset monetization, that was part of the Finance Minister's speech. 10 lakh crore rupees is the target that the Finance Minister has put down as far as asset monetization is concerned. If I remember correctly, it was 6 lakh crore rupees previously. How much was actually achieved on that front? What is the hope as far as the 10 lakh number is concerned?
First round was 5 lakh crore, and we expect that by the end of the financial year, it will be closer to about 90% achievement, which I find is a
90% of the 5 lakh crores.
And having done so, we feel that now the next round should be possible to do it, just double the number, 10 lakhs. And I do expect that in the coming weeks, the sector-wise details will be out.
So has the identification taken place, or will that process start now?
Niti Aayog has done the work. They have sat down with the different ministries, they have sat down with the different organizations which own those assets. The discussions have happened, and my sense is that they are ready with the plan. And of course, we would also like to get states also get into those areas, because several of their assets, especially on the transmission side, are good assets which can be, they can monetize and then plow back their money for fresh investment into the economy.
Okay, so that process is being taken forward by Niti Aayog. Mr. Nagaraju, let's understand the insurance-related measures that the government announced, 100% FDI, that cap moving from 76%. But there are caveats to that as well, including whether repatriation can take place or not. So can you articulate for us what we should expect now as part of the bill that will be tabled?
So while the bill talks about some measures in the both Insurance Act, LIC Act, IRDA, to bring everything into harmony. The main thing was, of course, 100% FDI. The FM's announcement also refers to the rules we framed on the on repatriation and the key management personnel who can be in the insurance companies, all those things. So we comprehensively we are going to address both FDI as well as the rules made which was difficult to repatriation of dividends and the key management personnel. All those we are going to review and simplify.
Review and simplify. I also want to understand from you, sir, you know, we've heard from the government saying that they will infuse more capital into public sector undertakings like RINL. The plan perhaps is to do more for others as well, including MTNL. Is there a concern at the DFS end on the haircuts that banks may have to take in if the government were not to infuse additional capital? See,
on the RINL, there is no cut we have taken, the banks have taken.
Yes.
100%. Whatever is there. Same, all the prudential norms will be applicable for MTN also. As and when addition is required, the government, of course, will take addition. And I don't think, see, whatever is the RBI norms on taking the haircut, that will be applied for MTNL case also. So the banks are not worried at all that, in any case, the government actually doesn't tell the banks what to do. Okay, they are autonomous organizations. So they take decisions based on their own prudential norms.
On the FDI front, and I ask you this in the context of the challenging global environment that we're dealing with, and this was something that the budget had talked about last time around as well, Mr. Seth, you know, this overhaul as far as the FDI regime is concerned, where are we at and what can we expect considering what we're seeing happen in the rest of the world today?
See, this was announced last year and thereafter 2 BITs have been signed with UAE and with Uzbekistan. What Finance Minister has announced today is to revisit the model BIT, which was done in the year 2014, make it more investor friendly. We have moved significantly from the position what was 2014 as a fresh look at the entire thing, considering what the global environment is, make it more investor friendly. And that idea is, yes, of course, to attract more FDI, that first develop India, that is the motto. When they invest here, obviously that entire set of economic activities happen in India.
What will be the thrust of the changes that are being proposed or being considered at this point in time?
I'm not getting into the specifics. What the investors are looking for, that any change in the policy, that they should be protected against that. And we find that our experience of 10 years, wherein there's a consistency of the policy, it is a unidirectional, meaning that it doesn't go to and fro, it moves, keeps on moving towards more liberal, more market-based economy, at the same time taking care of the proper balance between the state interest as well as the investor one. So we have the good experience of 10 years to revisit the 2013 or 2014 model.
I know your timer is going off, Mr. Seth, so he's kept his timer on, so his timer is going off, but in exactly 10 seconds, sir, how confident do you feel at the end of this budget to be able to get to that upper end of 6.8% that the survey highlighted?
100%.
100%?
Yes.
So 6.8 is doable and deliverable?
Is doable, and see that there are several factors which are in our control, or if they are not in our control, we can strive to create conditions within our own economy to bring it closer to that. There are few elements which are beyond our economy, on which we are only a recipient of word external to India. So that uncertainty always remains. But yes, on the day of the budget, I feel fully confident that upper end is doable as a practical number.
Is doable as a practical number. I have many more questions, gentlemen, but we're out of time. But Mr. Seth and Mr. Nagaraju, we'll see you on the CNBC TV 18 budget verdict. Many, many thanks for joining us here today. Thanks very much for your time.
Thank you.
Economic Affairs Secretary and the DFS Secretary, don't go anywhere. The budget makers from North Block with us in a moment. Stay right there.
Thank you.
Considering the difficulties faced by taxpayers, it is proposed to allow the benefit of 2 such self-occupied properties without any condition. To streamline the process of transfer pricing and to provide an alternative to yearly examination, I propose to introduce a scheme for determining arm's length price of international transaction for a block period of 3 years. This will be in line with global best practices. With a view to reduce litigation and provide certainty in international taxation, the scope of safe harbor rules is being expanded. A number of senior and very senior citizens have very old national savings schemes accounts. As interest is no longer payable on such accounts, I propose to exempt withdrawals made from NSS by individuals on or after 29th August 2024. I am also proposing to allow similar treatment to NPS Vatsalya accounts as is available to normal NPS accounts subject to overall limits. The middle class provides strength for India's growth. This government, under the leadership of Prime Minister Modi, has always believed in the admirable energy and ability of the middle class in nation building. In recognition of their contribution, we have periodically reduced their tax burden. Right after 2014, the nil tax slab was raised to 2.5 lakhs of rupees, which was further raised to 5 lakh rupees in 2019 and to 7 lakh rupees in 2023. This is reflective of our government's trust on the middle class taxpayers. I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees. So, detail the indirect tax reforms and changes in direct taxes in Part B. Financial sector reforms.
Welcome back. You're watching our continuing coverage here from the CNBC TV 18 budget headquarters. You've been listening to industry, economists and market participants, the budget makers right here with us. We have a packed house, the Chief Economic Advisor, the Expenditure Secretary, the CBIC Chairman, as well as the CBDT Chairman here with us in our studios. Gentlemen, appreciate you joining us and congratulations on the budget. CA, let me start by asking you, many of the themes that you highlighted in the economic survey being taken forward here in the budget, the consumption story, that's clearly been prioritized in the budget this time around. What will the multiplier impact be as far as growth is concerned, sir?
So, I mean, I can't give you a quantitative estimate, but obviously the fact that there is going to be more disposable income in the hands of the public will naturally boost urban consumption. And more than that, I think the confidence it also generates will be an additional kicker as far as the consumption story is concerned. So in all, basically, I think, and given that the finance minister delivered more than what people had anticipated, I think the feel-good effect will last for much longer than what it might have been the case otherwise. So I think as far as the estimates are concerned, we have to wait and see how it pans out. But I have a very confident and good feeling that the consumption impact of this will be quite significant.
Which will get you to the higher end of that 6.8% that you laid out as the estimate?
Absolutely. In fact, I would say that now I'm willing to say that the risk is that the number is on the higher side of my range rather than towards the midpoint or the lower end of my range.
Okay, so the higher end of the range very much now
looks within grasp.
Within grasp, and that's the upshot of what has been delivered. Expenditure Secretary, let me put the numbers into perspective. The FY25 expenditure at 48.21 lakh crore rupees, RE of 47.16 lakh crore rupees, and the BE of FY26 at 50.65 lakhs. So that's where you've managed to pull out that cushion as far as the personal income tax reductions are concerned, isn't it?
So as far as the BE for the next year is concerned, on an aggregate basis, we are going around 7% more than the RE for this year. But then we have still prioritized capital expenditure. If you take the aggregate capital expenditure both on what is done directly by the central government as well as the grants for capex which are usually given to the state governments, we are having a 17% increase. So within the expenditure, even though the expenditure increase is only 7%, 17% increase is on the capex side.
On the capex side, there was, the expectation, and I discussed it with the CA last night as well, of 20-25% growth in capex. I want to ask both of you that question, even though you said on an aggregate basis the number is significantly higher at about 15 to 16%. But is it now fair to assume that, this 10% kind of growth number is what we should work with, what we should assume? I'll start by asking you, CA.
No, I don't think there is any such set formula here. It depends on the context. So I think, as we discussed yesterday, I think the capex numbers do have to grow because there is a requirement of public sector. I said but some of it could happen in the public-private partnership mode as well. In fact, the FM announced in her budget speech that there will be a greater reliance on PPP mode as well. Yeah. So I don't think we are working on a set formula of a steady 10% increase every year. It depends on the economic context and the requirements.
On the capex side, the expectation is that there will now be a pickup on account of all the sort of pause that was on account of the elections. What's your own expectation on that?
That's correct. For example, last year we have done 9.49 lakh crores on the capital expenditure, just pure capital expenditure by the central government. The first 3 months, because of the election and other reasons, the capex was low. In fact, it's also a part of the economic survey where they compare what was done in the first few months as compared to what is done. So now we have caught up, and in fact, if you compare April to January end, for the figures that we have so far, we have surpassed the capital expenditure of last year by around 30,000 crores. So last year we did 9.49 by March end, so we should easily cross it, and the figure of 10.12, which is by the way the highest ever capital expenditure that the central government has ever done, is easily achievable.
It's achievable. Okay, and you believe that we'll get there by the end of the fiscal year?
By 31st March we should be there, or we might even exceed it a little bit.
Even exceed it a little bit. Okay, that's good to hear. CBDT Chairman, let me come to you now, sir, and understand the big cut that's coming on the personal income tax side. Do you believe that with these measures that have been announced today, the sun will finally set on the old tax regime? Do you believe that this is enough sweetener to move everyone to the new tax regime?
Well, there's definitely a nudge to move to the new tax regime. There are two options. Both the options are available to the taxpayer. One is without deductions and the other is with deductions. We are moving to a regime where the deductions and the exemptions were moving away from there. And we are trying to put in place a simplified tax structure which actually enables determination of income in a straight way rather than actually going in through deductions and all. So that is basically a nudge to the taxpayer also to move to the new tax regime. And in fact, people have responded even in the past. 74% people have already come to the new tax regime.
Do you believe that this will move 74 to 100%?
Well, we would welcome that. We'll definitely welcome that.
Okay. Let me come to you, CBIC Chief. Today, we've also got the GST collection number coming in, and a 12% increase, if I remember correctly, year on year, as far as the monthly collections go. What is the expected run rate now? 1.96 lakh crore rupees is what we've been able to do. What is the expected run rate from here on?
So far, GST collections are concerned, till December, from April to December, the GST revenue collection for the center was increasing at the rate of 10.2%, whereas the ask rate was 10.9%. So this month revenue collection at 12.3% growth on all India basis has given us confidence that we will achieve the target which has been set for GST revenue collection for the center.
On the indirect tax side, sir, there has been, some shortfall in terms of what has been targeted. Do you believe you will be able to meet that, match that, cover it up by the end of the financial year?
In the revised estimates, there is slight downward revision for indirect taxes, and it has been revised from 16.19 lakh crores to 16.02 lakh crores. And that revision is mainly on account of the revenue from the customs duties and central excise duties. So with this growth in GST revenue collection, because in the last quarter, the revenue collection from GST is normally higher compared to Q1, Q2, Q3. So that revenue collection is giving us the confidence that we'll achieve that asking rate of 10.9%. And overall, the ask rate for indirect tax collection is 7.1%. So we are likely to achieve the revised estimates for revenue collection for indirect taxes.
For indirect taxes. Let me come to both of you now and talk about what the thrust of the budget is also on a new center-state compact in many ways. And CA, let me start by asking you about that. Whether it is these loans that the center has guaranteed, or it is sort of bringing this public-private partnership along with the center and states on things like tourism and so on and so forth. How do you see this panning out, and what could it mean when it is finally operationalized in terms of growth?
I mean, what it means is that I think there will be a lot of good practices from multiple states that will get disseminated and diffused, and it will also open up and widen the areas of cooperation across well beyond the very sectors that are talked about. I think it will only pave the way for a faster implementation of many of the government projects, including in other areas. So I think this is exactly what is needed, because much of the low-hanging fruits with respect to many of the policy actions at the union government level have been plucked. So now much more needs to be done in terms of collaboration at lower levels of the bureaucracy between union and states, and the budget has taken very important steps in that regard.
On some of the other schemes that were announced, the agriculture scheme, a much more holistic view being taken there as far as this Dhan Dhanya scheme is concerned, or even putting more money into the scheme for stalled housing and so on and so forth. Again, the multiplier impact of some of these schemes, Mr. Govind.
As far as if they are stalled projects, or even, for example, stalled capital projects for which we give some money from the government of India, if they are completed, obviously the multiplier effect will come. So multiplier effect generally comes when the project is completed and starts giving benefits. So I think in that sense, the states have a major role. In this year's budget, 25.60 lakh crores is to go from central government under various heads to the states. That includes devolution also. In fact, if you see, the central government budget is increasing by around 7% RE compared to the next year's B, whereas the money which is going to the state government as per the budget is going to increase by 11%. So there is a higher proportion of money which is going to go to the state government, and state government support and cooperation is very vital to have the growth prospects up.
CBDT Chairman, let me ask you about the tax bill which will be taken to Parliament, and the Finance Minister made it clear that it will be sent to the Standing Committee, will be tabled in Parliament next week. Now, that lays out the roadmap as far as simplification is concerned, and many tax experts were commenting that they may be out of a job at the end of that if that kind of simplification is in fact taken forward, but simplification seems to be the thrust, not so much rationalization at this point in time.
See, rationalization has happened over a period of time. Now, this Income Tax Act is a 1961 act, and over a period of time, a lot of redundancies have crept in. Some provisions have become obsolete also, and there are some repetitive provisions that are there in the act. Plus, the language in the act is also a bit convoluted, and at times normal taxpayer finds it difficult to actually go through that language. So the attempt now is to simplify the language and to make it easy for the taxpayer to understand the provisions of law. So, complexities in the transactions would happen, it would remain, but then the language would be simple. The way we would express the provisions in the law that would be simplified. You see, I would give you one perspective that even this time, when we have brought out these amendments in the bill, simultaneously we have also issued frequently asked questions.
Yeah.
Right. So that is an attempt to actually explain to people what is the intent behind the provisions and the amendments. So that's one way of simplification. So the same logic and philosophy we are actually adopting here when we are bringing this.
There was a fair degree of nervousness on whether there would be any changes as far as the capital gains tax regime was concerned, and we'd already seen that hike coming in last year. The expectation was that perhaps you would leave it as is, or maybe provide a little bit of relief, or certainly provide relief on the STT side, which has seen a significantly higher collection over your target, and you've set an even stiffer target for STT.
Yeah, so we have provided, you see, STT, of course, the collections have been encouraging, and we have kept it at that. We have not disturbed it because now we were actually moving towards this tax slab sort of relaxation. And STT is as per our expectations, so we have kept it like that.
Let's talk about the changes on the indirect tax side. The tariff changes that have come in, the finance minister had said that this is in continuation to the announcements that came in last budget as well. If you can explain to us where this leaves things, and also in light of the threat of the Trump administration invoking tariffs, including on countries like India, have not been specified yet. How prepared, how ready are we?
On this, the objective was to simplify the tariff rate structure. Secondly, to provide the effectiveness to the Indian industry to remain competitive. Third was to provide sector-specific higher protection for a short duration. And fourthly, it was for ease of doing business. Towards that, from the earlier rate of 15, it has been reduced by 7 rates, and now the total rates which are there in the tariff are only 8. So the rates which have been removed are 25%, 30%, 35%, 40%, 100%, 125%, and 150%. So India was mentioned is having a very high tariff rates. So those high tariff rates have been now removed, and now the rates which are remaining are 0, 2.5%, 5%, 7.5%, 10%, 15%, 20%, and then 70%. And the logic behind keeping these rates is that from 0 to 10%, it is a graded structure, and items have been placed in this graded structure in a manner that raw materials are generally at 0% or 2.5%. The goods after these raw materials are processed, and in intermediate stage, those are at 5 and 7.5%. Capital goods have been kept at 7.5%, finished goods at 10%. Apart from that, on 15% and 20%, mostly items are of such nature which are either covered under PMP scheme or PLI scheme. And apart from that, there are certain items where there were surge of imports. Those items have been kept at these rates. So the items which were at higher rates now have been brought down to the lower rates, but in most of the cases, effective rate of duty has been kept unchanged by imposing AIDC on certain items wherever it was felt that duty can be decreased without impacting the industry. There the rates have actually been lowered. Apart from that exercise, another thing which has been done is that items which were subject to cess as well as surcharge, there the surcharge has been exempted. There are 82 such tariff lines where the surcharge has been exempted. In addition to that, there were effective rates unconditionally. Those have been now brought in the tariff. And there are 51 such tariff lines where the effective rates have now been tariffized. So it is easier to refer to the effective rate because it is there in the tariff. So with these objectives, this exercise has been conducted, and so it will bring a lot of simplification in the tariff structure, and the average rate, average custom duty rate has now come down from 11.65% to 10.66%.
Okay.
And now it is nearer to the rates in ASEAN countries.
Okay.
But this is in respect of industrial goods. We have not done this exercise in case of agriculture goods and textiles.
Okay, but coming back to my question on how prepared we are for the eventuality of tariffs being administered by the Trump regime. They've talked about pharmaceuticals even when we talk about the threat of tariffs on India. How ready are we?
So far, these are just certain statements have been made, but presently there is no such tariff which is being imposed on the Indian exports. So as the things will evolve, measures will be taken accordingly.
But see, on that, to cope with the possibility, and today is the first day when the tariffs come in on Mexico and Canada, but to prepare for that, how ready are we today? And on the issue of overcapacity and dumping in India, the need for safeguard duties and so on and so forth, the steel sector has been asking for that. This matter is under active consideration. Do you believe that there is a case to be made across different other sectors as well?
I think it will be difficult for me to comment on it because these are all sector-specific situations, and different administrative ministries in collaboration with the Commerce Ministry will have to decide on how appropriate, when, how much and for how long, etc. So it will be not appropriate for me to comment on that.
But on the tariff possibility and what that could mean for India if the US
Look, I think it's speculative. Let's wait and see whether, because after all, in general, exports as a percentage of GDP in India has been rising, but of that, exports to the United States comprise of both goods and services. So we need to wait and see which are the areas that attract tariff, if at all they do, and how to prepare for it. I think it is these are all something that we need to approach carefully rather than discussing them in public.
No, fair enough. I understand that, and we don't even have the details at this point in time. But let's now address GST. Of course, that's not a matter for the budget, but since we have moved on personal income tax and provided relief on personal income tax, the hope is that we move as far as rationalization on GST is concerned as well. The GOM has been set up. It's been looking at this matter. The matter was deferred at the last GST Council meeting. What should we realistically expect, Mr. Agarwal?
In GST, the exercise is done in a completely different environment. In custom side, it is the union government which has to do this exercise. In GST side, basically the exercise is done by the a GOM has been set up, and GOM has to present the report to GST Council. Their union as well as states are part of that council, and issues are deliberated, and then decisions are taken, recommendations are made, and then the rates are notified. So it's altogether a different exercise, but GOM is going into all the aspects. They are very comprehensively looking into the tax slabs, how the items have been placed on those tax slabs, what is to be done to remove the classification disputes. So all those aspects, including the revenue, because revenue is very important for the states as well as for union. So all these aspects are being looked into by the GOM. And once they are ready with their report, it will be presented before the next GST Council or the
Do we have a date yet for the next GST Council meeting?
Not yet.
Not yet, but that I would imagine that once the elections are out of the way, at least in Delhi, we will perhaps have more clarity on that. But at the end of all of this, and the Finance Minister in her speech and then of course in her briefing also made the point that the tax cuts will impact everybody and not just those who fall under the 12 lakh rupee bracket. What does this mean now, sir? And I was asking the CA that question as well, but what does the data tell you in terms of the implications and the impact that it's likely to have?
See, the changes that we have made in the tax slab, that is applicable to all the taxpayers, non-corporate taxpayers. So therefore, this would, while you calculate the tax liability of a person, be it income of 12 lakhs or 24 lakhs or even more, these tax slabs would be applicable. Now, as against earlier tax slab of 0 to 3%, zero rate of tax, and then 3 to 7, 5%, and so on and so forth. Now, in general, the tax has changed, and the slabs are 0 to 4% is 0, 4 to 8 lakhs is 5 lakhs, and so on. And as a result of that, a person, taxpayer, with the income of 12 lakhs, of course, otherwise he would have the new tax slabs paid a tax of 60,000, but through rebate, the tax liability has been brought to 0. Similarly, if we talk about a person having a total income of 24 lakhs, the net benefit that the person would get is of 1,10,000. And this would be applicable for all the income above 24 lakhs. So therefore, all the taxpayers across the board, they stand to gain benefit out of this. And the total, implication of this entire exercise would be about 1 lakh crores.
Right.
So this is what this amount would be, of course, available to the people to take a call as to
put back into the economy through either spending on it or savings and investments.
Yes.
So that is what we'll have to see. Mr. Govil, let me ask you, on the back of the many announcements that have come in, and several are works in progress. For instance, on the deregulation front, the expert committee will provide its recommendations, and that process is expected to take about a year or so. There are many others on the export front, for instance, as well, that is a work in progress. What are the realistic timelines, especially on the export front? Because it is a challenging environment that we are dealing with, that we should realistically expect.
On the export front, I think the Ministry of Commerce has already done a significant amount of groundwork, and we hope that they will be ready soon to make a comprehensive proposal and bring it before the authorities for approval. So I think over the last, 5-6 months, they have been working on it. So I think they should be ready with it pretty soon.
On the defense capex side, I think there is some disappointment that the defense capex is not as or is not proportional to what the needs are at this point in time. Would you have a comment on that? Because that's, I think, only up 1.8%, under 2% at this point.
So the way we look at it is relating to the requirement of the sector. Now, defense has a peculiar procurement structure. Most of the expenditure on defense happens in large-scale procurements or procurements of expensive equipment. And that procurement process is lumpy. Sometimes you might have a lot of orders being given, sometimes there is a lull. So it is hard to make an accurate estimate year by year and to increase it by a certain percentages every year. For example, this year we expect, and the RE figures will show that the defense may not be able to completely utilize the budget estimate that they had given, so the RE is less than the B. But the next year we have, the proposals will show, the next year's B is more than the B for this year. So we hope that it will pick up next year.
Okay, so let me end by asking each one of you and you can now speak much more freely than you could yesterday, CA. So let me ask you, for you, what you believe is the big headline from Budget 2025 that you would like people to focus on?
It's putting spending power back in the hands of the people.
Putting spending power back in the hands of the people. Mr. Govind?
Apart from that, fiscal prudence.
Fiscal prudence. Mr. Agarwal?
The steps which have been taken for doing ease of business and trade facilitation.
Okay. Mr. Agarwal again.
So it is one, trust first, the basic philosophy of trust first that guides the budget direct tax proposals, which reflects from the reduction or change in the tax slabs, as also affording the taxpayer a facility of filing an updated return. So that is another aspect. So there are then rate rationalization in TDS and TCS. So trust first is the theme, basic theme, which guides the direct tax
Yes, and we
proposals.
have seen the TCS and TDS simplifications and rationalization coming in as well. But the headline, if I could pull it out from these gentlemen, is that they feel very confident of being able to achieve the higher end of the estimate that was put down by the Chief Economic Advisor in the economic survey as far as growth is concerned at 6.8%. It's within grasp. In his words, it's within grasp. Mr. Nageshwar, Mr. Govil, Mr. Agarwal, many thanks for joining us here on CNBC TV 18 on the Budget Headquarters. The budget makers will continue. Don't go anywhere. We're back in a moment with more.
The FDI limit for the insurance sector will be raised from 74 to 100%. This enhanced limit will be available for those companies which invest the entire premium in India. The current guardrails and conditionalities associated with foreign investment will be reviewed and simplified. The services of India Post Payment Bank will be deepened and expanded in rural areas. NABFID will set up a partial credit enhancement facility for corporate bonds for infrastructure. Public sector banks will develop Grameen Credit Score Framework to serve the credit needs of SHG members and people in rural areas. A forum for regulatory coordination and development of pension products will be set up. To implement the earlier announcement on simplifying the KYC processes, the revamped Central KYC Registry will be rolled out in 2025. We will also implement a streamlined system for periodic updating. Speaker, I present the budget for 25-26. This budget continues our government's efforts to A. Accelerate growth, B. Secure inclusive development, C. Invigorate private sector investments, D. Uplift household sentiments, and E. Enhance spending power of India's rising middle class. Together, we embark on a journey to unlock our nation's tremendous potential for greater prosperity and global positioning under the leadership of Honorable Prime Minister Shri Narendra Modi. As we complete the first quarter of the 21st century, continuing geopolitical headwinds suggest lower global economic growth over the medium term. However, our aspiration for a Vikasit Bharat inspires us, and the transformative work we have done during our government's first 2 terms guides us to march forward resolutely. Our economy is the fastest growing among all major economies. Our development track record for the past 10 years and structural reforms have drawn global attention. Confidence in India's capability and potential has only grown in this period. We see the next 5 years as a unique opportunity to realize Sabka Vikas, stimulating balanced growth of all regions. The great Telugu poet and playwright
Well, joining us now is the Railway Minister, also in charge of IT and ITES, Mr. Ashwini Vaishnav. Mr. Vaishnav, many thanks for joining us here on CNBC TV 18. Let me start by asking you for the overarching theme of the budget, which seems to focus on consumption, capex and consolidation. How do you believe the budget is going to change the needle in the attempt to amplify the growth momentum?
This is a phenomenally great budget. The way it has been balanced, we have the CAPEX program, the entire CAPEX program is intact, it's going steady. We have a lot of focus on deregulation. There is huge focus on manufacturing and stimulating demand. I mean, practically everything that is required in a good budget. It's a dream budget in my opinion. And I thank Honorable Prime Minister and Honorable Finance Minister for bringing out this such a comprehensive budget where we are looking at a 4.4% fiscal deficit, where most of the rich world today is running fiscal deficits significantly higher than this, and still we have practically every sector covered and a very consistent investment program going on. So I think this is a very balanced, very good budget. It's in a sense, it's a dream budget.
Yes, that certainly is the feedback that's coming in from many quarters, Mr. Vaishnav. But let's talk a little bit about railways. Railway capex coming in at 2.64 lakh crore rupees. I also want to understand from you if you can give us some color on the railway internals in terms of the operating ratio as well as the spending plans for the year ahead.
Absolutely. 2,52,000 crore rupees budgetary support. And add the PPP investments, 2,64,000 crore rupees is the
total capital allocation in the budget. And this is very important because the momentum which is there in railways, in the last 10 years, our Prime Minister himself has focused so much on railways and changing the entire infrastructure, getting new technologies, getting new passenger amenities, new types of trains. Everything is on the cards, and this budget allocation gives us a huge kind of help in maintaining that momentum. Total about 4,60,000 crore rupees worth projects have been included in the budget, which includes new lines, doubling, gauge conversion, completing the electrification, which is almost reaching 97% now. So in a sense, practically every aspect of railway will be benefited by this. I'll give 5 specific points here. One, will be manufacturing about 100 new Amrit Bharat trains, which are all non-air conditioned, practically for the low income category of families. Then we'll be manufacturing 50 Namo Bharat trains, which are for the short distance, roughly 250 kilometer distance, cities which are located 250 kilometers away. So basically having a shuttle kind of connect between them. Then we'll be manufacturing about 200 new Vande Bharat trains, including sleeper as well as the chair car versions, and 1,000 new flyovers and underpasses. And the allocation on safety will increase from 1,14,000 crore. It will go up to 1,16,000 crore. And we'll also be achieving 3 major milestones in the coming months. First is we'll be crossing 1.6 billion tons of cargo. Second, we'll be completing 100% electrification. And third, we'll be crossing 3 lakh crore revenue benchmark. So these are very major important milestones that we are going to cover in the coming months.
Well, certainly important milestones that you've highlighted. 3 lakh crores in revenue, 100% electrification target you hope to achieve as well. Just on the operating ratio as well, Mr. Vaishnav, if you can leave us with that number too before I move on to the other sectors.
Absolutely. See, the costs we have, the cost of salary, wages, the cost of pension, the cost of energy, the cost of maintenance, the entire cost we are able to meet from the revenue that the railways is earning, because the volume has increased significantly. If you look at 10 years ago, the loading used to be just about 1 billion tons. Now it is 1.5 billion plus, and this year we'll be crossing 1.6 billion tons. Same is the case of passengers increasing steadily. So combine that along with bringing the cost efficiencies by reducing diesel consumption, increasing electrical traction, and also having better maintenance so that the losses in during transportation are reduced. Now we are able to meet all the costs, and this operating ratio now is in the range of 98 to 98.5, in that range. So this is very healthy, and despite not increasing any fares and maintaining that passenger subsidy of about 58,000 crore rupees, while maintaining that, we are able to meet the entire expenditure, which is very good.
Okay, let me then ask you about the other sectors that you look after as well, Mr. Vaishnav. The component PLI scheme, the hope was that it would be coming in the budget, but you had told me when we spoke a short while ago in Davos that the consultation process is still on, so the window is still open on that. Could you confirm that, sir?
See, 3 major reforms have been announced which are going to directly have a positive impact on the component manufacturing ecosystem, or rather the entire electronics and semiconductor manufacturing ecosystem. First is the rationalization of custom duties. Second is the very nuanced announcement about permanent establishment in the taxation regime. Third is about the warehousing for a variety of inputs which go into electronics manufacturing. So combine these 3 with the thing that we are already working with the industry. I think electronics manufacturing, which right now is, we are doing laptops, we are doing servers, we are doing mobile phones, audio equipment, we are doing many medical equipment. All that is going to, I would say in the coming years, it's going to double or even treble in the coming years, and the employment generation is huge. Even just in electronics and mobile manufacturing, we have close to 2.5 million people employed. That will double in the coming years. So this is a very good boost, and combine and look at that from the perspective of having a mission for manufacturing. A mission for manufacturing, which Honorable Finance Minister has announced today, is very comprehensive. It looks at your labor, looks at your capital requirement, your land requirement, it's a 360-degree assessment of the entire manufacturing sector, and whatever is required, infra, capital, rating, factoring, discounts, everything has been included in that package.
So, Mr. Vaishnav, just a follow-up question on that, because the existing PLI scheme for electronics, the sun sets in 25-26, if I remember correctly. Is there a possibility or a likelihood of that being extended as well, or do you believe that that has served its purpose?
Listen, the industry is looking more at components now. At this point of time, the industry's focus is on deepening the value chain, because we got very good traction on manufacturing the finished goods. Now the time has come to focus a lot on getting the components and the modules and sub-modules into our country, and that's where the focus is. The active components are part of the semiconductor program, and passive components are part of the component program that we are working. That's where the industry is at this point of time focused on. And also, of course, on design. Industry is also focused a lot on design capabilities.
One of the other announcements that came in from the Finance Minister had to do with that 500 crore rupee outlay on a Centre of Excellence for AI, Mr. Vaishnav, and of course that's again something that you're spearheading, the government's AI mission. Do you believe that that is going to be enough? Take me through operationalizing this plan as far as the Centres of Excellence is concerned.
The total AI mission allocation is 10,000 crore rupees. And there are 7 big pillars of this, very important pillars. First and foremost, where we have achieved very good success, is getting the common compute facility for all our researchers, academicians, startups. 18,000 GPUs have been empaneled, and out of that 10,000 are already available and installed. And a very, very decent price has come because of the very transparent process by which the private sector investors were empaneled. So I think that's a very important thing. Now we are working on the foundational model as well as the applications, and as you must have seen in a few days ago, we announced that 18 applications have already been approved as a part of it. So this today's announcement of having the Centre of Excellence is very, very important, because AI will be driven by research. It will be driven by getting new algorithms, getting better efficiency in the algorithms, making sure that power consumption is reduced, making sure that accuracy at a lower cost can be achieved. So that's why the announcement of Centre of Excellence, and this will be the third, so is going to be very important, because research is going to drive the innovation in the coming days.
Final question, Mr. Vaishnav, before I let you go, and you did give us an indication of how we intend to use DeepSeek, and you said that you would like it to be hosted on Indian servers. Explain to me what the thinking is on this front as we move forward.
See, we are, at this point of time, all the experts are evaluating the implications on privacy, the implications on security, so that and it's a very technical subject. Most of the work is being done by the technical experts, and as and when they give their final opinion, we'll be able to take the steps. One of the things that the experts have advised is that we should install DeepSeek on an Indian server, so that the data privacy concerns can be addressed properly, and that is what we have started already. That process we have started. And as and when the experts advise us further on this, we'll take further steps.
Okay. All right, Mr. Vaishnav, always a pleasure. Appreciate you joining us here to give us a very detailed understanding of where things currently stand, not just for the railway capex plan, but also for the government's AI mission, and of course for the electronic and the component scheme that is currently being worked on. Always a pleasure. Appreciate you joining us here on CNBC TV 18. That's Minister Ashwini Vaishnav here joining us on the CNBC TV 18 budget headquarters. There's a lot more coming up. We're back in a moment.
Apparao had said, Deshamante matti kadoy, Deshamante manushuloy, meaning a country is not just its soil, a country is its people. In line with this, For us, Vikasit Bharat encompasses zero poverty, 100% quality good school education, access to high quality, affordable and comprehensive health care, 100% skilled labor with meaningful employment, 70% women in economic activities, and farmers making our country the food basket of the world. In this budget, the proposed development measures span 10 broad areas focusing on Garib, Youth, Annadata and Nari, spurring agricultural growth and productivity, building rural prosperity and resilience, taking everyone together on an inclusive growth path, boosting manufacturing and furthering Make in India, supporting MSMEs, enabling employment-led development, investing in people, economy and innovation, securing energy supplies, promoting exports and nurturing innovation. For this journey of development, our four powerful engines are agriculture, MSME, investments and exports. The fuel, our reforms, our guiding spirit, inclusivity, and the destination, Vikasit Bharat. This budget aims to initiate transformative reforms across 6 domains. During the first 5 years, these will augment our growth potential and global competitiveness. The domains are taxation, power sector, urban development, mining, financial sector, and regulatory reforms.
Five, 4, 3, 2, 1.
Our continuing coverage here, analysing Budget 2025 at the CNBC TV 18 Budget Headquarters continues. It's been a long day, but it's been an even longer month for the two gentlemen who are here with me, the Finance Secretary Tuhin Kanta Pandey, as well as the new DPAM Secretary, Mr. Arunesh Chawla. Gentlemen, thank you very much for joining us here on CNBC TV 18. I think everyone's struggling to find the devil in the fine print this time around. Last budget, there was the indexation issue, but so far it seems to have been a clean list of announcements that's come in from the Finance Minister. But if I could address one of the disappointments, to put it mildly, as far as the capex issue is concerned, and I'll quote a tweet to you. The key issue in the budget is the near zero allocation for infra over the last year, 11.2 lakh or over 11.1. Is this a reset of national economic strategy that large outlays in infra will no longer be the pump primer of the economy? Will this be the hitherto stated strategy? Mr. Pandey.
Well, I think that's not the way we should look at it, because if you really look at it, the capex directly, and then first of all, we have to understand the budget. There are two kinds of capex. One is the capex per se directly by the central government.
Yeah.
The secondly is the capex which goes from the central government, first as a grant, as a revenue expenditure, and then it goes into for creation of assets at the hand of the states. So therefore, in the budget at a glance, in the statement itself, you have something called grant in creation of capital assets.
Right.
And this has been there for many years. And this number is actually 15.48 lakh crores. It's about 15.6 lakh crores. So it's not really 11 lakh crores that we are talking.
So you're saying that we should not see it as 11.1 to 11.21. We should see it as 11.1 to the allocation that's been apportioned for states as well.
Exactly. Why it's important? Because if you really see, there is a 10% growth on the RE numbers over, in this BE for the capex.
Right.
But if you really count the two, it is 17% growth, because a lot of money we are sending it in the capex through
To
the states. So therefore, if you really don't count them, you really don't get to know exactly. And those numbers are very much visible in the budget itself.
So there's no change as far as the capex heavy lifting that the government attempted to do in the last few years. There's no change in that strategy is the question.
The capex continues. All I'm saying is that it may not be that we are having that 30% increment at one time and so on. But, the capex continues, and our effort will be on implementation of capex.
Okay, let me now address the issue as far as the personal income tax cut is concerned. And I think everyone acknowledges that this was not what was expected. This is much better than what the street was expecting, what people were expecting, which was some relief. Now, what do you believe this could potentially do, and how soon could it provide that growth momentum to the economy?
Well, when it comes to the economy, we have to see is who is making investments, who is making savings, who is doing consumption. So therefore, we have in the broad economy, there are three characters. One is the households, the second is the private sector, corporate sector, the third is the government. Now, everyone, does saving, everyone does an investment. And put together, it is a saving, and put together is an investment. Now, compositionally, what we are doing is we are shifting some of the money which the government would have got had we continued with the old rates into the hands of the people. And all that it will do, it will not only spur consumption, it can also have impact on savings or investments. You and me, when you get more money, you may choose to consume, you may choose to save, or you may choose to invest. If you choose to save, somebody else is investing it on your behalf.
Right.
If you choose to invest directly in a house or something, you are the investor directly.
Yeah.
And if you choose to consume, you are basically spurring the demand for several others when you will propel investments by them.
Right.
So in a way, we are putting that money, and that money is going to come back to the economy anyways.
So what could be the impact of that? And again, there are estimates being made by former colleagues of yours in terms of the multiplier impact on growth. Do you believe that this 10.8% nominal growth number, you could perhaps do better?
Well, I would say that, it will actually, because we are giving a choice to the people in a manner, I think those choices will be duly, wisely done by the people, and therefore, economy will stand to benefit.
So you're not sticking your neck out and 6.8%. The CA says now within grasp. The DA says looks very doable. Do you believe that you could perhaps better it?
Well, I think we are looking up. If you really see, we have there was a prediction that in the second half it will look up. See, we are also facing a lot of global headwinds. So it's not that the environment that we are right now in is extremely favorable. And so our economy, even though as is one of the fastest growing economy among the large economies in the world, it is also facing global headwinds. So we do not know exactly how it's going to pan out. But we are putting a best foot forward in trying to optimize growth, trying to find out, as FM said, reforms as a fuel. As FM said, engines, 4 engines. The engines are very broad-based. Agriculture, MSME, investment. And investment is not merely investment in physical infrastructure, in people, as well as economy and exports. So therefore, I think the overall and the inclusivity which that comes in, and plus this income tax relief, if you really take it, it is a balanced view. It's not binary that it is capex versus this. I think it is basically a balanced view to propel the economy and also reform as a fuel.
Do you believe that 75% that is moved to the new tax regime, that number will go up significantly on the back of the measures that you've announced?
Surely. Maybe they will reach 100% very
Maybe they'll reach 100% and the sun will finally set on the old tax regime. You believe that?
Well, the choice is there, but if the people don't find it attractive enough, they will move. Let them make a choice.
Let them make a choice. So, Mr. Chawla, let's address the disinvestment agenda. 47,000 crore rupees, that is what the budget has put down as the disinvestment target. There's no point talking about targets because, we've not really realistically achieved the disinvestment targets that have been set out. So let me ask you what the disinvestment calendar looks like, starting with IDBI Bank, because that has moved much further along than anything else. Where are we on that today, sir?
Thank you. I'll first clarify that there is no fixed disinvestment target. We have moved on to a more comprehensive asset management approach, where our aim is to optimize value, not just for the government, which is the promoter of enterprises, but millions of minority shareholders, ordinary investors who have reposed their faith in us. As part of our strategy, we will balance between a consistent dividend policy and a calibrated asset monetization strategy. Along with this, we have built in strict performance benchmarks for the CPSEs, along with CapEx targets. As Finance Secretary mentioned, a large part of the CapEx actually comes from public enterprises. Yes. And an effective communication strategy. But that does not mean that I can reveal market-sensitive information.
On the one that's already public, which is IDBI Bank, where do things stand?
Good. So IDBI, that is on track. And I will not give precise details at the moment, but I can assure you it's on track, and in due course, you will hear it.
Okay, in due course, meaning obviously nothing in this financial year, so it moves to the next financial year as far as the bids are concerned.
No comments.
No comments on that. Let me ask you this, sir. You've spent a large part of the last many years looking at disinvestment. Now, what should we realistically expect in terms of the appetite for disinvestment? And also, how should we read the moves that have been seen recently with the government actually infusing capital into SIC PSUs, whether it's RINL or MTNL and so on and so forth? What should we read into the message the government is sending out on disinvestment?
No, I think this, so far as the MTNL is concerned, it was never on the disinvestment list. And it was because it was decided that at least one strategic, because of the strategic nature of the BSNL MTL was retained as a part of our policy. So far as the RINL is concerned, you know that as a going concern, the company has been in a very bad state. So as a going concern, we have to look at it. And now the whole analysis has been done, a thing has been done, because in any case, it's an ongoing concern issue. But even on the IDBI, I mean, I would hazard a guess, the things are there, the due diligence process is on. And
but it's been on for years.
No, I mean, there was an issue because there was an RBI process that had taken a lot of time, and then finally the RBI cleared it. We told the market, told the media that, the due diligence process is now on after the fit and proper. Right. And I think very soon the financial bids will come, and following which, the result will be out. I mean, the thing.
So you're saying very soon the financial bids? Can you give us a more specific timeline?
I would say, I mean, of course, Arunesh would be in a better position to say, but we were saying that, possibly before March, this end of the financial year, financial bids might come. And then, subsequently, there will be some process to do it in
so
the
even
very
by
next
March, we could still hope for the bids to come in as far as IDBI Bank is concerned?
It depends if the transaction advisor is able to really, I mean, if the bidders are ready to do that, they are ongoing. So, but that's on track.
That's on track, and that is the hope. But what is the appetite, sir, as far as privatization is concerned now? And there was a list that had been identified, that had been put down. Where do things stand on that?
So I said that disinvestment has two legs. One is that, minority stake sale. Another is the, outright privatization. If you really see the minority stake sale, they have been going on steadily. You have, OFS in Cochin shipyard, you had earlier in this. In Hindustan Zinc, there was some dilution. And this goes on. And it goes in a calibrated manner, as you said.
Yeah.
And then, of course, there were, listings. You had NTPC Green, which came, and the full thing, and it's now a very major company.
Yeah.
And at the time also, we had announced that many more green companies will come downstream of those, some of those brown companies.
Right.
So that
can we
part,
expect
Irida was listed earlier. So I think disinvestment is going on in a calibrated manner.
More listings expected in 2025, Mr. Chawla and Mr. Pandey?
No, I mean, obviously, if there are candidates, why not?
Okay, why not? On the larger issue as far as the dividends are concerned, between the RBI, between PSBs as well as financial institutions, 2.56 lakh crore rupees, I think that is what the government is put down in terms of the number cumulatively as far as the dividends are concerned. How much are you hoping for the RBI to deliver? They've given you a bonanza the last time around as well.
No, I will not hazard a guess. These are numbers. See, point is on the receipt numbers, which are other than tax. See, when it is a tax numbers and other numbers are slightly different. In tax numbers, you have a legislation backing you.
Yeah.
You know the taxes will come. It will depend upon how the economy pans out. In case of other numbers, there is a lot of things which happens is subject to profitability, subject to this. So there are certain numbers, and we hope that as soon as these things are declared, you will come to know. But in CPSCs, he will be able to clarify you on dividends.
What is the expectation, Mr. Chawla?
So this year we will not only meet but slightly exceed the target, and next year we have a slightly more ambitious target, and we will achieve that as well.
Will achieve that. A quick question. There is no provision that's been made as far as the LPG under-recoveries are concerned to oil marketing companies. Why is that the case? Because that was clearly the demand that was put on the table as well.
Well, I think they will work out, because the oil thing is, going up and down and depends upon the market. And they will definitely, work it out, in what manner.
So the OMCs will have to work it out?
I mean, OMC and the government normally work it. Normally, OMC work it out initially because, they have a certain way of...
But you haven't provided anything for them in the budget.
No, but whenever there is a need and something, it is additionally provided. In terms of fertilizer also, sometimes, the prices move differently and then additional thing has been provided.
So the cushion that you've got on the expenditure side, that is what has given you the ability to be able to do the personal income tax cut?
Well, if you really see the personal income tax, I mean, if you look at our numbers, then, we have got about 20% average growth rate last few years in personal income tax. Buoyancy has been 2+. And if you really look at the numbers this year, that what we have projected, buoyancy is now projected as 1.4, and the growth we have projected as 14%. So we have done that moderation in growth, and our numbers are realistic.
Numbers are realistic, but I'm asking you, the cushion that you were able to get to be able to deliver this, 1 lakh crore rupee revenue foregone to enable the tax cuts to come in, that's been on account of the fact that I wouldn't say expenditure compression, but you've saved on the expenditure side.
I would agree to that. I'm only saying that, the revenue side, we could have, had we not given out this, sort of relief, then probably our revenue figures would have been higher.
Yeah.
So we are balancing the thing, and we are achieving 4.4% number, as we promised.
On fiscal
consolidation.
deficit, absolutely, and that is something that has, of course, been given a big thumbs up on the consolidation front. But on asset monetization, 10 lakh crore rupee, that's the target that's been put down by the government. 5 lakhs, I think, 5 lakh crores was the last target. Close to being able to achieve that?
Yes, we are close to achieving. In fact, we may slightly exceed the target this year, and we hope to do the same next year.
So in terms of the identified list that will be up for monetization as part of the announcement that came in today, when should we realistically expect things to move on that front?
I think some homework has been done, some more is being done. And for this year, you've already learned, most of it has been announced. And for next year, we'll probably move and you will see it very quickly as the year dawns.
So let me ask you, on balance at the end of what has been delivered today, and there's been a lot of announcements that have come in to take the reform process forward, some with specific timelines, but some work in progress, including things like the National Manufacturing Mission and so on and so forth. Where does this leave the economy? What do you see as the tailwinds that the budget has provided, and what do you believe are the headwinds that you will have to contend with?
Well, the tailwinds, as you say, that first we have really, sort of given that money to the middle class, to everyone. In fact, one of the things that you must appreciate that it is across the board and it is slab, so it fits in well with the new reform bill, the new IT bill that we are going to bring. The second, of course, is that we are, sort of looking at all the critical areas where the investments is required for increasing productivity. We are looking at, as I said, 4 engines, the fuel, the reforms as a fuel. We have looked at taxation reforms. We are looking at financial reforms. We are looking at regulatory reforms. And they're very important because, a lot of friction points, a lot of pain points we must remove. We are continuing with our capex. And I'm again reiterating, it's not to say that we have really abandoned. The point is that we must deliver and implement.
Yeah.
I mean, merely we are showing the numbers that won't do.
Fair point.
But we have added, huge amount of roads. If you really see as we speak, many roads are getting built, many railway things are happening. You have huge number of Prime Minister Awas Yojana housing, which is gone in. You have a massive Jal Jeevan mission, which is happening. You have 1.5 lakh scheme, which is zero interest loan for the states that is happening, subject to reforms. And we are reforming. While we are doing is we are reforming, deregulating. Wherever we can do settle, even in taxes, even in tariffs, voluntary compliance, trying to do that, spur the animal spirit, spur the entrepreneurial spirit. Startups.
Do you believe that you're finally going to be able to unleash the animal spirits, and what will that mean as far as the gross fixed capital formation is concerned? Are we likely to now move beyond that 30% mark?
Well, if I were the animal, I'll be spirited.
But on a serious note, do you believe that we're now going to move the needle on that number?
On what number?
On the the gross fixed capital formation number, sir, which has been at about 30% for the last few years.
Well, I think there are CIA surveys, there are other surveys which show that there have been uptick in order books. There have been capacity improvement in capacity utilization, and I think the demand will build up, the jobs will be created, and there will be more incentive for the private sector to further invest. So both saving and investments must rise, and that should be our continuous strategy.
So 6.8%?
Well, I won't really go out with a number, but I would say that definitely we will spur that, whatever numbers that we said is trend growth rate. The question is, can we push up the trend?
Can we push up the trend? But very clear, unambiguous comment they're coming in from the Finance Secretary, not abandoning CapEx. You need to look at the CapEx allocation with the center and the states together on an aggregate basis, and you believe that the tax cuts that have been delivered will spur consumption and accelerate the growth momentum. And IDBI Bank, hopefully the bids will come in by March, so in this financial year. That's the hope at this point in time, but we will have to wait to see whether it is finally delivered or not. Mr. Chawla and Mr. Pandey, always a pleasure. Many thanks for joining us here. Today we have limited time, but we will of course continue this conversation on the CNBC TV 18 budget verdict. Appreciate you joining us here at our budget headquarters. We are going to take a break here, but the budget conversations will continue. Don't go anywhere. We're back in a moment. You're watching CNBC TV 18, India's budget headquarters.
Sir, with your permission, I rise to lay on the table a copy in English and Hindi of the Economic Survey 24-25 along with the statistical appendix. Thank you.
The House stands adjourned to meet.
Several announcements made in the Union Budget 2025. We are joined by Union Minister, Mr. Hardeep Singh Puri. Sir, thanks for speaking with CNBC TV 18. How do you look at the key highlights from the budget and its impact on the common person?
I would say in overall terms, it's an excellent budget. It's a budget whose impact in the short, medium and long term will be to spur and boost our journey to becoming a Viksit Bharat, which is the Prime Minister's Sankalp. But more than that, you see, if you look at this budget, one immediate temptation is to look at it in terms of the relief provided to the salaried middle class. The fact that you've raised the exemption limit from 7 lakhs to 12 lakhs is a talking point. But I think there's something deeper in this. You've also adjusted the slabs. You've also made major announcement for centers of excellence in artificial intelligence, for the steel, for the shipbuilding sector, for agriculture, for manufacturing. So you look at all those announcements for startups. You know, if you add another 10-20,000 crores for something like that, that's a lot of money. The PLI scheme which was started, we never had any electrolyzer production here. When you provided 19,700 crores sometime back at the PLI scheme, it's taken off. Today, this budget also seeks to boost the public-private partnership. It also seeks to provide overall momentum. But the one talking point which is gaining more attention is because people generally thought, you know, the corporate sector is doing well. The, you know, people who are at the economically weaker section, they are being provided 3 meals of dry ration in a day, and the middle class is being shortchanged. Not correct. We've just appointed a pay commission. That pay commission will result in major boost, relief, even for pensioners like me. There'll be pension enhancements, hopefully with retrospective effect. But today, the limit, exemption limit going to 12 lakhs is particularly welcome. And I want to remind those who are continuing with that carping criticism that when Indira Ji was Prime Minister, sometime in 1972 or 73, she raised the taxation limit. So if you earned 12 lakhs of rupees at that point of time, you ended up paying 11 lakhs 29,000 by way of tax. That was the highest rate. Now, कहाँ वहाँ कहाँ अभी की सिचुएशन है और इस पर क्रिटिसाइज करना और केजरीवाल जी लगे हुए हैं अरे भाई केजरीवाल जी आपने तो मिडिल क्लास का सोचा ही नहीं आपने अगर मिडिल अब कह रहे नहीं मैंने तो 10 मांगी थी 12 मिल गई which means we've got a deeper and understanding of what needs to be done and there's a timing for everything. Earlier budgets had a tremendous focus on capex से ये फायदा होता capex budget 30% बढ़ता गया. As a result of which, infrastructure received a boost, employment received a boost. If you're constructing by way of an example, a refinery, not only will cement and steel receive a boost, employment will receive a boost, all population within 100 kilometers of that will receive a boost. So you look at what all we've done as a country, our overall capacity has risen. Now this, you know, using nuclear energy, for energy transition, again, a phenomenal development. You know, the previous government made an attempt, but not a single dollar of commercial contracting took place because they lost the narrative after that. Manmohan Singh ji was willing to stake the future of his government, and yet kuch nahi hua. And with Modi ji, whatever he guarantees, whatever he promises, 500 guarantee diya, 499, we met. So it's not Delhi specific, it's not related to what the Congress party is saying. This is a new vision. Did any Congress leader or any other political leader in the country ever talked about India as a developed nation? Inka the contribution was always in the other side. They always doubted that we could do. When we talked about becoming a $5 trillion economy, they say, kaise hoga? Now that you're a $4 trillion economy, they are not even talking. We talked about $5 trillion and $10 trillion and Viksit Bharat. But these guys have been on the wrong side of the argument.
Speaking of the petroleum sector, there is an allocation of rupees 5,600 crores for strategic petroleum reserves. On the other hand, there hasn't been any compensation for OMCs for their losses.
Let me tell you very clearly, we are committed to that.
Even when we got it from 28,000 crores, there was an under recovery on LPG. We gave them 22,000 crores. You don't need to make a budgetary provision. We can go to the finance ministry. Otherwise, if somebody behaves like a good corporate citizen, the OMCs, and they've had under recovery, we will compensate them. We're committed to that.
Also, the subsidy for PM Ujjwala has trended down, what we have witnessed so far, despite an increase in the number of beneficiaries. Also, do you feel there is going to be an increase in discretionary spend post the budget?
No, there is going to be enough provision for both LPG and that. Don't worry about it at all. You see, two things are happening. Insofar as natural gas is concerned, prices are coming down. Insofar as LPG, which is a product of a refinery, etc., we will look at that. There's no issue of no anxiety on that score.
My final question to you, speaking of discretionary spend, speaking of future growth prospects, how do you look at the current proposition with respect to India's import basket, particularly with respect to petroleum and also with respect to the focus on exports, which is quite much visible in the budget?
See, India is a happening place for energy. Whether it's ENP, it will go up. Whether our gas production goes up by 18% every year. There was a dull decade between 2006 and 16. We are now getting more and more fine. I keep saying there's a Guyana to be found in the Andaman Sea, or several Guyanas to be found. As we go forward, we will continue because the economic activity is growing at such a pace. Even as our ENP goes up, our consumption is going up, therefore imports will go up. But we are also exporting. Some of our companies are major exporters. As we proceed forward, we are very confident. We think more and more crude oil is going to be available in the global market. Prices will come down. And I'm pretty confident that energy will continue to be a big success story.
What's the big direction of the union budget, and what does it have for the telecom sector, for the Northeast region, and for India Post as well? Joining us right now is Union Minister Jyotiraditya Scindia, who handles all these portfolios. Mr. Scindia, for the last few months, since the time you took over the communications and telecom portfolio, you have been looking at how to overhaul India Post and make it a logistics powerhouse. Now, what push does this budget give to that exercise?
Well, I think it's very important to, first of all, understand, and most importantly, at the outset, I'd like to thank the Prime Minister and the Finance Minister for giving that prominence and that emphasis on India Post and its importance in being probably the largest distribution channel that India has. We have 1,65,000 POSs, points of sale, almost about 3 lakh Gramin Dak Sevaks across the length and breadth of our country that do only one thing: Dak Seva, Jana Seva. And it's very important for India Post also to move in line with what's happening globally. And what's happening globally across the world is that postal organizations slowly evolving and moving towards being logistics organizations and logistics companies, specifically because of the huge emphasis on e-commerce, and e-commerce becoming a very, very large portion of their total market. And the same is going to happen in India. Today, e-commerce may be only limited to maybe tier 1 cities, but it's going to be 6 months or a year at max where it's going to go to tier 2 and tier 3. And that's where India Post has the largest distribution network. And so therefore we have a plan in place, or we are working on a plan, which is a business process re-engineering exercise, where we've formed our India Post organization into 6 verticals, which define our products between mails, parcels, international mails, your PLI, life insurance schemes, your post office savings bank, and your C2C, government citizen services. And across these 6 verticals, we formed also a technology group that's going to be looking at, because digitalization is going to be a very important facet of this. So net, we'll have a long conversation some other day, but we're looking at a full transformation of how India Post functions, making it seamless between customer and service, and the budgetary allocation towards that imperative is extremely important. As far as telecom is concerned, there again I'd like to thank the Prime Minister and the Finance Minister where they have looked at BharatNet becoming the key purveyor of information and digitization, all the way down to government schools as well as to primary health centers.
Right.
And we've got a very expansive BharatNet, amended BharatNet program where we have a capital allocation of close to about 1,39,000 crores, where we're going to connect every Gram Panchayat in this country, and there are over 2.5 lakh of them. And in the second stage, every village in our country with OFC fiber, and make sure that the digital revolution doesn't begin with tier 1 but begins actually with tier 3 and tier 2.
Minister Scindia, again, coming back to India Post and making it a logistics powerhouse, when you're going about this restructuring or re-engineering exercise, what is the amount of money that this entire exercise would need, and what is the economic opportunity that you feel is there? And if you had to quantify that economic opportunity,
I'm not at liberty to divulge to you my capex requirement at this point of time. But suffice to say that you're going to be working on this on two important footings. One is the digitization of India Post. So we are coming out with software 2.0 for India Post, where you're going to be seamless end-to-end. We've got a capital allocation already, not in this budget, but in prior budgets, of close to 5,000 crores for that. We should be coming out with our beta product in the next 8 months or so. We've got a system integrator in place. And not only that, I have now put together within India Post, for the first time in the history of India Post, a chief technology officer. So I have a CTO, and then I have a vice technology officer who's working with each vertical, and so that there is complete synthesis between the demand of each vertical, which are very, very different products, along with the view and the thesis of the organization as a whole. The second is really to look at our infrastructure and upgrading our infrastructure. And so we have close to about 26,000 odd branch post offices, including head offices, that will require a certain amount of infrastructure spend, and then a whole bunch of sub post offices. So it's going to be a combination of both, along with the business process re-engineering exercise. So there's going to be a softer aspect to it and a harder aspect.
And private sector involvement as well?
Not to begin with. Yes, private sector involvement maybe on the advisory side, and maybe on the software integration, but the software is being made also by our India Post company, which is CEPT.
Okay.
To the presentation of the Union Budget 2025-26 in Lok Sabha on Saturday, February 1, 2025.
8th consecutive time, Finance Minister Nirmala Sitharaman will rise to present the union budget in a few hours from now. India's GDP growth is near a 2-year low. Can the budget unleash measures to fire up the growth engines?
It's important to understand that this drop happened just 2 quarters in the last 12 quarters that we're talking about. I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees. I propose to 1. Remove 7 tariff rates. This is over and above the 7 tariff rates removed in 23-24 budget. The revised estimate of the fiscal deficit is 4.8% of the GDP.
ये बजट एक फोर्स मल्टीप्लायर है। ये बजट सेविंग्स को बढ़ाएगा, इन्वेस्टमेंट को बढ़ाएगा, कंजम्पशन को बढ़ाएगा और ग्रोथ को भी तेजी से बढ़ाएगा।
ये भारत सरकार का बजट है कि बिहार सरकार का बजट है? आपने बिहार के अलावा किसी और प्रदेश का नाम सुना वित्त मंत्री जी के पूरे बजट भाषण में?
The infrastructure is not going for the rest of the country. It's only going towards Bihar because we all know that this year is the Bihar election. So basically, for essence, and Maharashtra has been ignored, and Tamil Nadu, there's not a single word for Tamil Nadu or for any other southern states.
Sweetness for the middle class, a firm hold on fiscal consolidation and continuity on capex. Finance Minister Nirmala Sitharaman's 8th consecutive budget aims to give a fillip to consumption by putting money in the hands of the middle class. Also, as they say, no news is good news for the markets. A status quo is maintained on capital gains tax as was expected. The big headline change is, of course, in the income tax slabs. The government will forego 1 lakh crore rupees in direct tax revenue this year on account of the cut in personal income tax. That really is the big headline that sums up the mood of Budget 2025. To take the discussion forward, we're joined by KV Subramaniam, India's Executive Director at the IMF, also India's former Chief Economic Advisor, Kiran Mazumdar-Shaw, Executive Chairperson and founder of Biocon and Biocon Biologics, Christian D. Guzman, Senior Vice President and India Sovereign Analyst at Moody's Ratings, Vinayak Chatterjee, Chairman of the CII Mission on Infrastructure, FICCI President Harshvardhan Agarwal, Vishesh Chandiok, CEO of Grant Thornton, with us as well. Gentlemen, Kiran, many thanks for joining us here on CNBC TV 18. KV Subramaniam, let me come to you first because you've been tweeting up a storm on the multiplier impact of the personal income tax cut and the benefits it could accrue to growth. You know, I have to say that I took some of your numbers and put them to the Finance Ministry budget makers. They were a bit more conservative in their own estimates on what the implication could be, what the impact can be. KV Subramaniam, over to you.
Sharon, you would remember around this time I was in the studios and I had mentioned, and you'll remember very well, that the fiscal deficit will come out to be less than budgeted, which is exactly what has happened. You know, having been there in the ministry, we've had this principle of under-promising and over-delivering that has started, with the, very transparently presenting the budget numbers. If you recall, earlier, there used to be these off-balance sheet items that used to be presented during my tenure that was removed, and we're presenting transparently. I think that same principle applies here. I think as I'm sure you would have actually seen the tweet, I have done the numbers. I've been conservative there, because the actual savings rate for the middle class, recent data, 2023 data is 18%, and I've actually instead used 20%, which gives me a lower multiplier. if this 1 lakh crore number, I think, which has been announced by the finance minister as the foregone revenue is correct, and I think there is reason to be correct. Actually, as I said, the finance ministry tends to now under-promise and over-deliver. Then I think the impact on consumption would be about 4.8% of GDP, and overall GDP itself 2.7% additional.
2.7% additional on GDP. As I said, I put those numbers to the finance ministry, and of course, they didn't bite the bait on that. But that's as far as consumption is concerned. Let me come to Vinayak Chatterjee, the bucket man. CNBC TV 18 is trending today, but as is Vinayak Chatterjee because of a tweet that is viral, Vinayak. And your quibble on capex, I put that to the government, and their response was, look, you've got to look at it at an aggregate basis of what we're doing between the center and the states. If you do that, we're up 17%.
That's not correct. I think let me step back and talk about a serious issue that has emanated from the infrastructure maths of this budget for almost a decade now, and actually from the beginning of this government, there has been a very stated, well-articulated, well-implemented policy that it is public outlays on infrastructure that will be the pump primer for economic growth. And on this basis, year after year after year, we have seen 30% growth in infrastructure allocations, 5 to 7.5, 7.5 to 10. Last year was a bit of a shocker with 10%. But this time, to see that there is a near zero increase in allocation then brings to question that is there a reset of economic thinking? The question is, which I pose to you, which I pose to your viewers, and I have posed to the government and analysts, is that if infrastructure is no more the pump primer of the economy, what is it then? And is this a reset of national economic planning strategy?
I asked the finance secretary just before you arrived exactly that question.
What was his answer?
We are not abandoning capex. Look at it as an aggregate between what we're doing at the central level as well as what we're doing with states.
So the thumb rule is very simple, and you can check the maths which I have shared with you every year. If the center does 10, then a matching 10 is done by 3 constituents together, which is states plus private sector plus what is called EBR, extra budgetary resources. These 3 things together do another 10. So you get 10 plus 10, 20, right? So if you do 0, it is then, and they're not going to do 10. So it's not logic that holds. The fact is that the central spend on infrastructure is the market driver for all the states as well as private sector as EBR. It is a market maker. And therefore, this is a very serious question when you stand back and look at the big economic picture, forget all the little announcements. Is this a reset of economic strategy for the nation?
Okay. KV Subramaniam, would you agree with Vinayak's strategy that that's the signal that the government is sending out? And I go back again, you were here with me in the studio last year. The then Finance Secretary, Mr. Somanathan, had also stated that, look, we are perhaps reaching our limit as far as what the government can do on capex is concerned. How would you read the capex allocation?
Is raising is something that absolutely needs to be responded to. If you look at the budget allocation and, the actual numbers, for instance, that was achieved, the budget allocation was 11.1 lakh crore and the actual amount was 10.18. So there seems to be, and, while part of it could be attributed, let's say, to the election, the first quarter elections, but I think, and I'm not part of the government now, so I don't know the true reason, and maybe Vinayak can throw light on this. Maybe there are some capacity constraints that are actually being hit in the infrastructure ministries being able to spend this. And I think it is important, therefore, to be able to sort of provide numbers that can be really achieved. What you don't want is, a significant increase in the budgeted amount, but not actually being implemented. So that's an aspect. I think, overall, actually, I would say that the focus on infrastructure must continue. I think the complementary aspect, therefore, is to examine the capacity in the infrastructure ministries. If there are some constraints in then being able to spend the amounts, I think those need to be removed so that we can renew again and increase the budget allocation. That said, though, let me add, actually, I think I don't mind, even from an economic strategy perspective, actually the focus on consumption, because one of the engines that actually actually had not been firing as well has been, it's been private investment. And, investors, basically industry kept saying that, oh, it's the consumption is not increasing and that is why, we're not investing. Now, I think, industry should have absolutely no excuses whatsoever to actually say that, oh, we're not investing. I hope they don't come back and say, oh, we're waiting for the monetary policy to change. Actually, I think, the spur in consumption, increase in consumption, as I actually have tweeted, I think should definitely be a spur. And you do remember that when we talk about the virtuous cycle, right, consumption is an important element. Yes, it is private investment that is the first trigger, or overall investment that is a trigger. But I think working on another macro variable, consumption, is something that will help. So I don't see this as a change in fiscal policy or overall economic strategy, but just sort of tailoring to having the ears on the ground and responding to something that is required at this point.
Okay, let me get Kiran Mazumdar-Shaw into the conversation as well. Kiran, what's the big takeaway? What do you believe Budget 2025 is likely to do for growth, but more importantly also for inclusive growth?
So, Shireen, this is a very interesting panel discussion that we are having. I think the government is definitely focused on a couple of areas, consumption being the prime, and then followed by investment, innovation and employment. And I think in terms of innovation, which has always been my pet fetish, I think I would like to see more details on the 20,000 crores outlay that they have announced for private sector innovation. My worry is that, we need to have deployment of these kind of, allocations, because innovation is going to be the way to go for India, because I think moving from volume to value is very important for India. And innovation in many, many sectors is going to be key. I'm glad that the government has come up with a mission mode for AI, quantum, and I'd like it to extend to other areas like synthetic biology and other areas of, the biotech sector. I'd like to see the fine print there. But in terms of inclusive, growth, I think the government has done a lot, at least in healthcare. Trying to get rural healthcare beefed up, trying to provide access and affordable access to, to life-saving medicines. Though there, I don't quite see how just customs duty exemption is going to do that. I think it has to be translation into GST as well. So that's what I really would like to see from this budget. So overall, it's a good budget, but I think we also need to see it in context with the geopolitics and geoeconomics of our time.
And that's what I was. You've preempted my question, Kiran, because I was going to ask you just that. We've got the Trump tariff threat, and pharmaceuticals is a sector that he has identified as a sector that he intends to go after from a tariff point of view. What should we prepare ourselves for? How concerned are you with that threat?
So, of course, he gave the pharma threat more to, Canada more than India. And I think India needs to position itself as a partner and a strategic partner that provides health security to the US. So I think levying a tariff on pharmaceuticals from India is not going to really benefit the US. So I think we need to play it very carefully.
Yes, we will need to play it carefully, of course, when we do finally see the details coming in from the Trump administration. But Christian, let me come to you with what you have made of the budget numbers, with the fiscal consolidation target, as well as the glide path and the move towards debt.
Well, thanks for having me. I think in general, what we can say that there are some positive things and there are perhaps some not so positive things. On the positive side, I think the commitment to ongoing fiscal consolidation, as represented by the revised estimates for 24-25, as well as the expected outcome for 25-26, that's really supportive of, I would say, policy credibility. Now, I think perhaps what's not so positive is I think there are still some questions about the support to the economy coming from the announced tax measures. I think in particular, I guess the revenue buoyancy that is sort of coming out from the government's projections is a bit, I guess I guess the outlook here is a bit uncertain. I guess the way we see it is that when in US dollar terms, people who make less than about $14,000 a year, that's sort of 12 lakh income per year, are going to be exempted. But GDP per capita is $3,000. So what you're seeing here perhaps is a very large and significant erosion of the revenue base. But yet against this prospective erosion of the revenue base, the government is still projecting very large increases, very healthy increases in tax revenue, notwithstanding the estimates for foregone revenue. So I do think that there is some downside risk here to achieving that 4.4% of GDP target. But the signaling here, I would say, is quite positive.
Signaling quite positive. Vishesh Chandiok also with us here in the studio. Vishesh, many thanks for joining us. On balance, what does Budget 2025 deliver on?
I think it delivers on exactly what the economic survey talked about. And if you look at the preface to the economic survey, it talked about growth through deregulation.
Yeah.
It was just terrific to see the words being used there. How can we get out of the way of business? How can we give business back their time and mental bandwidth? How can we move away from this guilty until proven innocent? And I think the budget delivered that simplicity, predictability in so many areas. Of course, more to be seen with the income tax bill coming, which she gave us some preview today. She said it'll be half the size of the current act. The finance minister also said that we need to move towards justice versus punishment and thinking. And then if you look at specific areas, I think the private equity community, both category 1, category 2 funds, were asking for that clarity. Is the income, business income or capital gains?
Yeah.
I think that's being clarified as capital gains. The question remains, is the carry for partners within those funds also capital gains? That'll be a real bonanza, but we'll see. So many other areas, the 4-year ability to look back on revised returns, the 3-year safe harbor on transfer pricing. So many such areas where there is more predictability, that recognition, perhaps even taking a leaf out of what we're seeing in America. How do we really get out of the way of business and deregulate to power business to deliver growth?
Yes, and that exercise will take a year once that commission is set up and gets down to work. But Christian, I want to come back to you with the growth expectation. 10.1 nominal growth, that is what the budget is working with at this point in time. And my conversation with the budget makers, the economic survey projection is between 6.3 to 6.8. Post the budget, they do believe that they're probably going to be able to deliver on the upper end.
I think we would sort of agree with that assessment. We're not going to make any material changes to our real GDP growth forecast of 6.6% for the upcoming fiscal year. We do think, in essence, that we had seen a trough in growth a couple of quarters ago, and that there will be a rebound in growth up to an average of 6.6% for the next fiscal year, based on things like support from the government budget, as well as some normalization in terms of the liquidity issues that are in the banking system, as well as perhaps some support from monetary policy. So I think we would broadly agree with those growth assumptions.
Broadly agree with the growth assumptions. Kiran, I want to come back to you with one of the announcements and the stated objectives of the budget. Heal in India and the medical tourism opportunity. Also very specific mention, and I know that this is something that probably caught your eye on cancer hospitals. The government making that very clear as part of its healthcare plan, and a good one at that. So overall, this Heal in India opportunity and the fact that the government has decided to focus on it.
Yeah, so I think, medical tourism is something which India should be focused on and is very good at delivering on. But I think, as I said, we need to see the kind of details as to how is the government going to bolster this medical tourism aspect. Secondly, as far as the the cancer, the focus on cancer drugs is concerned, whilst they have reduced the basic customs duty or exempted the basic customs duty on cancer drugs, is it really going to benefit patients in the way it should? Because I really think that I would like to see a exemption from GST for cancer patients to make a real difference. So, whilst it's a step in the right direction, it's not enough.
Okay, Harshvardhan Agarwal here with us as well. Does this now finally get the private sector, as Krishnamurthy Subramanian was pointing out, to do more in terms of setting up new capacities? Also, the demand boost that was hoped for, do you believe that the budget will now deliver on that?
Certainly, Shireen, I think, once the extra money comes in the hand of the consumers, obviously they are going to spend, and which is going to boost the consumption. And what I believe, once the consumption increases, the thing of private investment, that should also get a boost, and ultimately also giving a boost to employment. And once it gives a boost to employment, so again, more consumption. So it's a whole circle, which I see, and that is why I am very excited about this step of the no tax till 12 lakh, and in the hand of the consumers, 1 lakh crore rupees is going to come, which is a very, very big amount. And overall, I see a lot of impact of this on the economy.
Yes, that is the hope and the expectation. Christian, a quick word in on CapEx and, whether you have any concerns on the allocation as far as CapEx is concerned before I get closing comments here from my guests.
Now, I hear that, yes, there is indeed perhaps 0% increase with regards to last year's budget allocation versus this year. But I think the important thing to note is perhaps if the government were to successfully execute next year's budget allocation for infrastructure, that would be a 10% increase over the estimates for 24-25. That would be a significant increase in growth. But having said that, I think KV Subramaniam did point to the issues around capacity, because there was a large degree of underspending in the current fiscal year, in the fiscal year that's ending in March. So those do need to be addressed so that you do get that nice kicker to growth.
Yes, Vinay Vishesh Chandiok, final comment from you in terms of the kicker that the budget provides, the headline that you take away.
I think the headline I take away is comprehensive. There's 6 ecosystems we believe at Grant Thornton that are important to shape Viksit Bharat, Vibrant Bharat. Climate, you had that 100 gigawatts of power. Inclusion, you had those 100 poorest, least productive agri-districts. Automation, you had that investment in AI, deep tech. FDI, you had the insurance, 100% on private capital. You had, the AIFs that I talked about, and lastly, regulatory. It's those 6 ecosystems that need to be shaped in order to shape a better India. And I think the budget touched on all of those.
Yes, it certainly did touch on all of those. The final comment to you, Vinayak Chatterjee, you of course heard from the government as well, and you've got your response.
Look, the near zero increase in the infrastructure budget has been attributed to two issues. To move towards fiscal consolidation, get that 4.4%, and because there has been an unspent amount from last year's allocation. The second one is serious, because if as a nation that's trying to pull itself and economic growth and pull people out of poverty, create jobs by spending money that is available, is unable to spend it because of certain constraints at the center and state level, that is a serious issue that we need to discuss in the weeks and months ahead on discussions on your panel. Yeah. The second point, and I'm going to stop here, is that across the budget speech, there are very strong hints of wanting PPPs to come back again, public-private partnerships. There are 6 very strong, shall we say, interventions mentioned. I won't read them out for you, but to get PPP back will require very hard work by the political and the bureaucratic establishment, something I know that they've just realized, and a starting position would be to once again start reading the Kelkar Committee report on PPP revitalization and start implementing the recommendations And that report was commissioned by this government alone.
Yes,
So
yes,
that's
and it is there to be operationalized. So the work has already been done. But revitalizing PPP, Triple P India, I remember from many budgets ago, that was the buzzword, and that is what we're hoping will
500
return.
crore allocation for PPP by Arun Jaitley in his 4th July maiden budget.
Yes, I remember that very, very well. But Vinayak Chatterjee, Vishesh Chandiyo, Kiran Mazumdar Shaw, Christian Guzman, Harshvardhan Agarwal and KV Subramaniam, many thanks for joining us here on the CNBC TV 18 Budget Town Hall with your take on Budget 2025. But there's been plenty for startups as well. India startup community here with their budget verdict on the Budget Badsheet, the Startup Policy Forum in Bengaluru, bringing together startups to decode the budget. My colleague Jude is there. Jude.
Indian startups managed to find favor with Budget 2025 as Finance Minister Nirmala Sitharaman made a series of announcements aimed at the overall growth of the startup ecosystem.
A deep tech fund of funds will also be explored, now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores.
A fresh infusion of 10,000 crore rupees towards the government's fund of funds for startups was perhaps the biggest takeaway from the union budget, simply because it comes at a time when VC funding has slowed and startups are starting to think outside the box to secure capital.
And I think putting development capital like SIDBI, other sources of capital, fund of funds was needed.
This was expected, and there was a lot of expectation that we're going to see this another round, another tranche of 10,000 crores coming in. The fact that it did come is a very, very welcome move.
There were other timely announcements too, like a first of its kind deep tech fund, or the establishment of 5 centers of excellence for skilling, or a center of excellence for AI at a budgetary outlay of 500 crore rupees. But some feel there was scope for a lot more in terms of fiscal allocation on this front.
Now 500 crores is a dip in the pond, but you know, a good start nevertheless.
I was honestly expecting more on the AI front. That's the flavor of the season. But that being said, there's only so much the government can do. I think the private sector should pick up more in terms of capex.
So with more or less equal weightage given to funding, deep tech, AI and compliance, Budget 2025 is widely being regarded as good news for Indian startups.
Sort of pick on that one and predict future. This has been a steady growth and a steady sustained growth.
The new boss at Mint Street has unveiled measures to boost liquidity after the deficit hit a 15-year high. With monetary easing expected to begin this month, will the finance minister announce fiscal measures to bolster growth?
System liquidity is still tight and there is deficit.
The system needs more is liquidity. Liquidity is very low at this point, as you know, negative 2.5 lakh or so.
Artificial intelligence has taken stock markets by storm.
How do we make AI all pervasive?
Powered by AI. AI first.
Artificial intelligence.
Ready for AI. AI is providing some cushion to that.
But as the correction set in, investors are largely hoping for a status quo on taxes to stem the current downtrend. Welcome to India's #1 budget headquarters. Decoding key policies, delivering market-shaping insights, and unlocking the potential of India's growth blueprint. Beaming live from the CNBC TV 18 Motilal Oswal Budget Headquarters.
Well, here's a fallout of the DeepSeek phenomena. The Indian IT Minister Ashwini Vaishnav making the big announcement that the Chinese large language open source model DeepSeek will be brought to Indian servers, will be brought to Indian shores so that it becomes available to Indian users. Sounds simple? Well, not quite. A lot of jargon there. What does it actually mean? Let's help you break this down to understand what really has transpired. with this announcement being coming from Ashwini Vaishnav. Now, let's assume, and I'll explain that with the help of an analogy, the analogy of the humble tea, the common denominator between 2.8 billion Indian and Chinese. Now, let's assume that DeepSeek is this Chinese tea in this cup of tea. Now, what's important is that this is an open source AI model. What that effectively means is that the core code, which is the heart of the model, which is the recipe of the Chinese tea, is publicly available. So what the Indian government is proposing is that we'll use this recipe of the Chinese tea and replicate it here on Indian shores, on Indian servers, and have exactly the same model here present in India for Indian users. But that's not all. Let's bear in mind, we like our masala chai, like most things in life, we like a little tadka in our life. So we'll add a little input to this. We'll add some components. We'll add some sugar. We like some sugar in our tea. We'll definitely add some ginger. We like ginger as well. And let's not forget the mixture.
I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees. I propose to 1. Remove 7 tariff rates. This is over and above the 7 tariff rates removed in 23-24 budget. The revised estimate of the fiscal deficit is 4.8% of the GDP.
ये बजट एक फोर्स मल्टीप्लायर है। ये बजट सेविंग्स को बढ़ाएगा, इन्वेस्टमेंट को बढ़ाएगा, कंजम्पशन को बढ़ाएगा और ग्रोथ को भी तेजी से बढ़ाएगा।
ये भारत सरकार का बजट है कि बिहार सरकार का बजट है? आपने बिहार के अलावा किसी और प्रदेश का नाम सुना वित्त मंत्री जी के पूरे बजट भाषण में?
The infrastructure is not going for the rest of the country. It's only going towards BR because we all know that this year is the BR election. So basically, for essence, and Maharashtra has been ignored, and Tamil Nadu, there's not a single word for Tamil Nadu or for any other southern states.
Tax sweeteners for the middle class, a firm footing on fiscal consolidation and continuity on capex. Finance Minister Nirmala Sitharaman's 8th consecutive budget aims to give a fillip to consumption by putting money in the hands of the middle class. Also, as they say, no news is good news for the market, so status quo being maintained there on capital gains tax, as was expected. The big headline is the change in income tax slabs. The government will forego 1 lakh crore rupees in direct tax revenue this year on account of providing that fillip. Joining us now on the program, Sriram Balasubramaniam, economist and author of the book Dharmanomics. Also with us, Sanjay Nair, chairman of Sovereign Investment Fund and president of ASSOCHAM, and Kunal Behel, the co-founder of Ace Vector. Gentlemen, appreciate you joining us here on the program. Sanjay Nair, to you first. The budget, the impetus on consumption, the continuity on capex and fiscal consolidation. We'll get to Sanjay in just a second, but Sriram, let me come to you. As I was pointing out, clear priority on consumption, continued focus on capex, and of course, sticking with the fiscal consolidation roadmap. Sum up the budget for us.
Thanks, Serena. Thanks for having me. Indeed, I think they've struck a very good balance. The entire tax breaks have been calibrated very well. They've been, in fact, targeted. Very few people are talking about it because, the number of people below 12 lakhs is a large section who actually, are part of the so-called middle class. So it's a huge relief and a boost, I think, for the middle class. Though it's belated, I think it's been calibrated very well. And of course, I think it's very important that the fiscal, deficit is maintained, and then the fiscal plan that we had post-COVID is also retained. Because note that in many countries, and also in India in the past, when such tax breaks are given, that there's a toss on the macroeconomic picture. And in this particular case, I think strong macroeconomic fundamentals and the program or the plan to to retain that picture is also very impressive. And I think it's also important to understand that the real game is probably in the next few months of how much of these savings are actually going to be transferred to consumption. And I think that's where the next part of the budget, the entire deregulation and the entire sort of regulatory upheaval, the commission that's been formed, is very important, because a lot of these savings can either go to resolving some of the debts that individual has, or investment, or they could still stay in the bank account. So it's important for policymakers to sort of transfer this potential consumption because of these savings into actual consumption. And I think a lot of the follow-up policies also seem to enable such transfer of consumption. Professor K.V. Subramanian's assessment, who was earlier in your show, alludes to almost 2.7% of an increase in GDP because of these moves, with a consumption multiplier above 5. Even if we take a lower number, say a consumption multiplier of about 4, we would still get about 2.5% of a direct impact on GDP. And of course, there are a lot of indirect effects. A lot of sectors which will benefit because of this, because of this consumption boom. So I think overall it's a very calibrated, very mature budget, and I feel it addresses a wide range of areas, and it is done in a very proactive manner. I think lastly, the finance minister deserves a lot of credit. Honorable Finance Minister, she's been under a lot of pressure for many years, and this is her 8th consecutive budget. So I think she deserves a lot of credit for really going the mile and trying to create a sort of a consumption boom in this country.
Well, that is right. It is the 8th consecutive budget delivered by Finance Minister Nirmala Sitharaman. Kunal, let me come to you now. There's plenty there as far as startups are concerned and for the startup ecosystem. What's your big takeaway? How does this move the needle?
Yeah, thanks, Shireen. Thanks for having me. Look, we're a startup nation, and I think this was a startup budget in many ways. I feel that amongst other things which we'll talk about, but the biggest needle mover is the replenishment of the 10,000 crore fund of funds. I remember 10 years ago, I was actually in the room when the fund of funds was actually announced. And a lot of people sort of rolled their eyes, saying, I don't think anything was going to come out of this. This is right when this government had first been elected in 2014. And 10 years later, 140 venture capital funds got seeded by this fund of funds. And as a result of this 10,000 crores, it ended up being, using the Honorable Prime Minister's words, proved to be a big force multiplier. And as a result, 91,000 crores got raised by these domestic venture capital firms, which then invested all this money in domestic startups. So imagine the kind of impact this has had on the startup ecosystem. And for the government to realize the impact that has had and making sure that this was not a one and done scheme, they've replenished it. And I actually hope this gets deployed not in 10 years, but in 3 to 5 years, and they replenish it again, because this can be an enduring track for seeding the bedrock of domestic venture capital in India, which still accounts for a minority of investments in the Indian startup ecosystem. And if you want to be not subject to the vacillations of global financial markets and global funding winters that then thereafter impact our startup ecosystem, we need that strong domestic capital bedrock. So I feel that's a big one. The second one, which is also in the realm of capital, but of a different kind of capital, which is the credit guarantee scheme being up from 10 crores to 20 crores. A lot of MSMEs and a lot of startups are in the realm of MSMEs when they start up. They don't have the, sometimes the wherewithal or the state of business to acquire equity capital, and they need to raise debt. And this increase of limit will really help them to get the money they need to set up a manufacturing facility, buy the raw materials, or pay for the inventory that they need to create. So overall, this is a phenomenon.